smell like tuna.
What's that?
I smell like tuna.
Who that? Me?
Yeah, it's like a tuna smell of tuna.
I'm making coffee. I made coffee.
I don't know coffee. I've never had coffee before.
Yeah, me either.
On copper imports into the U.S. Those comments sparked a record one-day jump for copper and hit an all-time high before falling in early trading today. For more on how to play this whipsaw and the effect, I'm joined by Carly Garner, commodity broker and analyst at DeCarly Trading, a futures and options brokerage firm that specializes in commodity options trading. Carly, it's great to have you here. I'm really glad to get your perspective on a day like this when we're coming off of this huge move in copper. So what do you make of it now that we've had, a little time to digest this move and what we could potentially see going forward?
Well, there's obviously a little bit of shock and awe yesterday. I've been doing this for over 20 years, and I can honestly say I tell my clients all the time, this market can get out of control. So always, you're going to participate in it, keep it small, keep your risk in check. But I've never seen anything quite like that. That was really unprecedented. What happens going forward, I think, is going to be uncertain in the short run because obviously the market's digesting a lot of things. But going into the news yesterday and even in the aftermath, despite the volatility and despite everything that we've seen, in the bigger picture, I think copper is probably topping out as opposed to breaking out. I know the chart says we probably broke out, but it took some pretty stunning news for that to occur. I think we ran a lot of stops. I think we spooked a lot of traders. But the reality is, the U.S. dollar, which has been just completely battered down over the last 6 months, or maybe 5 months, but you get the point. The U.S. dollar is most likely going to find some sort of bottom, even if it's just temporary. I think it could be a pretty severe rally in the next handful of months of the U.S. dollar. And the reason I say that is,
All right. Good morning. Just watching Bitcoin moving higher. They're talking about the tariffs on copper, with copper popping yesterday. Talking on Yahoo Finance. All right, Apple. My son bought some Apple right at the low of the day.
So I think we're due for a nice rally of the dollar. And if that's the case, with or without tariffs, copper probably eventually starts to give back a lot of this rally. So I'm bearish even after yesterday's reaction. And I will be 100% honest. Going into yesterday, we were short, and it looked good in the morning, and then suddenly it didn't look so good, later afternoon. But we're adjusting and we're hedging, and I think we can ride it out. We'll see. But I wouldn't be if you're not in copper and you don't want to be short or bearish in any type of way with options. Probably stay out. You're probably too late to the party if you're trying to last.
Yeah, and you never know. Obviously there's headline risks also in either direction. In general, we have seen commodities collectively come off their highs, right? But still at sort of relatively elevated levels versus a year ago. But what kind of signals are commodities as a group sending?
When I look at the commodity sector, take out the livestock, which is at all-time highs and honestly just shocking us as far as normal commodity actions kind of defying the odds. And you take out the metals, all other commodities are at or near multi-year lows. So, we're not talking about it a lot, but the commodity market is actually signaling deflation, not inflation. There's a lot of things that we have to work out.
All right, let's get ready for the opening bell. NVIDIA is on the move this morning. NVIDIA is up.
I believe the U.S. dollar is bottoming. I know that's not a popular
Okay, let's
opinion,
see
but
what
I
the
think,
news is on NVIDIA.
Everybody thinks the same thing, and everyone's positioned for the same thing. Usually the market surprises, so I think that's what we're going to do. The reason I bring that up is if the dollar does bottom and rally, it's bearish for almost all commodities across the board. If I look at some of the correlations, for example, the metals, particularly copper and aluminum, are trading at
Okay, CoreWeave becomes the first cloud platform to provide NVIDIA RTX Pro 6000 GPUs. That was 13 minutes ago. NVIDIA is seeing a rising demand for AI infrastructure with 700 billion in data center investments, 750 billion in data center investments, including a $100 billion commitment to the Stargate project set for deployment in 25 and 26. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 9th, 9:25. We got 5 minutes to go for the opening bell. Futures are higher. We're up 20 handles. Yesterday we faded. We are still anticipating, if you read Gamma, the Gamma update, we're still anticipating that we could stay in this zone. Doesn't mean we will, but we're anticipating that that could be the case. Let's adjust the S&P chart. Okay. So we've just been kind of banging around in this area. Previous daily and high and low. I'm not going to adjust these. It's too hard to see. 90 MA, 2150, 200 day, all stacked on top of each other. So that's bullish. RSI is rising. We're fading a little bit from the high. MACD stochastics are bullish. We had 2 days of selling volume. About average. Wasn't really above average like over here in the third week of June. So overall, we're still watching for the markets to consolidate. Okay, we got there goes Google. Google's on the move. Sun also bought, in addition to AAPX, he also bought Tesla at the low. Tesla. Okay. Oh, you know what else I want to check before we do anything else? Let's look at junk bonds. Junk bonds, an indication of risk appetite, have been fading back to the 21 day. We'd like to see a bounce today. High yield corporate debt as well. And the 10-year, which had been climbing over the last week, the last 6 trading days, we faded a little bit yesterday. So that could help IWM, small caps. Small caps are trending above the 200 day now. We got 3 minutes to go for the opening bell. 3 minutes to go. Bitcoin is higher. Let's take a look at Bitcoin. Bitcoin looking very bullish. Bitcoin chart.
That does it for morning break. Stay tuned for opening bid. Young Interiors Flooring Center is more than just another flooring company. We are local and active in your neighborhood. We understand the importance of community, and each year we commit our support to many local organizations. We also carry many products that are made in the USA. As a locally owned and operated business, our dedication to the community and our excellence in customer service is why we have been successfully flooring the Carolinas since 1989.
Okay, 2 minutes to go, less than 2 minutes to go. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets after 945, 950. And then looking for a trend. Last couple of days, we've had pretty much choppy price action. Let's take a look at Trace. Okay. Currently, just moving sideways. Let's see. Gamma, you can see there's negative gamma overhead. There's a big 30.5 million and negative gamma at 62.75. That'll be resistance along with 62.60. Okay, if we start to come up through this area, we got some positive gamma, dealer positive gamma there. Okay, we're showing my son how Hero works. We got less than a minute to go. And looking at NVIDIA, you can see the purple line was rising all day yesterday. NVIDIA. I gave NVIDIA a boost. Okay, Broadcom's rising. Okay, we're about to open. That's the opening bell. You never heard the opening bell, huh? No, Felicia, you're
High
lying.
tick alert plus 800.
Okay, we got a high tick. Futures are on the move. All right, let me see what I want to take off here. Okay. Netflix on the move. Netflix, big sharp move on Netflix. Okay, Netflix, I'm going to take some off. I have tomorrow's, or rather Friday's calls, I believe. No, I don't. Okay, so I can stick with this for a while. Netflix shooting higher. All the FANG stocks are on the move. Yahoo's about a minute late. Broadcom ripping here. Broadcom. All right. Okay. Okay, I'm going to take a few things off here. Netflix popped up there and then just retreated. Shorts covering. Okay, Broadcom on the move. Broadcom. Okay. NVIDIA on the move. NVIDIA shooting sharply higher. NVIDIA. Okay, looks good. NVIDIA. I'm going to sell half of my NVIDIA NVDX shares. I'm going to sell half of those. All right, that's me selling half of my NVDX position. Okay. Google. All right, NVIDIA's holding on to this gain. It looks a little precarious up here. I might sell a little bit more, actually. Virgin Galactic, that's popping today. What's going on with Virgin Galactic? SPCE. All right, NVIDIA's on the move. Okay, I'll hang on to the other half. Bitcoin. Let's see what Bitcoin is doing. Bitcoin. Okay, Bitcoin's up. Meta's up. Meta, nice sharp move on Meta. Excuse me, Meta. Meta. Got June 25th. Meta, I got June 25th, 725, 735, call vertical. All right, so max profit at 735. Meta. CRISPR looking good. I'm glad I took a position with you guys yesterday. CRISPR looking good. I didn't take a position. My limit didn't get filled. See that? When you use limit orders, sometimes they don't get filled. That's okay. At least you guys are making some money on CRISPR. I had intended to get into it yesterday. Didn't get the kind of dip I was looking for later in the evening. Okay, I was looking for something down there near 54. Didn't quite get there. 53.50, I think it was my limit order. Nice move on CRISPR. Frank has a target. I believe you said 60 to 70, right? Something like that. We'll be there pretty quick. Nice job, Frank. Apple's popping around. Okay. Microsoft, nice move on Microsoft. Took some Microsoft earlier. I have to write that down. Let me see what Microsoft, let me see right here. This has got my positions. That little thing there. Let's see. View trades. Okay, 7-7. Okay, so that was what, Tuesday? Monday? That was Monday. Okay, so Monday I picked up some Microsoft. 505 calls. Okay, so we're a little out of money. Let those go a little bit more. All right, Meta, nice pop. There goes Broadcom. Broadcom looking good. Broadcom on the move. Broadcom still going. Okay, NVIDIA still pushing. Tesla, pretty volatile morning on Tesla. Okay, let's see. Top of the list again, Booking.com, BKNG. Okay. NASDAQ, let me just post this. NASDAQ, top 20.
So I think this is a reminder that most of them are going to straight line, that they'll get some hiccups along the way, but I also think it's a reminder from what's happened this year is
NVIDIA shares rising over 1% at the open and hitting a record high.
The earnings season, part of what is the other team, technology. Even at the end of the day today, you're seeing technology continue to reassert its leadership.
Okay, Meta's still running, so is Amazon. Apple looks like it wants to push some more. Microsoft, strong move off the low. NVIDIA, big pop on NVIDIA right there. Nice move on NVIDIA. Okay, starting to see a little profit taking. NVIDIA, let me just take a little bit more off of NVIDIA. Another 200 shares there. Okay. Looks good. Okay, NVIDIA looking very strong this morning. Okay, so I'll take that NVDX profits and I'll roll them into some calls on the next dip. Looking for dips. First 15 minutes, I'm just taking profits off the table, then reassess the markets. S&P is still moving higher. Futures still higher. Okay, S&P looking good. S&P 500 cash is looking good. Okay. Okay, let's look at Trace and see what the S&P is doing. Okay, we're moving into an area of negative gamma. We'll probably run into 62.75. 62.75 resistance. All right, 62.75.
we just talked about the top of trade markets, largely looking for a lot of this volatility. But as we're just hearing from our panel, stay focused on those high quality names, those high growth names. And the next seven has done incredibly well so far this year.
Okay, looking good. So we're only 10 minutes into the open and 10 minutes into the session. Okay, Palantir just dropped off a little bit. Palantir was higher this morning. Palantir very choppy. Okay.
Nvidia now becomes the first company to hit $4 trillion in market cap.
Who's not missing out is Kevin Warsh and Kevin Hassett been getting their face on President Trump, potential Fed chief. Keep over to you, and I want to dust off my CFA textbooks and maybe yours as well. If we get this mouthpiece from the Trump administration, should we get whether it's Hassett,
Okay, Nvidia right here, first company to hit 4 trillion right here. Okay, looking good. Wow, nice move, Nvidia. Still going, Nvidia. Okay, we got 62.75 is resistance. Keep that in mind. S&P. Okay, Nvidia just trucking higher. Wow. Broadcom looking good. Microsoft still going. Microsoft. Okay. Mhm. There goes Google. Google on the move.
So CoreWeave shares are up this morning in pre-market as well, extending around.
Google going now.
Over the cloud
Meta.
provider said that it would offer NVIDIA's RTX Core 600 Blackwell GPUs at scale.
for a devil advocate, would it be good for investors to get a Trump-friendly person? Fed cut rates, stocks go to
To get one that news from CoreWeave did originally come out around 8:30 a.m. Eastern time this morning.
Actually puts, if it is one of the candidates, it actually puts them in a very difficult position as a shadow president, because then they're going to have to come out and speak against what the Fed is doing at this point in time. And I think the other members of the FOMC and other members of the Fed would not like to have that happen. And there's going to be a little bit of tension there if one of the Kevins does come in and take over. So it's setting it up for maybe a little bit more contentious conversations perhaps at the FOMC going forward.
Okay, so we're continuing a very strong day today, making up for the last couple of days of nothing. Okay, Netflix, that was a quick fizzle. Netflix made it up to 1280 and just kind of dropped back down to 1279, 1269 rather. Okay, Microsoft on the move. Okay, Microsoft looking good too. Let's take a look at the stocks that have a buy order block at the open. Do we have any buy orders here on Microsoft? Data filling in. Yes, we do. Okay, Microsoft note. Buy order blocks at the open. That's one half of the strategy. You want to be long. You want to be looked. And the second part of the strategy is where is supply? I don't see any supply up here because we haven't traded up here. Okay. Okay, aggressive buy order blocks here. There's no sell orders. There's no supply up at this level. There will be supply once people start to take profits. and create some resistance. All right, Netflix pulled back. Okay, Netflix, no follow through. Amazon, still going, Amazon.
Context behind the market cap growth in Nvidia here. So they were founded obviously in '93. They first passed the $2 trillion market cap February of 2024, and they only hit 3 trillion in June. And again, we're already at 4 trillion now in early July.
Okay, Microsoft taking some off. Microsoft Tesla fading a bit. Broadcom. This guy is aggravating. Sounds like a bunch of chickens. Chicken coop. Okay, I gotta turn Yahoo off for a few minutes. Okay. All right, Carl Cantanilla. All right, talking Merck. Merck follow through.
Drugs, which would therefore make it so you should stop worrying about the key truth of patents. Patent expiration 2028. With Rob, I think this is COPD is a really important, another important.
Okay, there goes Amazon still going, Nvidia going, Microsoft going, Broadcom going. Geez, these New York FANG components looking very strong compared to yesterday. Yesterday we had a little bit of a more consolidation. Okay, here's the New York FANG. So if you're trading any of these 10 stocks, looking for a follow through, 9 EMA, climbing, 21-day climbing, 50-day is climbing, 100-day turning, 200-day climbing. Okay, this looks good.
Nobody believes these 200% farmer tariffs survive. Is that fair to say?
It does seem odd, right? And you know, by the way,
Kramer,
really good piece that Nova Nordisk did not find.
I think Kramer's been working on his voice. Have you noticed that he's not like that high-pitched, annoying voice sometimes we hear? He's trying to talk deep voice. Anyway, whatever. New York FANG looks good. Broadcom's still running here. Looking really good. Broadcom's looking good. Let's take a look at Broadcom. Broadcom, one thing I was talking to my son about this morning was what is the 60-minute doing? So he was talking about he thought about going short Nvidia. That would have been a mistake. And I said, look at the 20 EMA, right? On the 60-minute. Is it above the 20 EMA? Is it below the 20 EMA? Is the 20 EMA trending? In this case, we got a bullish trend in Broadcom and Nvidia. If you were trying to short this, you would have been quickly reminded that the trend is up. 20 EMA is rising. Let me just send him the link to the broadcast because he's starting his broadcast.
But that's up 163 year on year. That's the biggest increase in 3 years.
We did a piece last night about how it's not too late that Carvana is.
Okay, let's see.
Carvana only has 1% of the market. The market's the biggest thing.
Antoine.
It's a $50 trillion market. I think that you want to be in Carvana even up here.
Okay, so you got a trend. All right, Broadcom, same thing. Oh, we just looked at Broadcom. Broadcom, Microsoft. Microsoft above the 20 EMA. Okay, Apple has a flat 20 EMA, so it needs to get back above and start trending. Doesn't look anything like the trend we see in Broadcom, right? Broadcom, nice trend. Nvidia, nice trend, 20 EMA. So if you come into the day and you're thinking I'm going to short this or I'm going to take a long, just check your 60-minute first. Okay, it's always a good idea to do that. Occasionally, you're going to have some of these fades like over here in May, and the 20 EMA flattens out and starts to turn, but then quickly gets back above. There are going to be periods like that, but for the most part, if you get a stock that's trending, It's a very good way to take money out of the markets because you know it's trending. Look for the little dips back to the 20 MA. If it starts to turn back up, then you can get long. Okay, Google, same thing. Google, same idea. Okay, that's kind of like Apple needs to get above the 20 MA. It is now. 20 EMA needs to turn up, like over here. That was in June.
So the forecast is minus 0.3% on the prior minus 0.3%. Range of 0% to minus.
Okay, Meta is at the highs. Okay.
Sales month over month, forecast 0.2% on the prior 0.1%. So US stocks are extending gains now with the Nasdaq up 1%.
All right, a lot of these stocks are extended a bit, so keep that in mind. We could come back down to the 20 EMA or pull back into the range. I'm going to take a little bit more Microsoft off. Microsoft probably keeps going. I'm just reducing my exposure again. Okay, for the last couple of days, we've been looking for sideways price action. If you've been reading Gamma's updates. Okay, Netflix, I'm looking for Netflix to pop back up so I have a limit order to sell up at 220. We dropped down.
It's me again. It's Donald J. Frickin' Trump, okay? And if you're sick and tired of hearing my voice in this ad, which is pretty sad, all you've got to do is go real time at financialjuice.com/purchase and save 67% on a subscription. Beautiful, big, huge discount. So what are you waiting for? Come on, do it.
Hello. These commercials using Trump's voice is so funny. All right, Google's higher. Okay, Google on the move here. Google looking good. Let's go to the 5 minute squeeze. Google on the move. Google looking good. Okay, so we got a lot of nice pops on the New York Fangs. Only Tesla and Snowflake are dragging. So we got 8 out of 10 of the New York Fang components are moving higher. That's a good signal. S&P, we know that 62.75 is resistance on the cash. 62.75 is resistance on the cash. The cash index, S&P 500, 62.75. You know what? I forgot to update. We're getting very close to 62.75. Now, if we get above 62.75, there could be some fireworks. But looking at this right here, you can see that we're coming up against a very large $33 million in negative gamma. Okay, let's look at delta pressure. So once we get above that 62.75, we could see more positive gamma levels overhead, 6,300. All right, let's look at the indices real quick. Okay, so here we are. 6270, 6,300. Okay, above 6,300. I'm looking for more blue, indicating puts that'll give us fuel to move above 6,300. There's not a whole lot of puts below here. Okay, but up to 6,300, there's a big node along with calls. So we're looking for resistance at 62.75 and 6,300. Okay, let me just copy this data. Got to get this copy. Okay, copy that. Okay, SPX. Let me just input the current data. No, that's not. Where did my, oh, you know why? I'm on Super Trend. Let me see if I can add the spot gamma. There we go. Okay, now we've got today's data, today's levels. Okay, so we're above many of these. 6280 combo 3, that's taking the SPY and the S&P 500 cash. gamma, and combining it, that gives you a resistance level at 6280 and then 6300, 6285. Okay, Microsoft's still going. Okay, looking for Netflix and Tesla to get off the low, and then we could be good here. Snowflake. All right, so we got 2 out of 10 that are dragging their feet, Tesla and Snowflake. The rest of them, Netflix is trying to bounce. NVIDIA looks like a little profit taking at the high.
It's been 5 minutes time now. At the top of the hour, we see the release of the US wholesale inventories month-over-month May final read. Forecast minus 0.3% on the prior minus 0.3%, and the wholesale sales forecast 0.2%. Seeing that Germany's Chancellor Merz and France's
Palantir with the bounce. Palantir dip buyers came in.
First. Again, top of the hour, get the wholesale sales as well. Month over month forecast 0.2% on
Costco's up. Costco big up, Frano. Nice one, Frano. Frano was looking at not copper. Frano was looking at Costco. What was it? Monday or Tuesday? Monday or Tuesday, or was it Friday? I forget. I think it was Friday. We're looking at this, or Thursday rather. Thursday. What? Why is this up? I don't understand. I don't know why this is at this level. Let's see if I can get out here. Huh. I don't have a print here, so what's going on with Costco? I have my Thinkorswim must have a bad print because it's giving me, I'm up big, $250, $240 per contract. Yeah, that's got to be wrong. It's got to be wrong. You know what it was? Somebody wound up buying. So somebody probably had a bad print. Somebody probably bought at the market and bought at a higher level because Costco's actually down a little bit.
Again, please don't buy NVIDIA because you want to say, yes, I bought it over. Because that's like going to the watch party. And watch parties never succeed. Well, watch party never.
All right, so up down volume, we got 2 to 1, 2.7 to 1 up volume on the Qs, 3 to 1 up volume on the Dow Industrials, almost 4 to 1 on IWM, 1.6 up volume on the SPY, 2.64 up volume on the NASDAQ Composite, and 1.4 up volume on NYSE. Okay, so 62.75, 62.80, that's going to be first resistance levels on the cash. A lot of these pops, I'm going to take some profits off because I don't think this is going to stay up here. Let's see, Broadcom. Let me sell Broadcom here. It's starting to roll over. Okay, I got out of Broadcom just in time. It looks like it's going to roll over.
1 minute remaining now.
Meta's at the highs. Let me do some Meta. Meta. Okay, Meta's up. Let me take some off of Meta. Meta, I have July 25th. That's okay. Let me go ahead and take this off. Okay, I was half a position because I sold some yesterday. Meta, taking a little profits off of Meta. Okay. If I get a fill. Meta. Limit Meta.
10 seconds.
Okay, Meta out. I'm out of Meta now. Okay, Meta. Let me take a look at Meta.
Minus 0.3% as expected. Wholesale trade sales month of month.
Meta, nice rally there. I'll get another entry. That was a nice push off of the 9 EMA. So maybe I'll do something else on Meta. Meta, not right now. We got a nice pop. Okay, first 15, 20 minutes, I'm taking profits off the table. Extending that out to 10 o'clock, 30 minutes into the trading day, we're still pushing. See, okay, here goes Netflix. Netflix ticking up. Netflix popping up after some profit taking. So I got a position in Netflix. I'd like to exit. I got some put credit spreads on Meta on Netflix as well.
Truth says our Fed rate is at least 3 points too high. Quote unquote, too late is costing the US $360 billion a point per year in refinancing costs. No inflation, companies.
Google's still going. Google.
This country in the world. Lower the rate.
Yeah, you know, yesterday, I forget who it was that was talking about it. Oh, it was Rick Santelli. No, it wasn't. But the actual rate, if you remove shelter, the inflation rate is actually at 1.9%. The Fed's like it was Tom Lee. It was Tom Lee talking about it. He said if you remove shelter like Europe does, the inflation rate is actually 1.9%. So the Fed is way behind the curve. Like 200 basis points behind the curve, according to Tom Lee. So Tom Lee's pretty brilliant. So I wouldn't argue with him. Meanwhile, the markets are at all-time highs, within all-time highs, at all-time highs. So who's to argue here? Just go with the price action. Price action is what we follow. I don't have an opinion on the markets. 62.84 was the resistance from last week. It remains resistance. That's all-time high. Okay, so if you follow price action and you don't listen to what some of these talking heads think the markets are going to do or should do or might do or could do, and you just watch price action, follow the money, it's going to help you out in your trading career. What is junk bonds doing? Junk bonds are giving us a bullish signal. Why is it bullish, Fanny? Because it's moving higher. Junk bonds are a very risky asset. So anyone that would trade junk bonds would be risk averse. They always been, always will be. You can see over here in April, February, March, this rolled over. It reversed in April. That was one of 25 signals that gave us a reason to get long. The other signal, as you know, was the S&P equal weight index with the number of stocks above the 20-day listed below. Okay, the S&P equal weight index, removing the weight of these stocks that were slow yesterday, removing the weight of those stocks, is moving higher. So money flow, it says bullish. Number of stocks above the 20-day has drifted lower. That's actually giving us a little bit more energy for an upside move. If we look at advanced decline percent, looking at advanced decline, that's clearly moving up for mid caps, small caps, and for the NASDAQ. S&P is trying to turn. Okay, so this is all good. And we got up volume leading. So this is all looking good for the markets. So you want to buy dips. I took some profits off on some of these that are up quite a bit. Okay, Microsoft, I took some more off of Microsoft. That's still going. So the next dip, probably going to be a very strong move on many of these. So I will take some more off. Okay. Let me sell some of this GGLL. I've been sitting on for ages. GGLL, the Google 2x shares. I've been sitting on this from over here at around 29. Let me just see what my entries were. First in, first out. I did add on the way down. I told you why. With everything that Google does,
The thing that bailed us out of macro uncertainty multiple times over the last
and
almost 3 years.
and $90 billion in revenue, I wouldn't take Google off of your shopping list.
Software that could have just been in the shadows for a little while.
Okay.
There's a suspicion that the subscription model is not what it once was. It's based on head count. It's based on basically number of users.
Where is
And I think that probably is going to be an overhang. I'm not sure how much.
Since the Treasury website, the US imposes additional Iran-related sanctions.
It's not just hardware. It's NVIDIA and Broadcom against everything else in terms of the last couple of years. How much?
okay? Google has a discount to fair value of about 37% now. Google. All right. So I was buying over here and continued to add on the way down. Now we're finally making money. Google. I'll just leave this alone. Make it a longer term trade because it's exactly that. I'll leave that alone. I do have some short term options though I should take off because those popped quite a bit. Google, let's see. Actually, those are August 15th. I could leave those on a little bit longer. Google, bouncing off the 21 day, 21, the 9 EMA, 21 day, 50 day are all up and to the right. Google, as you know, has YouTube search ads, Android and Pixel smartphones, Google web browser, Google Workspace, Gmail, Google Cloud. All of these things make money for them. I don't know how Gmail does, but Google Cloud Incorporated. You got Google DeepMind, which is gaining traction. They're shipping countless products like the Gemini Live agents. Agentic AI is big on these big tech companies. Okay, so we got NVIDIA rolling over now. I did take NVIDIA off, right? Let me just pay attention here for a sec. NVIDIA, took NVDX. Yes, I'm out of NVDX and NVIDIA calls. Okay, good. Broadcom, okay, Google, these calls should continue. They have the Ironwood 7th generation GPU chip. I was thinking about that. These big companies could just buy one of these ASML $400 million chip making machines, put it in a clean room. Now, I know I'm making it very simplistic, but ASML sells these $400 million machines that make chips. And
The watches include Pixel, Samsung, Oppo.
I imagine that's how a lot of these big companies are able to do what they're doing. Okay. ASML, $400 million machine. I can't even imagine how and who would think to put something, or what team of people would think to put something like this together. You know, this is mind boggling. Anyway, S&P 500 fading from the highs. Okay, so we've got a pivot level overhead. We're coming back to super trend. Okay, so all of Google is still going. So is Amazon. So some of these are continuing. Google. Google, I'm going to take a little bit off of my calls here. Google. About that. Historically, though, exemption processes have been time-consuming, expensive, and hard to navigate. So we'll have to see where that goes. Yeah, of course, lower. Google's still going. With the Nasdaq hitting a record high in NVIDIA at $4 trillion. Let's bring in Steve Sosnick, Interactive Brokers Chief Strategist. Steve, what do you make of this, especially against the backdrop of some of the? Okay, Microsoft turning back. Looks like a little profit taking on Microsoft. I took that off, right? Microsoft. Microsoft. Yes, I took Microsoft off. I took Meta off. Meta is still moving. Microsoft is consolidating. Top 10 on the NASDAQ 100, booking.com, Meta's number 2, Microsoft number 3, Vertex, VRTX, Vertex Pharma. Vertex Pharma is number 4, Clack, KLAC is number 5, AppLovin, APP, AppLovin is number 6, MongoDB number 7, LIN, LIN is number 8. Let me see what this is doing. LIN. Okay, bouncing off of the low. Lind. Is that the chocolate company? LINDE? LIN.
You know, we're referring to in terms of the psychology and the fact that, you know, now that we look back several months later, we can say, oh, well, this
LIN.
didn't sell in April, you would have, you know, largely been okay.
So Trump on Truth Social just reiterating countries aligning themselves with anti-American.
No, it's an engineering company. Chemicals, engineering, food and beverage,
Says there will be no exceptions to this policy.
industrial gases and engineering, food and beverage, electronics, healthcare, manufacturing. Well, they're into anything, everything, and anything. LINDE. That's number 8 on the NASDAQ 100. ARM Holdings, number 9. Number 9. Okay, ARM Holdings. Let's take a look at ARM. The chips look good. So if you're still in SOXL or SMH, these are good trades. SMH, SOXL, trending.
This is the psychology that I think is going through a lot of active traders' heads.
What do you think breaks then that kind of reaction function? Is it a rate change? Is it an earnings trajectory change? Both?
I think an earnings trajectory change is very possible. Talk about like no catalyst.
ASST.
Starting next week.
Okay, fading. ASST. There goes Netflix. Netflix finally on the move. Netflix going.
Where basically companies could say, guidance, I don't know, guidance. What am I going to do with guidance? And the market was like, okay, yeah, we're fine with that. Think of how insane that is, considering what markets have been doing.
There goes Netflix. Okay, Netflix.
Like, I don't know that these companies are going to get a pass this time around.
In terms of pulling guidance or lower or whatever.
They have to deliver. They have to say something. And
Netflix on the move. Google's still going. Apple's up. Apple, Antoine bought some APX. Okay, Apple off the low. Bounce. Okay, we're looking for a bounce at the 9 EMA. If you recall yesterday's conversations, we got the trend break. Apple. Okay, we got the trend break on Apple. Okay. Okay, so the daily 20-50 days trying to cross up.
That's a large part of it. Is basically we've been increasingly top heavy in our performance. We were talking about Nvidia. Sure. It's very much that AI driven trade coming in, and I think to some extent that that is what's moving things higher.
Apple.
But it is important to bear in mind for those who might actually be inclined to hedge. These momentum stocks are leading on the way up, also led on the way down. And so for those
Netflix looking good. Netflix.
Data trade, you're probably better off doing it with NDX than you are with SPX because these stocks, as big as they are in SPX, they're even bigger in NDX, and so you get the extra beta using that.
Yeah, momentum works in both directions.
Exactly.
Good reminder there, Steve. Thank you.
Thanks, Leslie.
Take a look at our roadmap for the rest of the
Okay,
hour.
Netflix.
We're going to talk to Evan Spiegel
Netflix
about
bouncing at the 21 day. Okay, let's look at some of these stocks that are on the top of the NASDAQ 100. Booking, Meta, Microsoft. Microsoft at new all-time highs. Microsoft, VRTX, Vertex Pharmaceuticals. Okay, that was Netflix most likely. Yep. All right. Vertex looking pretty good. TTM squeeze, breakout looking good. Vertex looking very strong. Vertex Pharmaceuticals. Let's see. VKTX. Somebody, you guys were mentioning VKTX last night, right? Buy the dip. You're gonna buy the dip last night or something. Okay, RX. That's one that Tony mentioned. That's higher again this morning. Okay, Tony looked at RX yesterday. That's higher. Meta, Google, Amazon still stretching their legs, pushing higher. SPY, trending. Always check your 60-minute. If you're thinking about going long or short, always check your 60-minute 20 EMA. If the stock is trending, you'll see it. The 20 EMA will be a nice smooth line. If it's choppy, it's a little bit more risky, like Apple. Okay, Apple's a little bit more choppy, but it's making higher highs and higher lows. It did break down a downtrend, so you know that. Okay, let's see some of these other names that are on here. AppLovin, this has been on the list on and off for the last few days. Okay, so AppLovin's turning the corner. This is looking really good. AppLovin. If it can get back above the 50-day, I'd like it better. AppLovin. Google. Google's still going. Nice bullish move today for Google. Amazon's starting to show some profit taking. Maybe I'll take some Amazon off.
Unveiling its latest Galaxy smartphone this hour, loaded with AI features as Apple struggles to gain traction in its own AI efforts. Steve Kovac joins us with that story. And what's new, Steve?
Hey there, Mike. Yeah, I'm here in Brooklyn, New York. This is where Samsung is unveiling those two new phones you talked about, the Galaxy Flip and Fold 7, the 7th generation of those phones. Cool devices, they're cool, they're fun to talk about, not big sellers, but what we're really here to talk about is the artificial intelligence features in here and how Samsung is approaching it versus other competitors here. This is Apple's biggest competitor, by the way. They are partnering here, though, with Google and using Gemini artificial intelligence, the chatbot, and also what they're calling multimodal, meaning you can use the phone's camera to send live video feeds to the Gemini assistant. It can talk to you about what you're doing. There's even a new...
Remember last week we talked about the S&P 500 and the potential for a pause on the weekly time frame. We made 2 weeks up. Talked about this in the weekend video too. Still looks like a pause, but we are up near the highs of the session. Of the week and also near all-time highs. So still watching this, not expecting that the markets are just going to rip higher. This seems like resistance right now. So I'd be taking some profits off, look for little dips now. Google. Okay, Google. July calls. Let me just take more of this off. Google. Okay, I'm going to take a little bit more Google calls off. I have two tranches. I have July, next week, July, and I have August calls. So I'm going to take the Julys off. July.
You might remember over a decade ago when Samsung kind of had to limelight because it's putting out phones with big screens. Well, as soon as Apple did that, it was off to the races for Apple. And so we'll see if they can do the same thing with artificial intelligence next year, guys.
Steve,
Google.
Sort of purpose-built AI device.
Mexico's President Sheinbaum says Mexico officials will still border and trade in DC on Friday.
Oh, actually, Google is their Friday. Their Friday.
It becomes a selling point. Go back to the Apple example too. I mean, this was supposed to be a selling point for the iPhone 16. They were marketing it. There was a lot of optimism that would drive sales, which never materialized. And it's still a little too early to tell on the Android side and the Samsung side if that's having a significant drive in sales, or if it's just kind of people need a new phone and want to upgrade. But at the same time, these are the kind of features people are asking for. They want AI on their phones. They want those smarter assistants that can do more. And on the Android side, you're just seeing them make more advancements than what we've seen on the iOS and Apple side so far. But that doesn't
190,
mean it won't change.
195.
Steve, we could talk a lot more Apple for sure.
Okay, Netflix pushing, trying to get out of Netflix a little bit higher. Okay, so Netflix is surging again. Okay, Netflix trending. Okay, we're bouncing off the 21 day. We could see multiple days up on Netflix. That's what I'm looking forward to.
Crude oil inventories forecast is a draw of 1.6 million on the prior build of 3.845 million. The range sees a build of 1.6 million to a draw of 3.956 million expected. Gasoline inventories forecast a draw of
Did your
1
mother
million
just come in
on the
here?
prior build of 4.188
I'm like seeing
million.
things out of the corner of my eye.
Inventories forecast was a draw of 1.5 million on the prior draw of 1.71 million.
What's up,
Crude
Goose?
shipping inventories
What you want,
filed was a
baby?
draw of 1.493 million.
You want some of these?
So keep in mind, last night we did see the private release of the US API crude oil stock change showed an unexpected build of 7.1 million when the draw was expected at 2.9
Okay, we
million.
continue to fade. S&P continue to fade a little bit. Wow, what a day. What a day. Okay, so. Okay, Robinhood continuation. Okay, all right, Robinhood is just consolidating for the past 7 trading days. It just sat here and hung out right below 100. Okay, so looking for Robinhood to continue. There was some issue with Europe, some sort of nonsense, which is weird. I didn't know that they were in Europe. I thought they were only in the UK. I thought they just opened branches or something, access into the UK, a few weeks back, if I'm not mistaken. Okay, Amazon coming back in a little bit. Amazon 225. Amazon. Okay, Amazon. Amazon's trying to break above this 225. If you can manage to do that, it'll fill out the right side of the pattern. So you can see it's sitting right above the 90 EMA. Yesterday we tested the 90 EMA. Today we're bouncing. So that's a good indication that we might see a follow through tomorrow. So with any stock that I'm looking at, I'm always looking for this pattern. Okay, I'm looking for the cup. All right, I'm looking for this bullish side. Okay, so anything on the right side is what I start looking at. Okay, once it starts to make these low pivots and we start to see higher lows, that's where I start to key into buying the dips. Okay, so I'm always wanting to buy the dips in here. Okay, all of these dips keep getting bought, whether it's a 21 or 90 EMA. At some point, most stocks, once they start to trend, they'll only come back to the 90 EMA. Okay, so you got phase 4 on the left, you got accumulation, phase 1 at the bottom. Phase 2 starts, that's the markup. And during phase 2, as the stock gains more and more strength, it'll no longer come back to the 21 day. It'll come back to the 90 EMA or the 80 EMA, whatever you use, 10 EMA. It'll come back to the shorter time frame and it'll keep trending. So every time it pulls back is a chance for you to add to your position, put a stop underneath the 21 day. In the case today, we'd put a stop under today's low and start watching this as it rises. But look for the right side of the pattern. That's always going to keep you on the right side of the trade. You can also look at the 60-minute, does the same thing. 60-minute, above the 20 EMA, you want to be long. Below the 20 EMA, you want to be cautious or taking a stop. Amazon's trending. Okay. Been trending for the last couple of months, so this is looking good. There goes Palantir back to the high. Palantir back to highs. Palantir is another one. Okay, so look at your 60-minute. What does it tell you? It tells you to be long as we move back above the 20 EMA. 20 EMA's crossed up through the 20 EMA daily. 60-minute 20 EMA crossed up through the 20 EMA daily. So that looks good. So we'll look at the daily, and we can see that nice trend continues. 921 day. We almost came down to the 50-day twice. Looking for the trend to improve. A lot of people hate this stock, but it does make a lot of money. Okay, it's adding customers. If you've read the article that I wrote back in May, you know why I'm long Palantir, buying dips.
5 minutes time now. At the bottom of the hour, we get the release of the weekly EIA inventories numbers. Crude oil inventories forecast is a draw of 1.6 million on the prior build of 3.845 million. The range sees a build of 1.6 million to a draw of 3.956 million expected. Gasoline inventories forecast a draw of 1 million on the prior build of 4.188 million. Distillate inventories, the forecast is a draw of 1.5 million on the prior draw of 1.71 million. And crude Cushing inventories, the prior was a draw of 1.493 million. Keep in mind last night in the private API stock change numbers, crude saw an unexpected storage build of 7.3 million. Expected draw of 2.8 million.
Keep in mind also, with all of the partnerships that Palantir is forming, it also formed a partnership with Qualcomm. Okay, Palantir and Qualcomm working together to extend AI and ontology capabilities to the edge enhancing, data-driven decision making for customers and industrial Internet of Things. So Palantir and Qualcomm partnering up as well.
US industry and economy.
Amazon still looking good. Amazon with its agentic AI, Alexa, it's a dominant leader in the cloud market. We want to always pay attention to any pullbacks on Amazon for opportunities. Okay, yesterday we had an opportunity. I always look at the pullbacks from the perspective of what does it do the following day? Okay, so Tesla, I think Tesla we were talking about an inside day. No, it wasn't Tesla. What was it? We were talking about the next day. Okay, Tesla dropping off here. Tesla dropping off. So not everything cooperating. Tesla dropping. Shorts are all over Tesla, looks like. Okay, Tesla pulling back. I don't know what Elon's problem is. You know, I like the guy and I don't like the guy. I like the guy because he's really super smart, but you know, he's in so many different, got his hands in so many pots, you know. Now he wants to get into politics. You can't blame the management team over at Tesla for trying to limit his activities or limit his effect on the company. I guess when you get that rich, you know, you can afford to just get involved, you know, have your say in things. I don't know, it's not helping the stock, and S&P continues to move lower. So we were talking about this level overhead as being resistance, and that's exactly what we're seeing. Okay, so we didn't get all the way up there. You can see the hedging flows have peaked. Okay, watch the peak, and the hedging flows at 1010. 1010 wins, good station in New York City. Okay, so that's a formidable level of resistance, and this up here just got added, I believe. Okay, so let's see. 60 minutes ago we had 608,000 in gamma. 10 minutes ago it had made it up to 9.3 million. So it's positive gamma. That's the dealers are positive. So the markets are short. They're positive. They have positive gamma. So the markets are short. They're long right here. Okay, so these longs, the dealer longs got added here. That means people are short, okay? People are short from this level. Dealers are short. you had people that were long, 89 million. So that's dropped off. You can see, actually, no, it's about the same, 37 million. Okay. So this was added. Okay, we went from 1.6 million up to 9.9 million at 62.85. So people are short right there. Okay, Netflix still trying to push higher. Tesla. Tesla's still a doji, so I'm not that concerned about it, but it is bothersome that we can't make any trend.
A draw of 2.658 million. A draw of 2.658 million, lower than the expected draw of 1 million. Distillate inventories, a draw of 0.825 million.
I don't think anybody's really worried about distillates. But look at the difference between the candles, okay? So the candles are telling you exactly what's going on. Very little trading, volume kind of tapering off, very tight range. So it doesn't look like anyone's willing to bet in one direction or another in a big way, even though Tesla is dropping off here. Looks pretty terrible on a 60-minute Tesla. Rolled over, the 20 EMA is dropping down and to the right. Okay, S&P is starting to do the same.
Yeah, we work with lots of AI partners, of course, especially on the model side. But we're really focused on what is that user interface going to be, and what are the areas if we're doing our own model development that we can really differentiate.
Just a quick final question on the regulation. The new bill, Trump's new bill, state by state regulation of AI. What do you think that's going to mean for your business and for other players in the AI space?
We already deal with a very, very complicated set of state-by-state regulation, both in the U.S., but also a very complex global regulatory framework for technology. So I think our team's just going to continue to focus on doing the best we can to support our community, doing the right thing in terms of protecting.
All right, we're seeing profit taking, so that's why I like to take profits off into strength. Let's see, 18 July.
Thanks so much for joining us here. Mike, back over to you.
Julia, thank you. Time now for a CNBC News update. Silvana Henao has that for us. Hi, Silvana.
Hey, Mike, good morning to you. Ukrainian officials say Russia attacked the country with a record 728 drones overnight. The barrage came just hours after President Trump said he was disappointed with Russian President Vladimir Putin and pledged to resume U.S. weapon shipments to Kyiv. Ukrainian Air Force officials say the military downed almost.
Okay, Boyd Gaming, BYD, the gaming stocks. Boyd.
Ukraine's President Volodymyr Zelensky met with Pope Leo this morning. The Vatican says the Pope once again offered to host Russian-Ukraine peace talks. Ukrainian officials say Zelensky will meet today with U.S. envoy Keith Kellogg in Rome ahead of the Ukraine Reconstruction Conference, which is being.
Okay, let's look at, this is Boyd Gaming, Win Resorts.
The union representing thousands of city workers,
Win,
trash collectors,
Las Vegas Sands, gapped up yesterday, gapping up again today. Las Vegas Sands, when these trends continue, the weekly casinos. Okay, what GDEN. GDEN. Let's see what Caesars looks like. Caesars turning the corner. Can Caesars get back up to 117? That'd be awesome. Caesars. Okay, the daily's kind of just grinding along. Caesars, MGM. Okay, these casinos look good. Blackjack. No, what is the symbol? I keep forgetting this one because I don't trade casinos that often. Casinos, BJK. All right. Blackjack. Okay, the gaming ETF, BJK. Let's see who's up the most. Let's rank these by percentages. Performance. Okay, casinos, Century, CNTY. Okay, that looks good. So those look good. Okay, Boyd Gaming. I'm up pretty big on this one. Okay, so we took this last week, and this continues higher. Now, we took this when we saw Wynn Resorts flying, but you know I don't like to chase. You know I don't like to chase. So this is actually starting to give a signal for maybe a pullback to the 9 EMA. Doesn't mean it will, but I'd rather do that than chase it because I looked at this last week. Okay, so that must have been what, Tuesday, Wednesday, Thursday, Monday, Tuesday. Yes, Tuesday. This gapped up. A lot of people caught this 98.50, broke through 98.50. Wynn Resorts got, I believe it was earnings, right? And you got Las Vegas Sands moved the same. I wanted to buy Las Vegas Sands, but it also took off, so I couldn't take that. But what did happen is I had an entry on Boyd. So whenever the rest of these moved higher on Tuesday, Boyd was sitting here on top of the 9 EMA. You know I love buying dips to the 9 EMA. Everything else is working. So the more stocks you have working in favor of your thesis, in this example, casinos. If all the casinos are moving higher, you can expect, them to move together. That's a much stronger signal. So the fact that it was sitting on top of a bullish 9 EMA pointing up and to the right was a good time to take it Monday, Tuesday last week. So Tuesday it did start to move, but it was closer to the 9 EMA. RSI wasn't overbought yet, and volume wasn't through the roof like Wynn was. Okay, so Wynn I would have been chasing, long story short. So I bought Boyd instead, and I'm pretty happy with that position.
Your name gets floated out there. You have some odds on Polymarket of being the next Fed chair. Can you be a Fed chair and a Treasury Secretary at the same time?
Well, I think it hasn't been done since 1930 something, and I'm very happy in my job here. I think we have lots of good candidates for Fed chair. We will start working on that in the fall. We've been busy. The president's been doing peace deals, trade deals, tax deals, and we are landing the plane on all of those. So we're going to have more bandwidth after Labor Day.
That was not a no. I just want to point out on the double job. Very interesting.
If he asked you one day in the future, not immediately, would you rather that job to the one you've got currently?
No, I'm not going to talk about that. Don't comment about that.
14% on Polymarket.
Yeah.
Do you want to be Fed chair?
Okay. All these stocks have pulled back rather dramatically from the high. Okay, Tesla's starting to bounce. Tesla getting a lot of bears to bite. They're starting to reverse this now. It looks like. Okay, so then now the New York FANG looks completely different. Watch the casinos though. Casinos are doing well. New York FANG. Okay, the New York FANG looked much more bullish. Now it's seeing some sellers up here at the high. S&P cash continues to move back.
I think these are all incredible candidates. Both Kevin's, Scott were to take the job, and others that have been discussed were to take the job. We have a potpourri of excellent candidates to do this, and probably a few dark horses on the side as well. So I just don't think it's as market moving because I don't think you're getting extremes. You're getting kind of a group of people who all tend to have the same set of thoughts when it comes to the Federal Reserve and monetary policy.
Now we have a fresh post from the president today saying that rates are 3 points too high. Are you getting the feeling that we're increasingly getting more restrictive?
I mean, that's been my view for a while. We argued that the balance sheet was very large in 2022 and 2023, and that was offsetting the effects of the rate rises, and actually policy was quite accommodative, even as we were moving to 4 or 5% rates. Now the balance sheet is back to a size which is about where it was as a percentage of the size of the economy pre-COVID. So our arguments on the balance sheet being accommodative have kind of dwindled off, and now the rate side looks restricted. So I would say we're actually sitting in one of the more restrictive places in monetary policy we've been in. Even in
All right, so S&P looks like it wants to bounce now. Let's keep an eye on hedging flows. This will tell us whether or not it's a good time to buy the dip. Hedging flows need to turn back up. Oops. Mike Santoli. I like this guy. Mike Santoli reminds me of a good buddy of mine that went to Notre Dame. Anybody go to Notre Dame in the room? He's an architect as well. He went to Notre Dame. He tried to hook me up with one of his sister-in-law back in the day. That was awful. Blind dates. I don't know why people think blind dates are a good idea. Let's see. What do I want to do here? Watch the hedging flows here. We're starting to bounce. Looks like it could be a bear flag.
Perceived by many in the market, so it didn't need to happen. As you know, Michelle Bowman dissented against that, but another candidate who is in the mix, Chris Waller, went along with it. And I wasn't aware of Kevin Hassett's statement, but I don't think any of this is going to get in the way. The candidate needs to have a cogent reason, and I think can easily have a cogent reason as to why rates should be coming down materially. And I think you can actually look to the balance sheet very much as a way to push the lower rate. We've even seen Kevin Warsh do that earlier this week in an interview on Monday, I believe, making that claim. And I thought that was some new fodder.
Okay, looking for a B pivot.
Yeah, Warsh's other point was that tariffs are not inflationary, which now people are taking a look at used cars and trying to see if we're getting more additional input into pricing. I'm assuming you do not think that's the case.
I mean, I think the Secretary of the Treasury makes a very strong point that these are one-off price increases. They're not inflation. And Powell is right to say as well that you want to make sure that they don't metastasize into something, but left on their own, I think the tariffs are really more about price level increases and one-offs, and monetary policy right now looks calibrated to be quite, I think, consistent with very anchored inflation expectations. 2-year break-evens are really unchanged since the beginning of the year, and really the beginning of the period where we learned about the election in November. So, you know, the long-term break-evens have stayed steady. The short-term break-evens have stayed steady. The survey data has been complicated just by the politicization that's been in the survey data. But I really don't see an inflation expectation problem. And I think there is and has been a pretty cogent argument for getting back to something neutral. Whether that's 100, 200 basis points from here is debatable. I think 3 would be a lot, but, you know, this president likes to push the envelope a little bit, so I can understand where he's coming from.
As you assess the leading candidates at this juncture, and you describe them all as excellent, what do you think is the biggest qualification?
Okay, so daily hedging flows continue to move lower. So expect these bear flags to break down. S&P cash continues to move lower. Okay, Google's starting to bounce. Google with a pivot, looks like a higher low on Google. Okay, we had quite a few stocks advancing. Now we are at about 60% declining.
This candidate needs to convince 11 voters and 18 other FOMC members that there's a storyline that is consistent with rates coming lower. And that is what the president is looking for. And they have to believe it, and they have to have a good story for it. I think there is one.
Okay, so presently we've lost a little bit of bullish tailwind. We're down to 200 stocks advancing on the S&P 500. We have 46 stocks advancing on the Qs. 46 advancing. We have 612 advancing on the IWM. So let's take a look at IWM. IWM fading as well. And the Qs. Qs fading. All right, market's fading at the moment. So we took profits off into strength. Now we can get back in at a lower price. Boyd Gaming. Okay, all the gaming stocks look good for the most part. Boyd Gaming. Very bullish trade. It looks good, Boyd. Okay, let's look at some of the majors. SPMO. Still consolidating. SPXL. Still consolidating. SPXL, SPMO. SPHD. SPHD. Kind of been flat since April. These are all dividend stocks that pay dividends consistently over the last 20-25 years are in the SPHD, the Invesco S&P 500 high dividend low volatility ETF. You can see the low volatility hasn't moved the same as the rest of these, like SPMO. SPHD does pay a nice dividend. I have the dividends rolled over back into buying more shares, so it's reinvested. Right now we're just watching SPY and the S&P. Do we get a bounce? We'll see the dealer hedging flows turning up. If this is a valid bounce that you can buy. Okay, if you're short, okay, I'm not sure what happened there. Let me just check, make sure I'm still broadcasting. Okay, I'm not sure what happened there. Okay. All right. So, stream dropped out there for a second. Netflix, looking for that bounce. Broadcom still fading. Okay, took a lot of profits off the table into strength. Boyd Gaming. BYD. Boyd Gaming. I have next week's calls, so I'm going to take a little bit off here. I'm taking a little bit off. It's starting to lose the moving averages. Boyd, I have next week's calls. So what I'll do is this trend continues. So I get a little pullback. I'll go out to say August. When do they report anyway? Boyd Gaming. Okay, so hope you picked up on the concept that if you've got the entire group moving together, just look through the individual names like Boyd Gaming, Las Vegas Sands, Wynn Resorts, Golden Entertainment, Penn Gaming, Boyd Gaming, any of the, if they're all moving together, Caesar, I might buy some Caesars, by the way, Caesars, MGM, if they're all moving together, it stands to reason that if you get one that's closer to the 90 MA, take that one. That was the case with Boyd Gaming. So let's see. They doesn't say when they have earnings. Boyd Gaming. BOYD Gaming. It's quiet. What happened here? It's quiet. All right. So we continue to move lower. Watch Trace. You can see the hedging flows continue to move lower. Hedging flows continue lower. Okay, New York banks have all pulled back except Netflix is trying to hold on to gains. Tesla resuming, testing these little wicks down below. See if this bounces or if it continues lower. Tesla. Google. Okay, pretty much everything is done. Something Apple's pulling back now. Apple. MicroStrategy. Okay, what's MicroStrategy doing? MicroStrategy, Boyd Gaming, MicroStrategy. Turning the corner, still consolidating for the last week. MicroStrategy. What's iBit doing? iBit consolidating. Palantir. Palantir flagging below recent highs. Palantir looking for it to turn. Okay, Netflix looking for the turn. Netflix. Okay, let's look at some of the Dow Industrials. I know Farmer Jim likes to look at these as well. Let's look at the Dow Industrial Components. Apple back to the 90 MA. Amgen pushing higher. Amazon trending inside day. American Express inside day at the 90 MA. Boeing. Look, note the Bollinger Bands opening up on Boeing.
Punching above their weight, we've seen strong interest for actively managed ETFs in both the core part of the products as well as offering additional income. And so we're really excited to see that growing demand, low-cost products that have come to market from T. Rowe Price and Fidelity among those firms. That's really caught our eye.
I'm always curious about this.
It's above the 921.50 day. Okay, Intel got some activity yesterday as well. Intel, all right. Boeing though, Bollinger Bands opening up. They delivered 50 or 60 planes recently. As yesterday, I believe they said. All right, so S&P is still moving lower.
So we are seeing a growing supply of ETFs that are more complicated, that are trying to solve a problem.
Netflix.
So we've seen
Netflix.
options-based ETFs and other ways to generate income using.
Okay, Boeing, Caterpillar. Nice gap up on Caterpillar.
Auto callable ETF. Recently, we've seen Innovator bring some products.
Caterpillar, nice bounce. CRM trying to get above the 50-day. Cisco trending. CEO was on Yahoo again today. CVX. Chevron. Okay, inside day. Disney trending. Goldman Sachs been off for the last 3 days. Going into earnings next week. big banks.
We're really excited about what Vanguard has been doing within the fixed income ETF universe.
Well, and let's talk about fixed income more broadly because that has really become a juggernaut, of course, within ETFs, and the growth that we've seen there has been pretty incredible as well. And I know you guys have done some work and some survey work on sort of subsectors within fixed income ETFs and where they have been popular. So what have you been finding out?
You're right. So at Verify, we recently had a symposium where we asked advisors where their focus was for the second half of the year. And so investment grade corporate bonds tend to be relatively popular. We saw interest in that. We saw interest in short-term treasuries, and then municipal bond.
Home Depot, that was okay last week. Honeywell pulling back. IBM pulling back. J&J. Coca-Cola. McDonald's. 3M. Merck. Merck looking good.
Municipal bond fixed income ETFs to market. Goldman Sachs is the name that comes to mind. They've launched active municipal bond products that's caught our eye and started to garner some interest.
So, Todd, all of this said, what are you watching the second half of the year? What are you going to be paying most attention to?
So I think we're on pace for another record year. We're going to cross $1 trillion in overall ETF flows.
Merck is turning the corner, breaking a downtrend.
We're likely to pass $300 billion again for the fixed income ETF universe. We're at about $185 billion at the mid-year point. So we're excited to see what's happening in both the active space and fixed income, and there continues to be innovation within the index world as well. We've got some exciting products that we're seeing tied to our Verify indices that are likely to launch later on in July.
9/21 50-day turn. You know what? I should buy some Merck. When are their earnings? Okay, let's see. Merck. Let's see when Merck's earnings are. Merck. Probably buy some Merck. It doesn't move a lot. July 29th. Okay, so we got the 29th is a Tuesday. It's a Tuesday. So 1, 2, 3 weeks from now. 3 weeks from now. Tuesday.
Within the mutual fund world, Capital Group, another firm that's known for their American funds. All of these firms are increasingly putting their focus onto the ETF space. So we're seeing some of that money move from mutual funds to ETFs. That's a great thing for investors. It's a great thing for advisors that are working with them.
Great to see you. Thanks for joining us.
Could sell some premium on Merck.
Much more on NVIDIA's $4 trillion market cap milestone of market catalyst, as well as the latest rhetoric from President Trump on
Tesla still lower. Tesla. Apple dropped off. Apple.
Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, you offer
Okay, so let's take a look at Apple as an example of what to do with the 60-minute time frame. Okay, here's your 60-minute, still below the 60-minute. All right, so you want to think short, at least down to the 21-day. It looks like for now. Okay, it's pulling back to the 20-50 day potentially. Apple. Okay, it's sitting on top of the 9 EMA, so likely it's going to bounce soon, but hasn't done so yet. Looked like it was going to do it this morning, but caught a few people long. Okay, what is ASST doing? Oh, that's still pulling back. Okay, puts. Okay, so S&P, as long as the hedging flows continue to move lower, that short's going to work. Okay, we're coming into support. Okay, coming into support right here. 62.30, 62.35. Dumbass commercial. Jesus. Yahoo.
Breaks down different price patterns, moving averages, oscillators, and much more.
Okay, we're at the low of the day right here on Tesla. Tesla low of the day. About 30 minutes ago, we hit this low. Now we're coming back down to it. Momentum is clearly very bearish. Tesla. Elon not doing any favors to Tesla investors. Needs to shut his mouth and just go on to something else. But that's not his nature, I guess. Okay, Broadcom looks like it's trying to turn. Broadcom, let's go take a look at. Okay, so the short looks like. Keep an eye on that dealer hedge flow. Let's see. Broadcom looks like it wants to turn. Broadcom. Okay, flat. And now it's turning. Okay. You got the flows turning on Broadcom. That might be a trade there, Broadcom. Let's see, what do I have left in that? Do I have anything left in Broadcom? I don't think I do. I think I sold it. No, I do. Okay. July 18th. Okay, I did sell some the 18th, so I do have some 11s left. 285. Okay, we can get back up there. 285. Looks like Broadcom, a little bounce. Broadcom. Okay, Diane. Okay, Diane. Okay, we got NVIDIA with the bounce. That might work. NVIDIA. Okay, NVIDIA looks like it's going to bounce. Let me buy some NVIDIA here. Let me see. NVIDIA looks at flow to turn up. NVIDIA, the flow. Okay. NVIDIA on the move here. NVIDIA. Okay, let me just check this. NVIDIA. Looking for buy order blocks. Okay, buy order blocks right here. Okay, got buy order blocks. We're running up against supply right now. So if that gets rejected right here, that would be resistance for now. NVIDIA. We're $1 off the low, off of that low pivot. NVIDIA. Let's see. 160s. What are the 160s going for? Okay, the 35 delta is 93 cents, 94 cents. Okay, just watching NVIDIA. It looks like NVIDIA might continue here. Might continue. APX dropped off. Booking. We still got about 40 stocks green on the S&P 5, the NASDAQ 100. 60 are declining. All right, up down volume is back down to 1-to-1. Up down volume. Okay, 40 stocks advancing on the Q. 60 are declining. Okay, so for now, good bit of selling. Looking for a turn though. We are looking for a turn. NVIDIA looking for that to continue higher. Netflix with a pop there. Netflix Let's look at Netflix. Netflix price dropped off there. Netflix. But hedging flows turning back up. NVIDIA with a $4 trillion, first company to make $4 trillion.
Damage that software as a service might sustain, right? If the seat model changes. So, you know, there's
Meta just off the high, consolidating. Bollinger Bands coming together. Meta. Okay, we've got dealer hedge flows are turning up on Meta. NVIDIA, same thing. NVIDIA hedging flows turning up from the open. Meta, NVIDIA. Let's see what's Google doing. Google. I want to go long when these hedging flows are turning and pushing higher. I want to go short when they're peaking and turning down. If you're in day trading.
The thing to remember is that the UI may change, right? We may not go into the usual front end we're using.
Snowflake still fading. Apple still fading along with Tesla. So we got 3 out of 10 that aren't cooperating. Microsoft's fading a bit too. Microsoft hitting an all-time high. S&P trying to turn the corner. Okay, watching that hedge flow. You see that starting to pivot back in the opposite direction. So this could be a good long. Okay, I'd like to see a little bit more upside so it doesn't turn out to be a bear flag. Okay, what's Supermicro doing? Supermicro had a nice day yesterday. Supermicro inside day today, but pretty tight price action compared to yesterday. Supermicro.
There's an upgraded countercolor today on the tape, and part of it involves the engine business and the AI build out, which they think is going to be better than they thought before. Part of their point is there's bubble watch going on, but it's still too early to think about it in a
CoreWeave still basing up here. CoreWeave still basing up here at 162 and change. Okay, Meta looks like it wants to do something here. It's back to the top of the list, the NASDAQ 100. Meta.
So where do we think something's going to play out with them? The second big thing that we really have embraced
639, 739, 739.
So there are pockets of the market that we don't find interesting right now, where valuations are related to AI become stretched. We think that investors need to not own those stocks. But there's other parts where we think the valuations are super compelling and that there's great opportunity to make real long-term alpha. So for us, it's always balancing that risk reward and trying to think about what do we think fair value might look like for a given stock and where do we think we're different.
NVIDIA, okay, got rejected at that supply as anticipated. So looking for a higher low.
Which kind of speaks to your point about not being passive about it. That
Be active and to get
Okay, just take it easy at the moment. We're waiting for the markets to, if we can manage to see the indices turn back up.
That's right. Merck announcing that it's acquiring Verona Pharma for about $10 billion.
Looking for the markets to turn back up. This is the Q. The SPY. And IWM, they're all doing the same thing. IWM turning a little bit faster. New York Stock Exchange. Let's see what the daily looks like on New York Stock Exchange. Okay, so sideways inside day for a second day. So the rule here is inside day, you want to look at which direction the markets take in the next trading session. So in this case, you had an inside day in the New York Stock Exchange Composite, 2,000 stocks, broad measure of market participation. You have an inside day on Tuesday. Today, not much going on. So we're looking for a direction. Does it move higher or lower? I suspect that we could just stay here and not do much of anything. Netflix, watching that. Netflix. See if we can get something going. All right, Nvidia, high or low on Nvidia. Watch Netflix. Netflix is trying to gear up. Okay, Netflix is off the highs at 1340. Highs of 1340. Currently trading down here near 1280, 1281. So Netflix could run. Okay, I'm gonna move my limit order to sell up to 250 maybe. Got into these at $1. They're up $1.25. Let's see.
Once you do get to that point, of course, evaluations do tend to be higher. But it's a really interesting trend that we've seen this year, from J&J starting out with their deal at the start of the year, and then we saw Sanofi going out and doing another commercial stage deal.
Okay, Meta hanging at the highs. Nvidia turning back up. Netflix looking good. So we're getting a bounce here. See if it's short-lived or not. Watching the hedging flows, S&P. Hedging flows are starting to turn, so a little bit more is what I want to see to get a long going on S&P. Cash, perhaps.
Still to come this hour, National Retail Federation CEO Matt Shea is with us, breaking down the impact of these new tariff threats for the sector and why a consumer pullback is yet to be seen.
Plus, breaking just moments ago, CEO Linda Yaccarino announcing her departure, what it means for the future of Elon Musk's social media company, coming up next.
And what happens with those investigations. If you just look at what's being proposed now in terms of countries, and we'll find out whether August 1st is a firm deadline. But beyond that, or in addition to that, I think one of the interesting things that's come out recently, especially with all the letters that have gone out so far this week, is this focus from the administration on
Okay, we're trying to turn the corner. Hedging flows I would be very careful. This could be a bear flag. Hedging flows are just showing this slight upward movement, but wouldn't make much of it. Here goes Netflix. Netflix popping. Okay, Netflix is popping. There goes Netflix. Okay, so you got look at the buy order blocks. Let me go to the 5 minute. 5 minute. Okay, buy order blocks on the 5 minute right there at 1040. Put a stop underneath. Okay, here's your stop. Stop. Buy order blocks.
I don't know. And I actually don't know that the capability to do that among these companies actually exists right now. So there's a whole other debate that is probably like we could have.
Okay, so that looks good for Netflix.
But clearly, like the Trump administration is trying.
Netflix looking for a sustained bounce. Okay, let me look at the flow. Netflix flow. Let's go to Hero. Hedging impact of real-time options positioning by dealers. Okay, where are we? Netflix. Okay. Netflix. Looking for that flow to turn up. Okay. Flow's turning up a little bit, misleading there. I didn't see that kind of a pullback in Netflix. I think that's an error. But the hedging flows continue to rise, and I can see price action is rising. This looks pretty good.
Yeah, so in our specific coverage, I like the AI. I like NVIDIA and Broadcom. I think tactically, if I had to pick one over the other, we like them both. I'd probably lean a little more towards NVIDIA just because it is cheaper. And I think they've got pretty smooth sailing, I think, through the end of the year. Like, again, the Blackwell supply for them has kind of opened up. And they zeroed out China. You know, there are sanctions on what they can sell to China. They zeroed it out. So they said that they can work.
Low ticker minus 800.
That would represent upside. Broadcom has a lot of AI upside as well. It mostly comes next year.
All right, so that hedge flow probably turned down, right?
I also like Qualcomm. I seem to be the only one.
All right, hedging flow. Hedging flow is stabilizing, but looking like it could turn down.
Things are looking really good there. Swiss Re is lower in its global rating forecast. As a result of the U.S. tariff policies directly to 2.3% in 2025, down from 2.8% last year. And it's still Swiss Re Institute
very
says
expensive.
companies and
There actually seems some upside in the interim. Most of them are calling for
ways that
6
may
at the
not be
bottom.
visible in
Maybe, although that would also look the same as
the most severe impacts to the United States, where GDP growth
believe that we
is
probably are
forecast
seeing
at
some pull forward.
1.5%. Against last year's growth of 2.8%, and Swiss Re predicts trade barriers,
AMD
supply
has
chain
been as well,
disruption,
although I kind of
pretty
understand
sure
why that
will
stock
all
has
push
been running
inflation up
because
in the
the big
United
story for
States.
AMD is the
Period.
MI 450
Those higher
next
costs
year.
then
Per
translate
year,
to US
you can
consumers.
dream right now. That number could be as big as you want. We saw the same thing last year around this time when people were
Swiss
thinking
Re
how
is,
big
of
the MI
course, one of the
300
most leading
could be.
insurers and reinsurers. So it's also evaluating
For a
the
while, the
risks
stock
and
didn't
the
rock
opportunities for the insurance industry.
The other one in my coverage is
Inflation
Intel.
will lead
Intel's
to
kind
higher
of a
finance
basket
costs
case.
for
Like,
insurers and
I
slower demand for
just joke, like, in my career, they negative about Intel.
casualty and life insurance. Swiss Re says the profitability outlook is positive in large part because of gains on investment income. And we've seen insurers reporting that throughout their earnings over the last year or so. Finally, long-term impacts from the administration's volatile policy shifts, the researchers say, have ushered in a paradigm shift of diminished confidence in the U.S. government, eroding its status as a safe haven for global capital. And Swiss Re predicts investors are going to demand a higher premium to hold U.S. assets going forward, which they're pointing to higher interest rates, especially at the longer end of the yield curve.
Do you get the sense that, if rates were lowered, yes, it would mean they wouldn't get that investment income, but it would maybe spur that economic growth if that ultimately comes to pass?
Netflix trying to push a bit higher.
To go up, the insurers benefited because of the way that they invest their fixed asset portfolios. But when the rates are lower, there's more capital moving around, there's more demand for their insurance products. So they can make money either way. It's just how they make money. Where is the money coming in? Is it coming in from policies in force, or is it coming
Okay,
in from
Netflix,
investment income?
watching
And that makes a difference.
Netflix.
The other thing to think about is the legal costs associated with insurers right now. They're fighting in all kinds of ways, whether it's directors and officers insurance or auto insurance or property insurance lawsuits. And those lawsuits are a massive cost headwind for the insurance industry. So while they're worried about tariffs, that's something that they can plan for. They know what's coming down the pike with auto parts and used car prices going up and what it costs to replace those if people crash their cars. The issue of lawsuits is pervasive, it's insidious, and it's something we just saw this week. The CEO of Chubb pairing with the CEO of Marsh McLennan, writing an op-ed in the Wall Street Journal saying something has to be done about plaintiffs' attorneys spurring this and the litigation finance that is causing these lawsuits to be very
That's
expensive.
fascinating. Yeah, tort reform is that's a whole other ball of
I
wax.
mean, you hear tort reform all the time, and it's sort of like old hat. But for insurers, it comes out in all of the premiums that we're paying, whether it's in our personal policies or what businesses are paying for their risk.
Yeah.
And that moves CPI, as we know.
Absolutely.
Fascinating. Contessa, thanks.
All right, Netflix, Netflix.
One of the country's most exposed sectors, that's retail.
Okay, Netflix is going some more here. 1312.
Businesses across the space, according to our next guest. Joining us this morning is National Retail Federation CEO Matt Shea. Matt, it's good to have you back. Good morning.
Hi, Carl. Thank you.
So I'm sure you were listening to Contessa's view, at least from the insurer standpoint. Are you sensing that slowdown or that muddier picture in domestic growth?
Well, I think that's the big challenge with tariffs, and specifically with the uncertainty, the unpredictability, the volatility of the way in which these trade conversations have unfolded. And you can really contrast it with last week's great victory on the tax bill, which provided what all businesses crave, which is certainty about the future. And I think if you contrast the tax bill with what's going on trade, it's really a tale of two cities. And you go back to the first Trump administration.
Okay, Netflix is going here. All right, let me take
Was the 2017
start the surge here. Netflix.
And that unleashed enormous economic growth in this country. And so preserving that as we go forward was absolutely critical.
Netflix.
But it certainly demonstrates that when you have predictability, you can do forward planning. You know what you're going to do on production and input costs and inventory and customer demand and your supply chain. And with the way in which these trade conversations have unfolded, it's been the exact
Paul
opposite of
Walls,
that.
1280,
So when
1300.
it comes to growth, we see with the tax bill, we have wind at our backs. That's a very pro-growth policy.
Right.
And the way we have approached the trade conversations has created an environment, whether it was intended or not, that has restrained growth and as yet has not yielded the great results that we all hope that it will.
I did read a couple takes this week, Matt, that pushing to August 1 and maybe later might help some retailers build some holiday inventory. Is that a too optimistic framework to look at?
Well, I think one of the reasons we haven't seen a dramatic spike in price increases yet has been in part because many of these tariffs have been suspended, although many of them have gone on. 10% have gone on, and a number of sectoral tariffs have gone on, and some of the emergency tariffs have gone.
Okay, Broadcom turning up.
So there are plenty of tariffs that have gone on.
Broadcom.
But the
Oops.
massive increases on the reciprocal
Broadcom. Do I want to do something with Broadcom? Let me just take a look. Okay, so you don't see what I'm looking at here. Okay. Here is Netflix. Netflix pushing higher. You got buyer blocks.
inventory into the United States in advance. And so now you've got these goods. Many of them have already been sold. So we saw some of that earlier this year when we saw great sales numbers. So the low cost
Schitzel.
basis inventory is being sold through. And at some point, if the tariffs are implemented, then we're going to see higher cost of goods in terms of the cost base of those goods, and the price increases can be restrained forever. I think is everyone's concern. But I do think the next 3 weeks, the extension is great for retailers and their partners. It's also great. I mean, the president is a great negotiator. He likes to negotiate. He's good at negotiating. He enjoys this, and he's going to negotiate until he can get the best possible deal. And we ought to commend that. But we ought to hope that we actually get deals eventually that help us avoid the imposition of these massive tariff increases.
There's this KPMG tariff pulse survey, which shows that 57% of companies are already experiencing a tariff-driven decline in gross margins as of May. Where do you see kind of the first impact, the first order of impact from that? Is it CapEx spending? Is it the way that they hire people, pay people? How do retailers think, and how do they react when their margins get squeezed from something like this?
Yeah, well, Leslie, I'd say for starters, in an environment like this, scale is clearly an advantage. And so it is small retailers, small businesses, those without leverage, those without strong relationships, those that don't have scale to negotiate the deals they need to negotiate. Those businesses that really live on cash flow and have very limited cash flow are literally going from 1 week to the next to make payroll and make paychecks. Those are the kinds of companies, those would be the characteristics of the businesses that would be hurt first. But even with scale, the level of planning, the complexity, the conversations, the negotiations, the work with partners, is it on again? Is it off again? What's it going to be? How much should we bring in? What should we order? When do we need it? How much will it cost? I mean, the conversations are endless, even if you're the largest retail businesses in the world. And I think, again, it's really important for context here that since 2018, there's been a massive transformation in the supply chain. So American businesses, American retailers are working overtime to source as much, to produce as much, to purchase as much as possible from suppliers here in the U.S. and from a very diverse supply chain around the world. So
Okay, Netflix still going.
China has taken place at a very rapid pace in the last 7 years. That's been a good thing in many ways, but you can't do these things overnight. And so I think, that's why we need some clarity. That's why we need the ability to understand what the future looks like. And if there's a roadmap and there's a timeline, then I know that the retail industry can get there and achieve the kinds of changes that everyone wants. But you can't do it overnight. You can't do it tomorrow or next week or by the end of this quarter or even by the end of next year. Yeah. But over time, you could accomplish a lot of change.
Matt, it's a good reminder of how much has changed since 19, and I hope we'll talk some
Okay.
improvement trends as we get
Looking for a
closer to
follow through. Apple trying to turn. Looks like some short covering. Tesla short covering. Broadcom looking for a follow through. Let's see what Broadcom looks like. Broadcom looking for buy order blocks similar to what we have with Netflix. Okay, we have buy order blocks right before the opening bell. We've got a B pivot, it looks like. Broadcom.
As it becomes the first company to reach $4 trillion in market cap. Those other catalysts with money movers continues after this short break.
Okay, Broadcom looking for a follow through and a push higher. Okay, Palantir, high of the day. Palantir, new highs. Note the buy order blocks on Palantir. Let me show you Palantir. Okay, so here's Palantir, PLTR, Palantir. All right, back up to the highs. Palantir, whoops, Palantir.
I do want to linger on employment in the job market for just a
Okay, futures trying to turn.
You've been watching.
Futures trying to turn. Check out the hedging flows. All right, hedging flows are starting to make higher highs and higher lows. This could be a good area to take a long. I'm going to.
And the rehiring rate, it still tells you that we're in this low hiring, low firing environment that we've been in for a good chunk of this cycle.
Looking for a follow through here.
The unemployment rate staying stable, relatively stable over the past couple of years.
Broadcom. Okay, SPY. I have SPY already for Friday. Those are out of the money.
Or it's falling gradually over time as you go throughout an expansion. It's very rare to see the move that we have seen over the past year. So I think that, that aside, though, there are stress sort of fractures if you apply enough pressure.
Okay, so NVIDIA turning. Okay, looking good. NVIDIA.
There are enough stress points where you could eventually weaken the economy enough to maybe go into a mild recession. I think you need an extreme negative catalyst to push you at this point into a deep recession, which could be trade related or immigration related. If you see deportations pick up enough, or if you see
Okay, S&P turn in the corner.
right now, we're just kind of moving into that slower growth environment.
S&P, watch S&P here.
Significant spike in unemployment across all sectors. It's just happening sort of almost on a rolling basis.
And what do you think labor market wise? It sounds like you see things more stimulative. But it sounds like than what Kevin is saying.
Yeah, I do echo his point. Like this weakness in the labor market, certain areas, but it's just not broad enough to get to the
62. Okay, 62. The high today, 62. Right, 62.70.
Yes, those rate cuts are very justified. So it's more about inflation. For some of these Fed members say that inflation is here and the Fed funds rate is here, so we can cut that rate a little bit. But the moment you start investing in the economy and think of the cycle of the 2022 the chips sector, the infrastructure, those are actually impact on trend line growth. We were running at 2% average growth. If I think employees are coming into the economy and it's not impossible that actually happens, we're not talking about 3, we're talking about 5% economy. There's not a Fed funds rate that can be at 3, 4, 2%. So this is the tension. Especially if the investment cycle is too long.
All right, I bought some 62.70. Let's see if we get back up there for $1.30.
said this March that he sold X to his AI startup XAI in an all-stock deal that values X at $33 billion. He also has been in talks to raise new financing. So Yaccarino, who Musk hired from NBC Universal, where she ran ad sales, was tasked with repairing relationships with advertisers.
Okay, watching the hedging flows here on S&P turning. I just bought 6270s. So let's see if we can get back up to this high. Okay. We have support in this area right here on the left. That purple histogram peak. Price is bouncing there. Looks like we could follow through now.
Shared anti-Semitic posts on X, though NBC reports that Yaccarino's exit was in the works for a week. Back over to you.
I was going to ask you whether or not you thought, Julia, the Grok controversy yesterday, where it referred to itself as Mecha Hitler, and we won't go into all of that, had anything to do with this. And a reminder that Yaccarino's tenure at our parent, NBC, for years revolved around the notion that only at legacy media could you protect viewers and users from elements like that.
Yeah. I mean, that's absolutely true. She had quite a long tenure at NBC Universal, CNBC's parent company, where she was very much focused on premium content. She was focused on the value of free speech and the free exchange of
Apple
ideas.
turning, short covering on Apple. Netflix at the high of the day. NVIDIA trying to make a higher high. We're making higher lows. It looks like a B and C pivot already.
That were insulting to advertisers. I mean, he said some not very nice things.
Oh, come on.
.com/coaching and start learning today.
Another area of focus is also going to be Trump 2.0. How have these various policy shakeups impacted the thinking of these executives and what we still have yet to see, especially when it comes to deregulation. So a lot to keep track of this conference, always buzzy, and I'm sure we're going to see more news trickle through over the next week.
Apple turning.
Thank you. Not much more markets action.
Apple short covering. SPX.
Don't miss the warehouse clearance sale going on now at American.
Okay.
Very much involved in what he wanted to look and feel like. This is
Okay, S&P turning the corner.
on X. So unclear who might want to report to him as CEO, knowing that he's going to be so involved in this process. Lindy Yaccarino told me that she loved having Elon Musk so involved in X as she was running it, but not clear who's going to be replacing her, and no word from the company yet on that.
Yeah, and we'll see how it also folds into Musk's seemingly grander now political ambitions with this new party. Julia Boorstin with the breaking news regarding X. Thank you very much. Let's get into something this morning with Silvana Henao. Hey, Silvana.
Hey, Carl, good morning to you. The death toll in Texas, Kerr County from the holiday weekend flooding has reached 95, including 36 children. Yeah, that's an additional 6 children from the figure officials shared yesterday. They also said 59 adults have been confirmed dead. The update comes as state officials say more than 173 people remain missing. Kerr County officials say that number includes 5 missing campers from the Christian Camp Mystic, as well as 1 counselor.
That's terrible.
The Trump administration sued California today, alleging policies allowing transgender athletes to compete in girls' sports violate Title IX. That's the federal law that prohibits sex discrimination. Now, the DOJ already has a similar lawsuit in Maine. California officials did not immediately respond to today's legal action. And an appeals court.
Okay, S&P just stuck here.
Cancel rule that would have made it easier to end unwanted subscriptions and memberships. The court said the Federal Trade Commission made a procedural failure by failing to come up with a preliminary regulatory analysis, which is required when the impact on the economy is more than $100 million, Carl.
Silvana, thanks, Silvana Henao. Meantime, CNBC is rolling out its list of top states for business tomorrow. Our Scott Cohen joins us with some clues about what to expect.
We have made it here, Carl. We've made it to America's top state for business. It is the result of a study that we do every year. We've done it every year
since 2007. But a reminder for those of you just joining us how this works. We start out with 10 categories of competitiveness. This is something that has been consistent since this study began in 2007. But because the things that matter to business change from year to year, we reweight those categories based on what matters to business and what the states are talking about. And then we
Netflix high of the day.
to make sure that they are consistent.
Nvidia trying to make a new high, making higher lows, trying to make a new high here. Nvidia. Nvidia stuck right at this area, banging around this same area, right on 163.40. Looking for a bounce and a push through this area. You can see supply overhead. Netflix pushing higher.
Just give it to you. We'll give you yet another diabolical hint. Here you go. Moneymaker. Moneymaker. Think about that and what that might possibly mean. It does tie to this top state for business. You can read more about our study, read about our methodology and all of our sources at topstates.cnbc.com, which is also where you'll be able to see tomorrow where your state ranks. Leslie?
Where do they make
Volunteer.
physically, exactly, like physically printing the money or the coins, or
Are we close, Scott? I don't know. It's about making money.
well, I know where Money Movers is.
Yes, it's
right
right
here.
here.
So we'll stay tuned and be moved to the coverage tomorrow, Scott. Thank you. Later this hour, Raymond James downgrading one large U.S. bank stock ahead of earnings next week.
Okay, it looks like Google's going to go again. So does Amazon. Okay, looking better. S&P. We got supply just overhead at 62.47. We can manage to break higher out of this flag. Okay, let's see. Oh boy. S&P, the hedging flows have flattened out, trying to make higher lows, higher highs, right in this area. Resistance overhead, support below, right in the middle. Hedging flows flattened out into lunch.
So Trump posting on Truth here. So he's saying a tariff of only 20% on the Philippines. So again, Philippines 20% tariff from Trump on Truth Social.
Okay.
Again,
So
to impose 20% tariff on goods from the Philippines. Other post from Trump on.
all right, stocks are trying to bounce on the New York Fangs. That said, let's go ahead and look. Let's continue looking. Okay. These casinos look good.
To Brunei, a tariff of 25%. So again, Trump imposing 25% tariff on Brunei.
Okay, so the S&P small cap 600.
From Trump on Truth Social here. This one's to Moldova, 25% tariff on goods from Moldova.
Okay, Vistra Energy breaking higher. Vistra breaking higher. Vistra Energy.
Another post from Trump on Truth Social. This one to Algeria.
Vistra Energy.
30% tariff on Algeria.
Boeing still going. Boeing still going. Looking good, Boeing.
Another post from Trump on Truth Social here.
Coinbase.
30%.
Coin.
That's Iraq. 30% tariff.
Got Coinbase grinding along the 9 EMA, bullish 9 EMA, looking good. S&P, I don't know what that was. That was a little drop there. I guess with all these tariffs being announced.
Another post from Trump on Truth Social here. His letter to Libya, a 30% tariff.
Welcome back to Money Movers. The Nasdaq hits a new intraday all-time high today as Nvidia.
Nvidia is trying to grind a bit higher.
$4 trillion market cap now backing off a bit off of those highs. Meantime, the S&P is on track to break a 2-day losing streak. Joining us this morning at Post 9, UBS Lyman Partners Managing Director Ali McCartney is back. It's great to have you, Ali. Welcome. What do you make of, I guess, the price action on Nvidia, but also this general
Okay,
sense
junk
that the
bonds looked a little more bullish this morning. It is above the 21-day. Pull back for 2 days. Junk bonds. Keep an eye on junk bonds and the 10-year yield. 10-year yield back below the 50-day, fading. So that's good for IWM. IWM still trending above the 200-day. 921 crossing up through the 200-day. That's bullish. Advanced decline percent giving us bullish signals earlier this morning. Now they're turned back down, so these need to turn back up. Merck, little profits off the high of the day. Merck, GE Vernova trending. GE Vernova trending.
some degradation in the macro, either unemployment or core CPI, that this news will continue to get absorbed pretty well?
I think so. I think what'll be interesting is this week is probably going to be the turning point in
Trending.
looking at the White House, the BBB, all of that kind of stuff, and looking into earnings season. So I was just listening
Lennar,
to the prior retail
DHI.
talking, and he was saying that May is when you start to see some of the numbers in terms of increased pricing pressure, both on low-end consumers and on producers. I think you're going to start to see that in the earnings season we have. I certainly
So just to recap
anecdotally,
there on that
although
flurry
you're
of
not
letters
seeing
posted
it in
to
the
social
numbers
by
that are
Trump.
coming either from
So
banks and savings or
Philippines
this,
getting
that,
a
and the other.
20% tariff.
When I talk to
Brunei
people
a
both on the
25%
philanthropic
tariff.
side
Algeria
and on the
30%.
sort of smaller
Moldova
business side, you're
25%.
definitely seeing a
Iraq
drop off in consumers.
30%. And
Those
Libya
people that run
30% as well.
philanthropies that tend
All
to
right,
have
DHI, Lennar, these are all trending.
they're seeing the biggest
Okay, Toll Brothers, Toll, TOL.
but there does seem to be a sense in the market that we're going to be looking through that. We're going to be looking two rate cuts, maybe plus or minus this year. And we're going to be looking towards a recovery in EPS and GDP in 2026.
Yeah, that was going to be my question: is whether those data points are often kind of temporary blips when people.
Okay,
have
S&P pushing a bit higher now.
I'm not going to give more philanthropically because I want to see how this whole thing plays
S&P pushing a bit higher.
Keep more of a rainy day fund because I don't know what this whole tariff thing is going to mean, and then ultimately down the road they'll spend more if they feel like things look a little better in the macro picture.
Okay, S&P.
To a certain extent, things like philanthropic
Hedging flows turning. We bounced at near support. S&P bounced near support. Frano took her puts off, made a nice profit. Now we're reversing. There goes Amazon.
Then you might see some of these things recover. But by the way, it hasn't stopped market.
Amazon zooming off a BC pivot.
We're in this scenario where we still have a lot of cash on the sidelines from individuals and institutions. So there's a velocity of money play to get there. And again, this concept of, that we're in the fourth industrial revolution, and it might actually be the biggest one we have, and that it is largely U.S. large cap dependent, and then it's going to start to flow through. I think you're seeing that in the momentum that is kept up with tech. You're also seeing that it's broadened out among other sectors. So we're at the point now where about half of the S&P is up greater than the S&P, so about 256 stocks. 175 of those stocks are up year to date, over 10%. So we're starting to see that.
Okay, Amazon doing well.
Thing that I
Okay,
worry about the most in all that,
Amazon.
given what we just talked about the pressure that is on the low end, but I don't think being seen or
Amazon zooming back up. Amazon Prime Week.
numbers yet that we get. I think the
That's this week, right? Amazon.
Certainly, why it's pulled the way why it pulled. Yeah, we'll see how that gets absorbed in policy as well. Allie, thanks. Good to see you. Allie McCartney.
Thank you. Up next,
S&P continues higher. S&P.
company's next growth drivers as the stock surpasses $4 trillion in market cap.
Okay, S&P climbing. You can see dealer hedging flows are grinding higher too. Dealer hedging flows are trying to push a bit higher as price action moves up towards the next level of supply, where we had some sellers here earlier. Okay, looks good. Tesla, short still covering. I wouldn't trust it too much. Tesla's just too news driven right now. Okay, Amazon. Meta trying to break out. Meta trying to break out, new high of the day. Meta. Okay, Meta. Okay, S&P starting to move. S&P is starting to move. Okay, let's see if we can't get a rally into lunch hour. Create some A pivots. There goes Meta. Let me take another look at Meta. Okay, Meta. All right, pushing off of this level. Meta, 60-minute is bullish. Okay, looking good, Meta. I sold some Meta into strength earlier. It looks like it wants to break out. Maybe go out a couple of more weeks. Let's see, Meta. Let me go out to at least July 25th. Meta looks good. It's trading 736. Where is Money Magic levels? Money Magic. Meta. 730, 740. All right, so we got $4 to go to get to resistance. Okay. 740. Single. Let's see. 740. Meta trying to break out. So I'm going to try some 740 verticals. Let me delete that. 740. That's a 40. Let me go to the next level. 745. Okay. Buy vertical. 745, 750. Okay, those are $2. 745, 750. Let's see if we're getting a fill on this. 745, 750. All right. So I bought some Meta 745, 750 verticals for end of July, 25th of July. 745, 750. Okay. 745, 750 on Meta. Looking for the breakout. We're right at resistance, so this could get knocked back down. S&P, nice little move on S&P.
Just posted to Truth Social to the leaders of countries that include the Philippines, Libya, Iraq, Algeria, Moldova, all of these tariff rates that he says will range from 20% to 30% for these countries if they don't strike a deal before August 1st. The letters are otherwise the same as we've been seeing before, so these would be tariffs separate from any sectoral tariffs, subject to change up or down, depending on how negotiations go. I'll flag, though, guys, for these 6 countries, none of this trade is very impactful to the U.S. market.
Meta going.
The share of imports that
countries. The biggest trading partner is the Philippines on this list of 6. They account for about 0.4% of our imports, and that's the biggest one. The smallest one is Moldova, where we import just about nothing from Moldova. So not super impactful here unless you have a company based in one of these 6 countries, but the administration, again, trying to ramp up pressure, strike some deals in the next few weeks, guys.
All right, good context there, Megan. Thank you for bringing that news to us. NVIDIA's road to a $4 trillion market cap was boosted by a major rebound in the past 3 months, shares jumping more than 40% since April. But what could fuel the chip maker's next leg higher? Christina Partsinevelos digs into that. Hey, Christina.
Hi, Leslie. Well, like you said, NVIDIA's newly achieved, albeit briefly, $4 trillion market cap today is really a valuation fueled by more than just chip sales. Investors are really buying into the transformation for NVIDIA into an AI infrastructure powerhouse. CEO Jensen Huang has repeatedly stressed that NVIDIA is no longer, quote, just a GPU company, calling that era the good old days at NVIDIA's GTC conference just this past March. He now describes NVIDIA as an AI algorithm firm, and with chip design almost secondary. The stock, like you mentioned, 40% surge since May, April, and that has been aided not only by the shift into an AI infrastructure, but also the thaw in U.S.-China trade tensions, as well as multi-billion-dollar chip
Okay,
deals.
Meta looking for that follow through.
Thesis really centers on NVIDIA's full stack strategy. In networking, Bank of America says NVIDIA's NVLink is at least 1 to 2 generations ahead of its competitors, allowing chips to communicate faster with each other. It's
Okay, S&P looking forward to push to the supply.
ultra high-speed communication across
Okay,
servers
looking forward to push to the supply. S&P.
AI workloads. In cloud computing, NVIDIA's new DGX Cloud Lepton gives it direct access to developers through partners like CoreWeave and Lambda, circumventing traditional cloud providers like AWS. AWS, by the way, and many cloud providers are now trying to build their own chips to reduce dependence on NVIDIA. And in autonomous vehicles, Bank of America says the industry is having its, quote, ChatGPT moment, pointing to the massive data needs. A single test vehicle can generate enough data.
Bitcoin turning back up. Okay, S&P pulling back in.
We estimate the GPU count for an autonomous driving assisted system could jump from 8,000 GPUs to 80,000 GPUs just in the next few years. Right now, auto only contributes 1% of NVIDIA's total fiscal 2025 sales, which means there's a lot of room for growth.
Okay, S&P pulling back in from
cloud and autonomous technology.
Supply overhead.
Into why Wall Street is valuing this company far beyond a traditional chip maker. Was it?
Yeah.
All right, Broadcom looking like it wants to go here. Broadcom.
Raymond James downgrading one of the big U.S. bank stocks ahead of its earnings report.
Broadcom looks like it wants to go. ABCD pattern on Broadcom. I'll look at to doing something on Broadcom. I'll go out 25 July. Broadcom, where are we? Okay, we're sitting at 276. Let me just take a look at Broadcom. All right, S&P pulling back from supply. Broadcom right at supply right now. Broadcom. Bollinger Band's opening up. Broadcom having a nice surge today back towards the highs. Okay, inside day coming back, pulling back from the high. Broadcom. Yeah, I would wait. BNC pivot, A-Lab. Yeah, BC pivot probably back at 96, 97. Netflix pulling back. Netflix. Okay. Okay, so we're coming into the lunch hour. I'm your host, Cozavetti, coming to you from theclosingprint.com. It is 11:54 a.m. Got 6 minutes to go. I'm going to take a 2-minute break. I'll put on Yahoo and give me a couple of minutes. I'm just going to go stick something in the oven. I'll be right back.
Because Vantage score is more inclusive. It is also much more modern and much more advanced and more predictive. All of the major banks that have looked at our data have concluded that, whether it's Bank of America or Chase, the nation's largest bank, the Vantage score is better, and as a result, more people are going to have access to credit that in fact credit worthy. And also more banks are going to be able to make more loans with a lower risk than ever before. Really exciting.
Sylvia, thank you so much for joining us. It's good to see you.
Great to see you, Julie. Thanks for having me.
And finally, just want to get some final thoughts with Kevin Gordon. I want to talk about the upcoming earnings season because I noticed a really interesting stat in
Matt, Raymond James downgrading Wells Fargo to market performance strong buy this week, saying near-term upside in the share price is limited. The downgrade comes ahead of earnings next week with Wells, JP Morgan, and Citi reporting on Tuesday. The analyst behind that call joins us now, David Long of Raymond James. Thank you for being here. I think this is an important distinction to make because there are a lot of questions right now. We've seen such a tremendous run-up in these big 6 U.S. bank stocks over the last few weeks, largely on this expectation that the deregulation wave will allow for some of this excess capital to be put to better use, whether it's through more buybacks or dividends or lending or M&A. Do you think all of those benefits are essentially priced in, at least to Wells Fargo? What about the rest of the space?
Sure. So yeah, look, Wells Fargo, I think the fundamental outlook remains fantastic. They just had the excess capital moves. We raised our earnings estimates. We raised our target price just 3 weeks ago. So the backdrop looks very good. However, since then, the stock has jumped another 15%. We just hit our target price that we set 3 weeks ago. And then when you look at the banks as a whole, as you mentioned, the big four, the mega caps, Wells, JP Morgan, Citi, B of A, as well as Goldman Sachs and Morgan Stanley, all made 52-week highs within the last several days. We see this as the typical early stages of the bank investment cycle. As investors warm up to the banks, as you mentioned, there's a lot of positive catalysts out there. Investors have warmed up. They own the most liquid and visible banks to start with, these mega caps. The next stage, and something that seems to be just starting now, is we're moving down the market cap spectrum. New money starting to come in to the regional banks, and eventually that'll shift to the mid and the small cap banks. The level of incoming calls that I receive, the weight is moving away from the Wells Fargos of the world towards the regional banks.
Is that purely a valuation play at this point, or is it an expectation that the macro picture will be more supportive because the mid-cap and smaller cap banks are a bit more tied to U.S. economic growth?
Sure. So for bank investors, right now you need credit to be clean, which commentary interquarter was very positive on. You need the yield curve to be normally sloped, which we saw to start the year, but we had some inversion at the start. But now we're getting some more optimism about the shape of the curve improving this year. And then you have the M&A backdrop. And as these things start to happen, you get incremental buy-in from investors. And when that happens, you'll start to see that move downstream. To your point about the valuation, the largest banks trade at the median valuation they trade at since the great financial crisis. The mid-cap banks are 2 PE multiples below their median level over the last 12 years. And the small-cap banks, 3. So there's more upside potential in those banks. And when M&A picks up, I think that's where you get some real excitement, where we've seen some green shoots, at least early green shoots there on M&A.
Yeah, looking forward to additional color for next week's earnings. David, thank you.
Thank you very much.
We are getting some breaking news out of the DOJ, and for that, we're going to turn to Eamon Javers. Morning, Eamon.
Hey there, Carl. The Department of Justice has just unsealed a criminal indictment of sports and commercial real estate executive Tim Leiweke. The charge here involves Leiweke's alleged participation in a bid rigging scheme related to construction of the $375 million event arena at the University of Texas at Austin, known as the Moody Center. Now, according to the indictment, Leiweke, as CEO of the developer Oakview Group, allegedly entered into an agreement with another potential bidder for the arena to drop a competing effort in exchange for lucrative subcontracts at the arena. Documents say Leiweke allegedly reneged on that promise and did not come through with the subcontracts as he had suggested, allegedly. Now, according to two sources familiar with the matter, the Antitrust Division of the Department of Justice is also expected to announce non-prosecution agreements with two other entities here: Stadium Operations Company Legends Hospitality, which is expected to pay a $1.5 million penalty, and Leiweke's own company, Oakview Group, which is expected to pay a $15 million penalty. We'll reach out to all of the parties here for their comments. Carl, back over to you.
Interesting wrinkle there, Eamon, as we continue to watch the money surrounding sports. Eamon Javers in Washington. As for the markets, we did lose a bit of an early rally, but hanging on to some gains. VIX still very subdued, just above 16. We mentioned the bank earnings next week, but we're going to get Delta tomorrow and then Levi tomorrow night. So sort of a soft launch of earnings season.
And certainly bellwethers for just the macro picture, how everybody weathered the 2Q tariff turmoil. Expect to be huge for trading, though, for the banks.
Right. And then as we are sort of in a light macro data week, we'll watch bonds, but a little relief on the yield front today with the 10-year back below 4.4. Let's get back to Post 9 and the judge with us.
Oh, kid, come on. All right, guys, thanks so much. Welcome to the Halftime Report with Scott Walker, front and center this hour. The first $4 trillion company, NVIDIA, hitting that major market milestone. We discuss and debate what stocks the best owned right now with the committee. Joining me for the hour, Joe Terranova, Steve White, Jim Leventhal. Bring Talkington along in just a moment, because with NVIDIA hitting $4 trillion, we have to hear from her too. We will check the markets. There we are, green across the board. NASDAQ at a new high, guys. Joe, the NASDAQ's up almost 40% from its April low. We'll call it 39%. That is remarkable in and of itself.
This is a big story. And I know a lot of people, middle of the summer, NVIDIA hits $4 trillion. This literally underscores and highlights the biggest argument right now in the financial services industry. What's the bigger risk? Concentrating or diversifying? NVIDIA hits $4 trillion. There are 5 companies right now with a market cap greater than $2 trillion. Then you have 8 companies with a market cap greater than $1 trillion. But how about this? Palantir is the 24th largest company in the United States. It has a market cap of $330 billion. To get the top 25, all you need is $300 billion. That's Coca-Cola. So it underscores how over the last several years, we have had this dramatic, concentrated performance from these AI leaders. Look, the AI leaders right now, and they're all above $1 trillion. It's NVIDIA, it is Microsoft, and guess what? It's also Broadcom. Those are the top 3. But you have to ask yourself as a portfolio manager, if in fact you can actually concentrate. We all talk about, well, we have a portfolio on the show. The Joe T has 125 stocks. Joe T isn't going to have 8 stocks or 10 stocks. And that's why the last several years, the overwhelming majority of portfolio managers are underperforming their benchmarks because the performance is so narrow. And that really brings the question, where's the risk? Do you just diversify and underperform, or do you actually concentrate, participate, and then at some point, the other shoe drops?
If you've concentrated, if we'll call it that way, NVIDIA is up 89% from the April low. I said the NASDAQ's up 40, okay? Meta's up 66% since the low. Amazon 48, Microsoft 46. Alphabet and Apple are below that at 25 and 24 respectively. But that underscores for everybody where the concentrated, to Joe's point, bet has worked big time.
Yeah, and while I'm a proud investor in Joe T and diversification, that's diversification for my portfolio, because to me, and Warren Buffett will tell you this, the great investors will all tell you this, Dave Tepper, diversification is the enemy of performance. So you do your work and you stick by those names in a concentrated portfolio.
So my weightings are in big cap tech. There will be periods of time that I underperform, as earlier this year. But given the bottoms up fundamentals of those companies, whether it's Meta, whether it's Microsoft, pick them. They will continue to outperform because they've got balance sheets. They've got a dominant market share that is growing. The only thing getting their way, and that would be short term, is if the government comes and says, you got to break them out and that's supported by a judgment. I don't think that will be the case. But even then, I will tell you that some of the parts are worth more than the whole. So I continue to keep my focus there, my concentration, and the four big names. I mean, they're close to 50% of my portfolio. They weren't when I went in, but they've grown. I've weeded out some of the others. So I recognize the risk here. I recognize the overvaluation, 30 times forward earnings for Meta and for the others. But I'm also comfortable with it because overvaluation is a moment in time. Fundamentals catch up.
Diversification for diversification's sake isn't a winning strategy, right? And this is a different kind of market than, many of you grew up with. Yep. You have such a powerful trend in AI that it has given investors every reason to not be overly diversified to the points that were made here. The question is, after this incredible run, what do you do now?
I think you can find a degree of diversification. I don't think it has to be all Mag 7 or even all tech, but I would take this in steps. So within tech, you can get diversification. You can get diversification into AI adjacent stocks that maybe haven't run up as much. Cisco, Oracle still has some room in the tank, if you ask me. You can get into the value tech stocks, the Googles. IBM is performing well. You can go into other sectors that are performing well right now. Now, I want to start with what I would avoid. Utilities and staples are overpriced, and even if the market goes down because of their expensiveness, I don't think they'll be defensive.
That's not traditional
Let me
diversification.
just quick.
No, that's not too quick.
Just slow down. Okay, there are sectors outside of tech, outside of the concentrated area that you can, Joe, I see you smiling, but you'll agree with me, financials, industrials, you can go there and you can make some very good returns. What I'm saying here in the gradation of diversification, I agree, just diversifying and saying, I got to have 3% in utilities because the S&P 500 has 3% in utilities. Thumbs down from me.
I want to hear Joe's point. Go.
So you can't underscore the fact that the last several years, the prevailing tailwind and arguably the saving grace of the market has been AI. If we haven't had AI, where would this market be? So then you can't say, okay, I'm going to diversify with other AI adjacent names. That's not pure diversification. You could maybe say, I'll insert a JP Morgan. I'll insert a Berkshire Hathaway. I'll insert a
Broadcom following through.
That gives you a degree of diversification. But if you're staying with the AI thesis and the surroundings of technology,
taking it in steps. I was taking it in steps. I started with the AI adjacent. I moved to different sectors. Your point, I agree with. I was taking it in steps because we started out with the rallies concentrated in AI. I said, just take it in steps to get diversification. And I did stop because there are sectors that I just don't think you need to be in.
Let me make this point. Even if you think you're diversified by just owning the S&P, that diversification has taken a major hit. Because if we go back a decade or so, you'll see that Info Technology, which is a lot of the companies we're talking about, was only 10% of the S&P. Now it's 32%. So you're going to have to look outside that to diversify. Now, it's great diversification I have, but also, when you take a look at managers, 75 to 80%, to your point, underperform the S&P every year. And guess what? It's not the same. A lot of them are the same. But my point is that even those that have outperformed just said, they come on and say, I'm going to overweight tech or I'm going to underweight this, which to me is a bunch of crap, right? Because all you're saying is I'm managing to the S&P rather than managing to return. That, you'll see those that have that uber performance in a year fall back to below the 75%.
Let's bring in Bryn, who's with us to talk about NVIDIA hitting $4 trillion. Certainly one of the more high-profile members of the committee to be in this name for a very long time. What does this move mean to you? What does this milestone mean, Bryn?
I think the milestone is where it's incredible is, NVIDIA's numbers won't come out until the end of August. We have a $4 trillion company that's going to grow revenues this quarter at 51% and earnings at 46%. So I think they're on a different calendar year. In our fiscal year in 2026, This company probably does $5.50 of earnings. It's just incredible to have a company this size still growing revenues and earnings so quickly. I think we have to remember, though, it's almost been exactly a year where NVIDIA has been basically sideways between 140 and 100. So you had to be patient over the last year. I've been selling calls, but now that you've had this base that it's broken out of, I think that really, to me, what's catalyzed a lot of things is when Mark Zuckerberg has come out and is poaching these engineers for $100 million signing bonuses. And so if you think that AI is getting long in the tooth, look again. I think it's just like going in from third to fourth gear from these hyperscaler spending, which we'll all hear about in the next couple of weeks. So I think it's really interesting and exciting, not interesting, but exciting about NVIDIA that it's finally broken out of that 1 year base. And so you could easily see this name creep up into the 200s because of this strong earnings and revenue growth. So I think we're in this moment of time, and NVIDIA, as Joe, we talked about the other day, NVIDIA, I think, will continue to be a strong performer towards the end of the year.
I think absolutely. I agree. Technically, you're seeing a breakout, and this is where the spending is. And let's talk for a second about Broadcom, because they don't get enough credit for contributing to building out the AI infrastructure. Yes, we want faster chips. We want faster processing, but you also need faster networking. And that's exactly what they're doing with the XPU. They're delivering faster networking. And it is all right now a world in which the spending is being geared toward those that can actually provide the opportunity where you don't have to stack the chips, where one chip ultimately is enough. And that's why they're in the sweet spot. I don't see the spending at any point dissipating. We've had moments over the last year where we thought that you'd see a slowdown in spending. Steve, you've been accurate pointing out you didn't believe that was going to occur. And just look at Apple. Look at the reasoning behind why Apple is currently being punished, because they don't seem to have a steady direction on AI.
They don't innovate, as I've said many times. But look, the story, let's not forget the base story in AI. It's the fastest adoption of any technology in history, faster than the internet, which was free to users. A lot of users are paying subscriptions for ChatGPT and others. So it will continue to go. But what's most interesting about it, despite the major CapEx budgets, it's not only the ones on the receiving end like NVIDIA, it's the ones on the spending end. And you typically don't see that. So it's a very unusual time.
I thought Melius Research had an interesting note. And Bryn, I'll get your take on this too, because they look at the landscape, and I think partly to Joe's point, they're in agreement where they're like, okay, you want to continue to buy AI semis, but they say to exercise caution on SaaS names. They want you to continue to buy the NVIDIAs, they want you to buy AMD, and they want you to buy Joe's Broadcom, but they don't really want you to buy Salesforce, nor do they want you to buy Workday or Adobe. They see where the puck maybe is going, and they want you to go there. Do you agree with that call?
I think that, well, we'll see. I mean, Salesforce is expensive. Obviously, Mark Benioff is spending a ton of money with their agentics, but I think it's an open field. So I think the report is sound, but I still think it's early days, though. Obviously, Salesforce, ServiceNow, all of those companies do so much more than just agentics or agents, etc. But I do think, though, that there will be winners and losers. And as we remember going back to 2012, the early days of the cloud, no one believed in it. No one believed in it at all. But it actually allowed Microsoft to re-rate, Amazon to re-rate. And so I feel like we're in these early days where we are not going to know who the winners and losers are. So I wouldn't take this piece and say Salesforce or ServiceNow, but I would just say it's early days. And so there'll be a lot more winners and losers. But I think NVIDIA, Microsoft, Palantir are clearly going to be the winners in the space over the next couple of years.
Bryn, good to have you on. Thanks for jumping on to talk about NVIDIA. I had to hear from you today. Bryn Talkington back with us in the days ahead. I am almost certain of that. More SaaS names. I mean, you no longer own Salesforce.
No.
I think many of our viewers probably do. But you do have Oracle and ServiceNow and Viva and DocuSign and Zoom if you want to talk about so-called, SaaS names.
Yeah, and clearly the winner there has been Oracle. I think, Jimmy, you're participating in that with me as well. That's the leader. There are some other names, DocuSign, Zoom. That
By the way, Oracle, up 88% since the bottom. if you really want to know how powerful the AI trade has been, look beyond the mega caps, because the core weaves of the world are up 250%. Quantum computing, IonQ, which was a brand name that she brought to us originally, up 118%. Power names like Vertiv, Oracle 88, Vernova 86, Broadcom 78, Dell 72, Constellation Energy 68, Eaton and IBM respectively 43 and 31%. So you need to really look beyond the mega cap to see where the best gains have been.
Yes, and I think you're at a little bit of an inflection point. I think what we witnessed in the last 12 months was that there was this period in 2024 where software outperformed semis. And it was on the premise that software was now going to take the handoff on the tailwind of artificial intelligence advancing towards generative AI. I think now we're back at that inflection point where we're going to see the return, both in the form of sentiment and positioning, to the semiconductor names. One of my favorite semiconductor names, which is clearly breaking out, is KLA Corp. We do not own it in the Joe T. Obviously, we've owned it in the past, and it certainly will be a candidate when we rebalance at the end of
Joe, do you
July.
have the other semi-caps? Do you have AMAT? We have AMAT. We've talked about
Yeah,
that.
we've talked about. So semi-equipment names, they're rebuilding the positioning. They're seeing the momentum being reestablished once again. But I think it's an inflection point. I think Adam Parker on Closing Bell talked about this with you several months ago, where it was, okay, let's now go away from software names. Let's move into the semi names. And that's proving to have the fruition.
But if I can,
really, it's Oracle that stands out in the software.
if I can just point out that what you're describing has a lot more to do with sentiment than fundamentals. All right, the semi-cap equipment names, the theory behind them.
Okay, I'm just sitting here watching the markets go sideways. 8 pivots. Meta's currently on the screen, watching Meta grinding higher.
These subsectors. I do
Nvidia
think
looking for a push higher.
These subsectors that you can't pick stocks. Scott, forgive me because I go to this often, but you didn't mention it. Cisco is in the early stages of what Oracle started to do 3 years ago. Oracle, prior to 3 years ago, was looked at as just a database company. They got this Oracle Cloud infrastructure going, and their multiples shot up from the high teens to now the low 30s. Cisco is in the early stages of doing the same thing, and for the same reason. The same drivers are there, which is you're building out all this infrastructure for AI. It's going to come to Cisco's benefit.
You know, there's an ugly side to this too. And if you take a look at a company, and this is to our point and to what they were saying on Salesforce, take a look at T-Tech Holdings. I used to own this a number of years ago. Stock traded up to 100, great momentum. They're call centers. So they're the first to be disintermediated by AI. It's reflecting the share price that's gone from 100 down to 5. And the fear is that you see that with Adobe, because by these chips and by AI, you're empowering businesses to create the products that Salesforce has and that others have. And not only that, tailored to their specific needs rather than general product at cheaper prices.
Well, there's a chart for you to show, I guess, the story that you're talking about.
Yeah.
What was, I don't know what the high was, but
$105
stock.
Yeah.
What's the market cap now?
Market cap, it's a micro cap, 248 million. It traded at 100, as recently, or 120 actually was a peak.
That's even lower now than that's even lower now than the threshold of what we even talk about on this program. It's only relevant because of the slide from $100 to 5.
They're talking about T-Tech call centers.
To Steve's point,
AI is taking care of a lot of this. Moved from 100 down to $5. Same thing happened with Palm. Remember Palm Pilot?
absolutely, because it's cannibalizing the existing products that they have and that they've put in place.
So let me just move on, because aside from tech, which we've spent a good amount of time on, it really has been a large cap move that's carried the market to new highs. It's why the S&P so dramatically outperformed the equal weight, because it's the big guns in the market are the ones that are performing. Caterpillar, for example, up 47% since the April bottom. Disney up 49% since the April bottom. Netflix is up 46% since the bottom. You get the theme here. I bring all three of those up because there were calls today. Caterpillar upgraded at Melius. Quote, we're coming back to a buy rating after a short 6 months on the sidelines. Weiss, you own that stock, and you did buy more of the XLI today, which is the industrials ETF.
Yeah, so look, the tax bill undisputably is going to help companies that sell equipment, not $100 machines, $100 million machines like Asmel, but Caterpillar and other equipment. And the ability to deduct that is great rather than amortizing it. And you have that, but it just extended made it better. So, and I do believe that you'll see a resurgence in the economy as soon as we get the tariff situation settled. So I don't regard this as expensive. In the old days, it probably was an inflated multiple, but under the new valuation paradigm in the market, where I would argue that the market's insensitive to valuation.
Broadcom is on the move.
Buy when I bought it. And then, as I mentioned, I think last week before, I sized up the position to a core position.
Broadcom on the move.
To the XLI, because I'm doing work on a number of components in the XLI. And before I'm able to do my work, I think you continue to see it move upward. This is breaking out. So I wanted to add to that position to participate.
I mentioned Disney, 140, goes to 140 from 125. That's at Citi. They still want you to buy it. We believe earnings will focus on performance of domestic parks, direct-to-consumer profitability, and the upcoming launch of the ESPN flagship product. Jimmy, you own it again, 49% since the bottom.
That was a pretty strong list of positives that you just went through from the analyst, and I totally agree. There's a lot of shots on goal here. Now, the stock right now is consolidating in this $120 to $125 range after the gains that you pointed out, Scott. I think probably that it's not going to do too much other than this range until the next earnings report comes out. It trades at around 20 times a forward multiple. It's not cheap. It's not terribly expensive, but for it to go higher from here, it's going to have to outperform on earnings, which it's done solidly for the last 2 years. And based on all the things that you just listed, which I totally agree, I think it will continue to outperform on earnings. Steve, you just mentioned a resurgence in the economy. People are going to go, they already are going on the cruise lines. They're going to Disney World, Disneyland. It doesn't matter what the ticket prices are. They are going. It'll show up in earnings.
There was a downgrade the other day of Netflix for no other reason than the stock has just been one of the best in the market for this year. And it is up 46% since the April bottom. There's your year-to-date chart, which is, you take that period out, obviously. It has been a place to play offense and defense. Joe, I'll give you this one. Citi reiterates it neutral today. They've had a huge run. We expect Netflix to report its revenue and EBIT modestly ahead of sell-side estimates.
Yeah, but then the following quarter after that, I think you're going to see an uptick. The content, the suite of content for the end of 2025 looks excellent. The live sports programming, I think you stay with Netflix, and any opportunity you get to buy it on a dip, you want to do that. I would also put Spotify in that same conversation. Both of those stocks are slightly higher today. Both of those stocks last several days have had mild correction.
All right, financials. I want to talk about those two because they've played a big part. Certainly JPM and Goldman have. That's why financials as a group have been at a record high as well. They report earnings next week. You guys already know that. Several downgrades yesterday, a week ahead of the earnings. Now you get some upgrades. KBW says JP Morgan and Morgan Stanley outperform. Jimmy, you want to take JPM?
Yeah, I mean, I've said this for quite some time that if you're going to own any of the financial stocks, and this goes for any sector, frankly, you have to own the best of breed. I do think JP Morgan is at the top of the list. We can argue about whether Goldman Sachs or somebody else, but, it's in that category. Then after that, you fill in around it. Now, JP Morgan is not cheap relative to the rest of them, but that's okay. It is the leader. And what we've seen with JP Morgan is when things go wrong in the financial sector, not my prediction, but that they come out of it looking stronger. We can look 2 years ago when they picked up First Republic and the assets there. That's the beauty of being the biggest and the best in any sector. So I do like JP Morgan here because fundamentally, I like the financial sector with less regulation and with a booming economy.
BofA says of the earnings that are coming up, the stocks are likely to need support from positive EPS revisions. They do obviously like the large cap U.S. banks. It just brings me back to what Mike Mayo has always said, right? Goliath is winning, I think was the way that he talked about those. Joe, Goldman, if you're going to have a renewed IPO and M&A cycle, well, no surprise that one's been doing well.
And you are already having that. M&A is up 6% year on year. We're seeing a little bit of a turnaround. May was a very strong month as it relates to M&A. Investment banking's been very strong. I always talk about the engagement of the retail community. They are participating in the markets. I think the other thing that's benefited a lot of these large money center banks, and I'm of the belief you stay with them in terms of positioning. I'm obviously long JP Morgan personally, and through the ETF, I'm long Goldman Sachs personally, but you stay with this. I think the other thing that has happened is you have seen a positioning rotation. 6 months ago, we were on this desk talking about the financial sector, about what? Insurance companies, and the strength of insurance companies within the financial sector, whether it was Progressive or Travelers. Look at the charts of all these insurance companies. Property and casualty insurance brokers have rolled over. Where have the capital actually gone? It's gone into the money center banks. It's not going into regional banks. Regional banks right now somewhat conflicted in terms of where their near-term direction is.
You have a lot of those.
I do, and the ones that are working, Huntington Bank is working. I know that got a downgrade. Citizens Financial is working. M&T's working, but I have others that aren't working. Regions, super regional, USB not working.
Are they going to
First
work in this?
Citizens,
Are they going to work in the
Cincinnati
second half of the
Financial.
year?
I don't know that we're going to see the fundamental tailwind in any of these. Right now, my sentiment surrounding regionals is somewhat unsure about the direction that they're going to take because I don't see conviction in the earnings or conviction in the technicals
Why on the
themselves.
regionals when the strongest tailwinds are in the larger banks?
So the regionals
For the upside. For the upside that you haven't gotten.
But
Like,
my
where's the
point is, I
outperformance
think
going to
the
come from
upside's-
here?
I think the upside's muted, and that's the point I'm trying to make.
I think from a fundamental perspective, I agree with you. I want to have the ownership of the large money center banks over the regionals, but I understand why the strategy went into the regional banks. It had a strong lift at the end of the year on the belief that the regionals would get strong regulatory relief and earnings growth and a favorable economic environment. I don't know if that's been reality or not.
I want to point out a lot of times people like me and others talk about deregulation. We kind of throw it out there. Let's put some more detail to that. The stress test that came out from the Fed a couple of weeks ago made it clear that these companies are well capitalized and they're going to return capital to shareholders. You also have the supplemental leverage ratio, which looked like it's going to be reduced or at least taken away, which gives more room for these companies to return capital to shareholders. Those are the sort of things that we're talking about when we talk about deregulation.
Charles Schwab, Interactive Brokers, Robinhood, those three names. I think each one of them strong tailwinds behind.
I just can't get. I keep looking at Robinhood and valuation can't get there.
All right, we're going to take a break. When we come back, Bill Baruch is going to join us. He just launched a new portfolio. We're going to tell you what's in it and how you can play it in 2 minutes.
Potential in China. We're looking for a strategic partner with like-minded values, and we remain committed to China and want to retain a meaningful stake in the business. Once again, that could look like around 30%, but this has been a company that has struggled in the region lately. We see shares rising up more than 1% in early hours trading this morning after the company had turned flat as far as same-store sales growth last quarter, but that was after a couple of quarters of negative sales growth, dropping as much as 14%. And what I've heard from sources in the area is that they've struggled to really keep up with Luckin Coffee, with Young China when it comes to that low price model, really rapid innovation. They're constantly churning new items to keep those Chinese consumers engaged. And in addition to that, when you think about the sheer store presence that Luckin Coffee has versus China's Starbucks, Starbucks in China only has about 8,000 stores. Luckin Coffee has more than 20,000 stores. And so just really struggling to keep up here, and investors certainly really looking and waging what exactly this sale could look like. And of course, the talk here at Yahoo Finance offices has been that Luckin is opened close to our office. So obviously Luckin is also now sort of meeting Starbucks on its home turf. What do we know about their plans in the U.S.? Yeah, one analyst actually noted in a note that she had gone to that Luckin Coffee, she had visited, and it actually was a bit higher price than what she had thought when it came to the matcha and the lattes. And so it's interesting to see. Luckin Coffee certainly has won over their playbook in China. When they expand here to the U.S., will they sort of change and iterate their model based on what American consumers are willing to pay up for? Right. And so certainly that's something to look out for. We know that Young China, Luckin Coffee, they have an eye and a pulse. But opening up in New York, a big move for them, certainly goes to show that they're not just a competitor in China, but really looking to become this global presence as well. Clearly, we need to go do some market research. We absolutely do, Julie. Thanks, Brooke. Appreciate it. We got much more markets action coming up. Stay tuned. You're watching Market Catalyst.
Not all sweat comes from suffering. Sweat X replenishes your body with 8 ions of Zero sugar and 0 calories. Swear OS. Hydrate your thirst for fun. And Doheni's, we know that your pool is your personal paradise. And when it's been too long, the perfect pool day can't come soon.
All right, we got Broadcom surging here. Broadcom surging.
With everything you need to make your pool perfect. Doheni's is your pool supply superstore. With fast, free shipping and our lowest price guarantee every day. Make every day a perfect pool day.
Stock is off about 28%. You know, was a 20% holding in that 2022 on. Now, this is focused on mining. And we're doing the same concept. Own no more than 10 names. And I'm talking about on there too. Gold's in a generational breakout. We think there is still tremendous upside. Think about this. Your gold represents 20% of all reserve assets of all central banks in the world. It's now surpassed the euro. And people have talked about Basel III for the last few years. It's been in works, but gold is now a tier 1 asset actually as of July of 2025. So this month has actually began. These central banks are buying gold, and mark my words, I mean, you're going to see gold to begin to back currencies, so maybe down the road, back the Chinese yuan or a stable coin dollar. So really what this means is it expands, it makes it sticky cash flow margins for these miners. And we think we're in a tremendous super cycle for miners.
So hang on 2 seconds. Can we please put back up the list of the stocks that are in here? Because I want to make sure our viewers understand the actual names that are in your new portfolio. And I want you to talk about some of them, why specifically you think that it's Agnico Eagle, it's Newmont, it's Barrick, it's Core Mining, it's Wheaton, it's First Majestic Silver, because obviously it's beyond gold.
Yeah, our focus is gold. We're leaning heavy into gold, but we are open. We do think things like silver or potentially copper miners can make their way in there. But here it is from the top is AEM, Newmont, and it's a three-headed horse race here. You know, and ultimately, AEM and Agnico is the best in breed. They have the best management. This stock has continued to break out to new record highs. I mean, the cash flow that these miners are seeing is going to continue to power them. But Newmont and Barrick, they do have some room to catch up. They can catch up. Newmont still has reached it's 50% below its 2022 high. Barrick, it's about 50% below its 2021 high. So we have these three-headed up top here. Their heaviest weight. We do acknowledge that we've seen a bit of a run this year, so we're taking our time and allocating to the portfolio and ramping it up here in the coming month. But these three up top, we like Wheaton Precious Metals. That's a WPM, a great, well-run company. Coeur, it's a Chicago-based company. I've talked about it on there before. We've owned it in our main portfolios on and off. Very well run by Mitch Krebs. They've actually made some tremendous acquisitions in silver, which leads me to talk about silver. We think silver has a lot of catching up to do to gold this year. Silver is just trading about $37. The gold-silver ratio has expanded out to 100, meaning gold has significantly outpaced silver. And we think silver can catch up. So First Majestic is in the bottom part of the portfolio, the bottom part of the 10 names. But we think it has a lot of volatility, but can really outperform to the upside if silver gets going.
Yeah. What'd you make of the president's 50% tariff on copper idea?
It came out as a surprise here. Luckily, you know, we're positioning in copper in our CTA, our metals CTA. That's something we've been talked about on air before. I just took it for face value that they're going to talk about this being a 50% tariff. I think there's some leg room to work through this before it's official. You know, I think the market itself was pretty shocked. Good run. We monetized that move in copper, kind of waiting for it to settle in. I think the interesting thing here is if we're going to put those type of tariffs on U.S. imports of copper, then we're going to understand where is the mining capacity going to come from. Freeport, we own in portfolios right now, and the portfolio that I talk about in most often. And we think they're really in a tremendous position here, in tremendous capacity with the leading capacity here in the U.S. at their El Paso, Texas facility. So we like the move. I think it's going to continue to be volatile, and we're taking our face value right now as news evolves.
All right, good stuff. Thanks for coming on. Appreciate that. That's Bill Baruch. Just real quick, you own Newmont, so your thoughts on this grouping of stocks that he has put together.
Well, obviously, there's strong momentum right now behind the precious metals. Just real quick on copper, Morgan Stanley put out this morning, 36% of copper demand in the United States comes from imports. So let's be careful here. Freeport-McMoRan obviously is the play. Phoenix-based company, Southern Copper, another Phoenix-based company. Those are the plays to have the correlation to rising U.S. copper prices, but size your position accordingly. I think there might be some variance here. Chile, one of the largest exporters of copper to the United States. Do they get some relief from the administration? Look, this affects everything. This affects data centers. This affects automobiles, power generation. This is a big deal for the economy. Let's see what the details are as we progress towards August 1st.
All right, the headlines with Silvana. Now, hi, Silvana.
Hey, Scott, good afternoon. President Biden's former White House doctor, Kevin O'Connor, is refusing to answer questions at a hearing before the House Oversight Committee, invoking doctor-client privilege and his Fifth Amendment rights. The committee is looking into the former president's alleged cognitive decline while in office. The fight between the White House and Harvard University is heating up. The Trump administration today said the Department of Homeland Security is planning to subpoena the school in response to Harvard's refusing requests for information about its exchange program certification. Meanwhile, the Department of Education and HHS said they notified the school's accreditor that it may have violated anti-discrimination laws, citing anti-Semitism on campus. And after 20 years as team principal, Red Bull has fired Christian Horner. In its statement today, Red Bull didn't share its reason for firing Horner, but said he will forever remain an important part of the team's history. The announcement comes more than a year after Horner was accused of misconduct toward a team employee. He was cleared after an investigation.
All right, Silvana. Thank you. That's Silvana. And now coming up, we have the setup. There are many stocks with some news to come in the days ahead. Taiwan Semi and Costco and Delta and more. We'll talk about it next.
All right, just watching Celsius. Yeah, Susie, all of this negative gamma here is actually fuel for Celsius to move higher. So this is fuel for the move higher. Currently, Celsius is trading where? It's trading at 46.52. 46.52. Let's go see time and sales and see if there's anything on Celsius.
Go back to the expectation to increase infrastructure spending in Germany. Fantastic. Germany's really struggling with finding workers to do the job, to build more bridges, to lay down new rail. So I think it's a mixed picture. It's really a question of trying to find how you take advantage of that stimulus and pick the opportunities, maybe more
Coinbase.
abroad here.
All right, Coinbase moving with Bitcoin. Coinbase been trending along this 9 EMA. Coinbase looks really strong. Okay, I believe, Frano, you mentioned it on Monday. A number of you mentioned Coinbase continues to grind. Bullish 9 EMA. What do you want, sweetie? You want something to eat? Here you go.
There's
Here.
just a way to think about what's driving
My
the
kitty cat.
performance with any particular
Here's
region.
my
So,
kitty
like we were
cat.
talking about earlier, NASDAQ, as we know, Max 7 is one, and it's been a key driver for the performance of U.S. equities, this year, last year. That's a
Love
theme
my
quite
kitty
aware of.
cats.
But you see a similar phenomenon when you look at emerging market equities. What's driven it big.
All right, Broadcom continues to move. Apple's trying to turn the corner.
It has been similar types of stuff within tech sector, within
There are several names with stuff coming up. Tom, on Sunday, monthly sales are out tomorrow. Why do you own that stock?
I've never actually believed that it could be anything but very strong. I mean, take a look at NVIDIA or the recent stats up. People are queuing off Taiwan Semi, which makes the chips for NVIDIA.
Hey, Joe, Costco reports June sales after the bell, and that is today.
Yes.
That's today. Were somewhat disappointing. Let me clarify. I wouldn't say disappointing, but certainly a slowdown relative to what we have been seeing. It looks like the trend of strong monthly sales gain.
Coinbase. Coinbase, nice move there. Broadcom back up to the highs. Broadcom.
Also reiterated overweight today, marketplace $58 price target. And the CEO will be on Squawk Box 7 a.m. 7 a.m. to be exact. It's an exclusive. Jay.
I think this is very simple. The analyst community is too negative. They slashed estimates understandably after April 2nd. This year's estimates went down 25%.
That's me selling a little Broadcom there. I have some Broadcom. Broadcom from, I want to say last week. Broadcom. I sold a little Broadcom there.
Definitely think so. To me, it's inarguable. I mean, we were talking about things like, we're not going to see, we're going to see layoffs, we're going to see empty shelves, nobody's going to travel, everybody's hunkering down.
It's obvious that the worst of the projections have not happened.
Yes.
Yeah.
So what,
You know what I'm saying?
I do know what you're saying. Let's go back to,
It's not like the data has been phenomenal, let's be honest.
yeah, but remember the recession predictions, which they had cropped up towards like close to 100%, and now they're back down to talk to 25, 30%. That's what I'm talking about. This is a company that
S&P looking for a pop in today. Maybe this rallies a bit. I would like to scale out a little more. Okay. We've been up for 2 weeks straight. This is week number 3. We do have a doji. Talked about this extensively over the last, I don't know, over the weekend and over Wednesday, Thursday. Talked about reducing risk into a second week, third week higher. The thinking is that we've managed on average to do 2 weeks maximum before pausing for a week. All right. So it's not, I mean, I'm still bullish. We're running the 9 EMA. Everything looks good. So I'm not bearish per se. I'm just reducing my risk because I know that these waves, Skier said it well yesterday. You have to be quick to take profits, especially on options trades, because you get these nice, like yesterday, Tesla, we had that beautiful move on Tesla, right? And then it just sold off. Okay. So yesterday, let me just turn off the extended hours. Okay. So yesterday we had this nice move. And we had fair value gaps all the way to the highs. Looked like this was going to break out. It went sideways, moved a bit higher, looked like it was going to break out, and then bam, it got slammed to the ground. Okay. So if you bought it at the open, you still had an opportunity to take some nice profits. But Tesla, not really cooperating that well. Netflix is turning back up. Meta's at the high of the day. Google's trying to produce a B-C pivot. So is Amazon. NVIDIA is producing BC pivots. Broadcom looking good. Tesla's trying to do something. Okay, Broadcom. Nice rally on Broadcom.
This type of strategy is to get close to expiration over the next couple of days. Vol's going to most likely or historically gets crushed post earnings. You want the stock to go up near 54, but anything that would remain less than the width of the diagonal is going to be profitability above maybe 51, 51 and a half. On this type of trade, you do have some higher risk on that short option going into expiration over the next couple of days also, so remember that. But the idea is you need to move to the upside. The option market price is about $3.10 move, plus or minus either way. So keep that in mind. But farmers low, this takes advantage of a move higher if the stock does that. It's going to be profitable. The apex profitability out near that 54 strike, but as I mentioned, when you think about that break even, it's going to be potential profitability. All right, good look at the call diagonal there. Delta into earnings tomorrow morning, but when we come back after this quick break, we're going to talk Caterpillar. This stock's just below its all-time highs, got upgraded today. Also, things are looking up with that China trade deal for Caterpillar and the optimism in the shares. Stick around.
Okay, Broadcom looking good. Broadcom looking good. Okay, there's a Spot Gamma training session at 1 o'clock today with JT, and I plan on listening in on that. Let's see. I wonder if he's going to do it on YouTube because I don't have it here. Maybe it was at 12. Oh shoot! I hope I didn't miss it. Okay, Broadcom's still pushing higher. There goes Amazon. Amazon turning up. BC pivots on Amazon.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Caterpillar stock, let's get a quick market update here as stocks have considerably consolidated over the last couple hours here, but far off recession highs. The benchmark S&P 500 up nearly 0.3%. Dow Jones Industrial Average fractionally higher. Nasdaq up just over 0.4%. Same for the small caps, the Russell 2000. So we'll see if we can hold on to these gains. All right, let's get into a discussion about the stock that got upgraded.
All right, so Amazon ABCD pattern. Amazon looks like Broadcom wants to keep going. I have more calls on Amazon on app Broadcom and Amazon. Okay, Amazon ABCD pattern right here. Okay, so
a share. But Kevin, this analyst at Melius put it to a buy from a whole $500. And you know what? The impact from China and the truce that we have with China right now lending some support to these shares over the last month or so.
I think when you look at this name and the fear that was out there about tariffs, about macroeconomics, about China exposure, all those things, this has just been another thing, a story of a bunch of potential risks that never came. And so this company continues to just outperform, sitting, just what, 0.5% off its all-time high, sitting around $400. Big price target raise today. So the overall, as the economy gets better, interest rates come down the second half of the year, looks pretty positive for a stock like Caterpillar that, they missed on earnings last quarter, and they lowered some EPS guidance. But this company makes a ton of money, Tom. Pay a healthy dividend when they, and this is a healthy company that makes a ton of money. So it did sell off with the rest of the market. But like I said, you look at 3 months, up 43% in the last 3 months. So the recovery in this name has been as strong as any out there.
Yep. So we hit last November about $18 a share. This analyst put a $400 or $500 price target on that. They just recently hiked their dividend also. But we got a bonus package here for you today here in Caterpillar. We got a couple different ways to look at this kind of based on that note. The first strategy we're going to take a look at is going to be a call butterfly here in Caterpillar. And this is on the August 1st weekly cycle. So it avoids earnings, which come that following week. Earnings tentatively set for the 5th of August. So going on to that August 1st weekly option series. So just about 3.5 weeks to expiration. We're going to buy one of the slightly in the money 395 strike calls. We're going to sell 2 of the 410 strike calls, and then buy 1 of the 415 strike calls. Unbalanced call butterfly to the upside, bullish, paying roughly about a $5.50 debit. It's trading a little bit higher. You pay there's your risk, $550. Break even, $400.50. Stock's basically there right now. It's trading closer to 580, 585 right now, so you'd have to pay a little bit more because the stock has moved higher. Kevin, you don't need a big move to the upside. You want it to go at or near that short strike, but even above the 415 strike, it's going to be nearly a double in profitability.
Tom, this is the key to what I refer to as the modern day butterfly, right? Where you give yourself a directional bias, you give yourself a
okay, here's Amazon. You can see the buy order block at the open. Okay, buy order block. Buy order block at the open. Okay, you had a buy order block right at the open. Okay. Your supply is overhit, Lakshya. Okay, supply. Okay, so now you got an ABCD pattern. Okay, so you want to look for these patterns because they're very profitable. Very profitable. When you see them, when you see the A and the B, you start looking for C. And once you see C, okay, you could put a stop underneath B right here if you didn't take it earlier today. Now it needs to get through. It obviously needs to get through that supply overhead. So that's your stop right now, just below this level. So if you were to enter right here, you got about a point upside before running into supply. Doesn't seem to be a problem today. Most stocks are pushing higher. There goes the S&P. S&P. SPY. Same thing. Okay, here's Here's the SPY. Okay, that's why I wanted to go long on those S&P big cap options. Okay, I was looking for C. We finally got C. It's a little slow, but we got C. All right, so we're looking for this to break out.
Same gear. Collected roughly on this $10 wide short put vertical, about $2.50 credit, trading closer to 220 right now because, as I mentioned, the stock's moving higher. Wide bid-ask spread, so price discovery may be warranted on these type of trades.
All right, watching ABCD patterns on.
But if you collect that 250 credit, that's what you can make, $250.
On this, okay, looking for a push through this area.
$380. Kevin, the break even on this one just at $387.50 if you collect a 250 credit. So you got a decent cushion to the downside.
The August 1st 390 put that you're shorting about a 2/3 chance, about a 67% chance probability of finishing out of the money, Tom. So yes, just like Alex's spread earlier today, a little bit on the aggressive side. But if you believe in this upgrade, if you believe that the downside in Caterpillar's limited, this is how you do it. You put on a traditional, strategy that is a short put vertical, and then you slide those strikes a little higher. The trade-off, it's lower probability finishing out of the money, but you collect more premium, Tom. So therefore, if you're right, you have a better chance of collecting more premium on that sale. So just a way to tweak the probabilities versus the credit taking in.
Yeah, and this goes back to kind of that discussion that we were having earlier when we were talking with Alex about his short put vertical, is that a lot of people feel like they missed these massive moves from those bottoms in April where, hey, you know what, maybe the stock never pulls back where you could buy it, where you want to buy it. You can still participate using the option market, give yourself a cushion, and even if it doesn't go down, you just get to keep that credit that you collect on this neutral to bullish short put vertical. All right, that's going to wrap it up for us today here on Fast Market. But make sure you stick around right here on the Schwab Network. Next Gen Investing is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, so let's see what Amazon's doing. Amazon ABCD pattern, Broadcom took some profits off in the strength, supply overhead. Broadcom, not a lot. It doesn't show up as a lot. Broadcom is trading at all-time highs, right? So Broadcom trading at all-time highs. So you're not going to get a whole lot of supply overhead, only because we haven't been here before. NVIDIA, we're looking for a breakout. NVIDIA. The daily looking good. The daily looks good on NVIDIA. Get a 5-minute chart. You can see an ABCD pattern. Here's A. Here's B. Okay, and we're looks like it might be a C. All right, if we don't drop off here. This is kind of like a trick yesterday on Tesla. It looked like it was going to continue higher. Tesla rolled over and stuck a lot of people with a swing or a stop.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis.
Okay, so we're watching that hedging flow is starting to turn up a little bit more. Looking for that to start to turn up like it was this morning. S&P.
Head over to schwab.com/coaching and start learning today.
Okay. What's NVIDIA doing? Looking at NVIDIA. Looking for that hedging flow, looking for the hedging flow on NVIDIA to continue. What about S&P spiders? S&P spiders. Hedging flow on S&P spiders. Pretty flat for the most part. Let's see what Apple's doing. Apple's starting to turn. Okay. You're watching the Apple flow.
Being Apple and Tesla as we do check in on things in the tech world, and also important to note as this is one of the most important headlines of the session.
Let's see what basket of S&P equities, a basket of S&P equities. That's turned up, so that's looking pretty good.
Which is, I think, a good thing, of course, for the market when you put that into perspective. But it is a market that has sold off its highs by quite a margin. And to your point, NVIDIA really going to dominate the headlines once again.
It really is. And I think that it's frankly amazing when we're comparing these sides.
Okay.
I mean, a great
Let's see. Google, Meta, Broadcom, Snowflake not doing much today. Snowflake. Tesla's kind of sleepy. Tesla's sleeping. I'm going to take a 2-minute break. I'll be right back.
Always on our show, we'll kick things off with some nice food-focused movers to get you hungry this noon hour here in Chicagoland. We'll also be charting the various moves we've seen in Disney as well as Netflix in the media world, as well as talking more about NVIDIA for FOMO, of course, as well as Broadcom today catching an upgrade from JP Morgan. And we will close things out with Bloom Energy, which is a name right now seeing also an upgrade at JP Morgan following some overall turbulence right now in the energy and alternative energy space, of course, as a result of the big, beautiful bill.
Yeah, looking forward to that discussion later on. But speaking of alternative energy, we can get into some of our movers here, starting with Monster, different type of energy, but certainly an alternative way to get some caffeine in the morning for those who crave it.
Yeah, absolutely. So I actually was discussing this name with Nicole Panalides earlier today, and I learned something fascinating. So Red Bull was unveiled to the markets about 15 years before Monster Energy did actually release its brand of energy drinks. It was first in 2002, but Celsius was only about 2 years later. So I always just associate Monster and Red Bull as like the stalwarts of the energy drink space, but actually Celsius just newer to the public markets, not a whole lot newer than perhaps even Monster. Just for some interesting context, but Rothschild today downgrading shares to neutral from buy. Price target was cut to 60, down from 63, citing the U.S. government raising its tariff on imported aluminum from 25 to 50% for the downgrade. While Monster, they did say just still have hedges in place to at least delay some of the tariff impacted. By 2026, they will be facing this aluminum cost inflation just as U.S. price increases roll off. So I think this is a really important narrative. Coca-Cola has been outspoken about this as well, and they're a major long-standing distribution partner of Monster Energy. So it definitely goes to show that not just Monster reeling from some of these tariffs, but something that's going to weigh on, unfortunately, the price of my beloved daily drink, which is a nice cold Monster.
Yeah, it's interesting to your point too about the Celsius history being maybe not fully understood, but they didn't launch a product in this energy drink space until 2009, and they actually launched in Sweden despite being a company based out of Florida. So a little bit later to the market, but really what I've always thought about of Celsius is what it's done for this space to kind of tie it back to Monster. Like, what do you think of Monster, at least in its origin? You think of the limeish green, neon green, claw, mark M. That is, of course, the logo of the company, in association with things like the X Games and snowboarding and skateboarding and action sports and motocross. And yeah, it was a good way to kind of bring, high energy, sports, high energy drink. But what did Celsius do? It partnered with a lot of podcasting and new media and streamers and all of those types of things that really, have done really well for a lot of companies that have successfully used them. But it changed the conversation to a healthy alternative or a fitness drink or something that could be taken instead of coffee, instead of tea. And Monster benefited from that.
It's true. And great point there, right? I feel like the key difference of the two is that Celsius, and now, of course, owning Alani Nu, targeted much more of that female Gen Z demographic, whereas Monster was definitely, at least in its inception, more male focused, more sort of like the alternative games focus.
Motocross, like motorcycle. This is what I think of when I think of it.
That's exactly why I drink Monster. No, just kidding. I mean, I wish I could say that, but I've been a tried and true fan for far too long, and I think, unfortunately, maybe for my overall health. But as we know, when you talk about these vices, it's very difficult to trade down when it's a habit that you have formed, which I think speaks to some of the resiliency of our next name, which is Starbucks. Every single time I walk into a Starbucks, I am amazed at how much one single drink costs. I will admit I probably get like the most ridiculous drinks, but still an expensive staple at that. But definitely has its loyal enthusiasts. Has some company-specific missteps as of late, but some developments we've seen now reportedly attracting some strong investor interest in its China unit, with potential stake valuations reaching as much as $10 billion. So reports today indicated that close to 30 PE firms, both domestic and international, have now submitted non-binding bids for a stake in their China business. Again, valuations range between 5 and 10 billion. Most offers, though, leaning towards the upper end of that spectrum, according to reports. But the strategic review is reflecting the overall mounting pressures from some of the competition in China, which has significantly impacted their market position. Actually, according to an international data firm, Euromonitor, the company's market share plummeted from 34% back in 2019 pre-pandemic to around 14% in 2024. So Starbucks has that they do plan to keep a significant stake, and they emphasize any deal must make sense in terms of business and their partners, but they're likely to retain, according to these sources, about 30% of that unit. We'll have to see how, of course, how this further unfolds.
Yeah, I think of Starbucks as a company that, does charge a premium for something that you can do at home, but it's the experience, it's the routine, it's the simplicity of being able to just pick it up on the go. It's certainly a company that capitalizes on, a working population. It was kind of an interesting time during the pandemic when, behavior shifts happened, and, to see it kind of rotating away from some of its, once thought of as growth opportunities internationally is something to take note of. But this is a company that under its new leadership is trying to get back to basics and focus on efficiencies. You talked about, how expensive one drink is, but if it allows for a million different combinations and customizations, and you only got 2 or 3 people working at any given time, like, it's just a lot. And they're going to have way more ingredients on hand. What made Starbucks successful was simplicity, efficiency, and, a quality that was, consistent. And so they did expand into food, and that's been successful to some extent too. But getting back to basics for Starbucks, what they got to focus on right now.
The option where you can basically get your own utensils and straws again, which I love because I did not like that you had no control over the end portion of your order. Although I will admit I do not frequent Starbucks very often because of the high price tag. You're a Starbucks drinker, those occasionally, right?
I'm not loyal to it any more than anything else. I will say though, I do like the breakfast sandwich because it's consistent. It is again, and so. In those sense, it's no different than the everyday coffee shop. Sometimes the everyday coffee shop is better. Sometimes it's worse. But I tell you what, Starbucks is all over the place.
And that's where it always gets me, the convenience. And that's, I think, the benefit of having so many retail locations. But next thing today here is Wingstop. So William Blair initiating coverage with an outperform rating, saying the company has posted a remarkable, now 21 straight years of positive same-store sales due to its broadening consumer appeal, its value-centric menu, and growing digital presence. So they believe that Wingstop's goal of achieving now average unit volumes of 3 million can be achieved in less than a decade. So overall coverage on this name is overwhelmingly positive. You have 25 analysts, and 18 of them are biased, and there's 7 holds and no bears in this name. And just because now we're on the food kick here, I will say I recently frequented Wingstop, and I feel like the quality is also significantly improved from years and years ago, where it does continue to drive those repeat customers.
Yeah, I think if you would have asked me a few years ago if I would have been a Buffalo Wild Wings or a Wingstop fan, given those were the only 2 choices, I probably would have said Buffalo Wild Wings.
Me too.
That would have been the answer today. So I think it goes to show that, some of it's just going to be locations. Maybe I'm slightly closer to a Wingstop now, but definitely a company that I think is forgotten about sometimes, but not in a trading standpoint, because the last, let's call it 1.5 years, 2 years, have been really weirdly volatile for this company that you would think would be fairly straightforward, right? It's a restaurant business. It's someone in this fast, convenient, space. But the stock has gone from, let's call it $200 a share up to $430, back to $200 a share, back to almost 400, and now it sits in the mid 300s. So super volatile. I would call it mid-range for the last 2 years, and the chart on the screen reflects that.
Okay, and actually speaks perfectly to our next name, which has been also fairly mid-range. That's McDonald's, which is actually our smallest gainer on the year of this group, as it's only risen about 1% on a year-to-date basis. Now, McDonald's is different because there's a huge international component, as well as even a real estate offering, because they own just so many locations. So there's a lot of elements to consider when looking at McDonald's. It's so massive, but right now we are at least seeing some updates as far as its menu. Now, for half a century, we've seen the basic breakfast sandwich, which is their Egg McMuffin, remain the same, but apparently that may be too basic for some diners, because now we're seeing more and more demands for these flavors, and the Egg McMuffin will now, for a limited time, be coming in a spicy McMuffin, what the chain is calling a fiery, delicious twist, all thanks to the slathering of this pepper sauce, which sounds, frankly, very good. But
a lot of description in that.
I know. Well, I was reading it straight from the company, so I was really enjoying the descriptive language there. But these additions have become more normal across the fast food landscape, as we've seen them boost some of their offerings in the chicken sandwich space. So McDonald's is trying to innovate here. Will this be enough to revive the story? It's a good question, but as much as we talk about the loyalty to a Starbucks or your energy drink brand of choice, there's also very much a loyalty to McDonald's breakfast.
Yeah, McDonald's breakfast is similar to how I feel about Starbucks. Consistent, you know what you're going to get, reliable, quick, efficient, and there's tons of locations. So, you're on the way to the golf course, you're on a road trip. It's an easy answer to the problem of, what am I going to get when I don't have to give up a bunch of time in, a morning or while I'm on the road and just want to get home. So McDonald's for that has always been consistent. And the big issue for McDonald's has been its price has gone up so much that it can no longer feel like you're getting a good deal, because going to an Olive Garden, yeah, it's going to be more expensive, but like the perception is that it's not that much more now. And so not that you're going to make the decision every day between, do I want to get McDonald's or do I want to get Olive Garden? But if you're going to, go out of the house, get food, there's places that are perceived as higher quality, better experience, that aren't that much more expensive at the moment. But when it comes from trading, we got 3 years up on the screen. $300 has been to McDonald's as like the mid to low teens has been for Ford. It's just like a brick wall it can't get through. It has spent a little bit of time above that, but it keeps coming back to this area. And so if I was looking at this from a trading standpoint, yeah, it can make a lot of sense for an investor just to have, consumer staple exposure, value type of income investment. For those that it makes sense, it's defensive. But from a trading standpoint, 300 is just like the most important level. It's like a magnet. It goes away, comes back from both directions. And until it proves otherwise, that's how I would look at this thing.
Yeah, and to your point, still off of those highs by about 10% or some change. Well, being off lows by about almost 20%, so there's that to consider, but not looking as technically enthusiastic as some of our other high-growth restaurant stocks that we frequently cover.
Okay, so NVIDIA is starting to pull back a bit. Tesla did this yesterday, so be careful. If this doesn't get a follow through, this C pivot going to stop right in this area. Okay, watch that. NVIDIA, okay. All right, some of these stocks are starting to see a little profit taking. Apple looking a lot better. Apple looking like it might run back up. Okay, I might try something here on Apple. Okay, you got supply overhead. That's $2 overhead. $1.50 overhead. I'm gonna try something with Apple here. Let's see if Apple can do something. Apple. I'm gonna go for some cheap lottos for Friday. Maybe I'll do next week's Friday. Okay, I'll do some 40 deltas maybe. Apple. Let me see what I have. I have Apple. I have AAPX from earlier. Maybe I'll take some AAPX. Okay. I add to that by the market. Okay, AAPX. Just bought some AAPX at the low. All right. Apple. What do I want to do here? Apple. I have Friday's 212s. Okay, that's right up there. 212s. Maybe I'll buy some of those 212. Apple 212s for Friday. They are an 18-20 delta, so it's more of a lotto trade. It's not really that high reward. Okay, so
Trading Schwab is now powered by America, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
okay, Apple looking for a turn.
It's now time to dive into the technicals with our chart master, because you can. You're looking at two names that operate in similar spaces, but very, very different all the same time. We're looking at Disney and Netflix. And Disney today is modestly lower, about 0.8%, but has been in a really nice.
Disney is just like slow as molasses, right? Okay, Apple turning up here.
Stocks a big swing to the downside, bottoming out in early
early April in tandem with those tariff announcements here. But as you said, a big recovery here. We are back up about 25% off of that low point here near the 80 level. For now, though, also looking like a breakout is still underway. You can see we have our two green lines here near about 108 and 115, marking the floor and the ceiling for the most part of this range here. That then became a further resistance point and then supported area around 115 again there. So that seemed like a notable level to watch. We retested it, held on, and continued the rally. However, for now,
Okay, look at the buy order blocks on
124.60.
Apple.
Draw this channel type shape here. One trend line.
Looking for this to run up.
Lows in the conventional way. Duplicate it. Put it across the highs. It matches up fairly well. You could use that as well to project some potential resistance around that same area. One thing many technicians may have taken note of, though, is bearish divergence on the RSI.
Okay, nice move on Apple coming off the buy order block there. Okay, so you can see this as an A pattern, ABCD pattern, A. I'm going to post this on StockTwits, so we might get some people that are interested. C, B, that's C. This is B. Buy order block.
Really were not looking too optimistic into the end of last year, but now recently, what does the overall
Supply overhead.
really point to here for when we zoom out from Disney shares?
Well, roughly where we topped out recently, around our +1 standard deviation channel. One standard deviation up here from our blue linear regression line, our line of best fit. So some traders use this as a source of potential resistance. It happened to line up with some other stuff right around this area. So this could be a point to watch going forward. We can see that there was a volume node here around 118, also coinciding with these old highs here. So that could be a further supportive area. Down here too, 111, 112, we got our linear regression line, our 63-day EMA, and our point of control for volume profile. All those come together right around 112. To look at a longer term chart as well, we have here a 5-year weekly chart showing, for the most part, price has held on near this 84 level, this green line here. There were some fluctuations, but as I said, for the most part, we held on above that area. 80 to 84 would be a key point to watch. The heavy volumes all the way down here at 91. We're pushing out of these heavy volume areas into the lower volume areas now. So perhaps, the way is paved here for some uptrend if things continue.
Yeah, I hope so, because it was a painful road to the downside, and then we've sort of chopped and bounced around, finally now finding some footing, although, again, lower today. So now we do consider Disney here for example purposes only. Of course, Alex, walk us through your thinking today. I know today is a pretty downbeat as far as its price performance, but at least recovering, which is something we haven't been able to say for Disney in quite some time.
Yeah, my thinking on this is quite similar to how I think about two names that you know well, which is Intel and NVIDIA. I see Disney as the Intel in streaming, and I see Netflix as the NVIDIA of streaming. Look at these chart performances, look at those two names. And so this is a name, in the case of Disney, that is struggling to get out of its own way, but it largely goes sideways in this range. And so we look at a neutral to bullish strategy for Disney, not necessarily looking for more upside, but maybe it just hangs on to these levels. Looking at the 120, 118 short put vertical in the August 1st expiration, $2 wide, not a huge trade in terms of notional value at risk, but 66-cent credit is about a third the width of the strike. Should have $134 in risk there, Jenny. Chance to make 66, 119.34. But like Intel, in a time when streaming has never been bigger, one of the biggest players has lost half its value essentially over the last several years. So, sometimes these performances are unacceptable if you're an investor.
And I know that they've tried to evaluate their pricing tiers. They've tried to take a page from of course, Netflix, who has seen a huge benefit of all of those freeloaders now having signed up for Netflix, which I can speak to on a personal account, but not really seeing that play out in the growth story for Disney at all, as we've seen, frankly, in a name like Netflix, which is now our next chart, fittingly so. Netflix has been, again, I think perfectly illustrated by performance, quite a different performer, especially as the late. I know they both made a nice run, but very hard to destiny to the behemoth that is the Netflix.
A different chart from many other stocks that we've seen recently too. The tariff news lows right around here.
Okay, there goes Apple starting to move.
And then we've just been trending up since then. We were in the mid to low 800s during those lows. But then you can see blue trend line here was broken, trending down here. From there, a pretty strong rally to the upside, mostly contained within the boundaries of these two white dashed lines. We did top out here, 1341.15, trending a little bit lower. But now we're at the point where we had the breakout and we are retesting the old highs here. 1262 or so. That was around where price previously topped out. It lines up with our yellow 21-day exponential moving average. So we have a supportive confluence there potentially that would be notable if price were to slip below that level. But perhaps traders might also be looking for this to be a buying opportunity if they think the trend was going to continue.
Okay, Apple, nice little rally on Apple.
We can see, though, that momentum is breaking down a little bit. Some mixed signals here. For a while, we had bearish divergence on the RSI. Then we had this breakout and push to the upside that re-entered the overbought level. Now, though, our short-term green trend line has been interrupted. We are approaching that 50 midline once again here. So I'd be curious to see what happens if we do break down below this level near 1262 or so.
Okay. Obviously, the same was just recently right around its all-time high. So when looking at these names again, that feels very unusual. I know we've had a few this week that were at or near all-time highs, but not necessarily being the norm for a lot of these tech names. So when looking at Netflix here, what else do you watch for as far as longer-term or big-picture trends?
Sometimes using the volume profile study can help find these important trading areas here. So you can see the spikes on our blue bar graph on the right side of the screen come in here, right around 1300. Here is another heavy area that lines up with our linear regression line. That comes in near 1225 or so. And then also down here, once we start getting into 1100, 1150. So according to volume, those are the important areas here. So we also do have, like I said, the confluence of our old high point and our 21-day EMA, 1262 or so. If we were to keep moving higher, though, 1341, that's obviously the point the bulls will be looking to break above. From there, we could see one standard deviation channel, one standard deviation up from our linear regression line. That would come in near like 1420 right now. Remember, that would be a moving target. That would be this is just kind of a snapshot of this moment in time, but it's one of the few tools we have where we can try to project potential resistance in these.
All right, so we got a nice follow through. Pushing higher, S&P. Okay, the day is dwindling. Day is dwindling. Let me see what I got with the S&P 500.
Yeah, I definitely think that's been wide felt as Netflix continues to just make these new all-time highs in spite of the overall market not looking quite strong. So really great insight here on two important names in the media landscape, two names that definitely do at least my bank account in some part due to the streaming services. Of course,
Okay, it's 1:30 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Kind of a slow day. Had a nice run up in the morning to take profits into. That's why I like to take profits into strength on the first 15, 20, 30 minutes. And then reassess the markets. We look for those B and C pivots after about 11 o'clock. You can see very clearly many of these have done the same thing. S&P 500, Apple faded most of the day. And now we're setting up B and C pivots with supply overhead. The high at the opening right around 211. So if we get back up there, be a nice trade. Supply 200 day. This is the daily.
For next week, because we have earnings next week, and the idea was to be as close to the current price as possible. And the idea being then, hey, there's like $100 of potential ups or down just based off where options are pricing things right now over the next week. Well, if I'm close at the money and I have a $5 wide spread and it's equal risk to reward, I can basically say, I think Netflix is going to be higher after earnings by the end of next week. And if that's the case, I can make $250 on my $250 in risk. And if it doesn't, I only have $250 in risk. And of course, the opposite could be true if you think it's going to be lower. there is just so much more things to consider when you're talking about a stock that trades at 1,280 than there is for stocks that trade at 100. And so with this in mind, there is just a way to think about it. A $5 move is essentially nothing for a stock that is this much. And so break even at 1,280, it's quite possible that it's going to be either substantially above that or substantially below that. So you're risking one to make one. And in this case, it's the bullish look at a company that has been on an absolute tear to the upside.
Okay, also a great point because I just tend to forget that right now we are seeing shares escalate as much as they have. I mean, trading right now just over 1,276 a share. So yes, there is definitely.
And if you remember back when it was plunging 40% in a day.
Okay, Apple's still pushing here.
He puked it out. He was selling those shares at like $220. Okay, this stock has basically gone 6 times that. And he was selling it, of course, after buying it at like 270. So it went all the way.
All right, so apparently NVIDIA is planning to launch a new artificial intelligence chip designed specifically for China as soon as September. On Financial Times, NVIDIA's CEO to talk with Chinese officials next week, aiming for a September unveiling of a processor compliant with U.S. export controls.
The market cap of NVIDIA boasts today as it does touch now new records for the most valuable U.S. company. We'll also be discussing some analyst coverage with Broadcom and the broader AI and chip space.
Okay, Frank, take care, Frank. Okay, nice little move there.
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Okay, Apple's still pushing.
Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange.
Okay, Tesla, watching Tesla, nothing there. Apple, current trade on Apple, watching that flow, watching this flow.
Yeah, Schwab lets you invest and trade on your own. And if you want, they can even manage.
Okay, S&P, still moving sideways, above support, below resistance.
Schwab, a modern approach to wealth management.
Sell market knowledge and shift your perspective into full real-time example trades in full hour of trading. I'm Tom White. I'm Kevin Davis. Catch me on Fast Market. Weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab
Okay,
Network.
Tesla turning back down again. Tesla.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange.
What do you want, baby? What do you want?
News, experts, CEOs,
Hmm?
influencers, and
What do you want?
analysts. It's all available on Schwab Network.
All right, watching Apple. Apple. Could very well just stall right here as a doji and not do anything. Apple.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted
Pretty slow day. Volume-wise, volume is tapered off since the morning. Okay, Broadcom turning up. Broadcom turning back up.
Hey, Dan, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor Jennifer.
Broadcom trying to push a bit more.
Helping with the estate distribution.
I don't know what you want. What do you want? I fed you. There's food right there. Cat's not making any sense. What do you want?
Trading at Schwab is now powered by America, unlocking the power of Thinkorswim, award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with the best charting and analysis tools.
Okay, Broadcom looking good.
Tailor the platforms to your unique
Broadcom.
needs with nearly endless
Okay,
customization.
Broadcom.
And track market trends with up-to-the-minute news and insights.
Broadcom. Okay, we're not too far away. I got 280 calls on Broadcom for 25 July. Looking for Broadcom to make another move to the upside. Disappointed in ASST. ASST hasn't done much, just kind of deflated. Turned back down, so that didn't work out very well. Okay, so that's a dead one. Unless it bounces. Let's see, what do I have on ASST? I went after this after you guys got in. January 15 calls? Okay, January 15. Got a long way to go to get January 15s. Okay, Google looks like it wants to go. Apple looks like it wants to keep going. Apple looks like it wants to keep going. Okay, Microsoft turning now. Microsoft might be another play here. Microsoft. All-time highs on Microsoft. Okay, Microsoft turning.
To kind of split to deal with the issue on the table of selling or coming back to the potential of an outright ban. So this, according to Reuters, TikTok preparing a standalone U.S. version of the popular app with its own algorithm and data systems that potentially paves the way for a sale and could get that green light, as it were, by the Trump administration.
Okay, I'm going to buy some Microsoft. Let me see. What do I have? I think I sold all my Microsoft this morning. Okay, Microsoft. Yeah, I'm out of Microsoft. So let me go ahead and buy some Microsoft. I'm going to go for next week's calls because it is trending. Give myself a little bit more leeway, a little bit more rope to hang myself. Looks like an ABCD pattern. We'll see if it plays out. Microsoft. I'm going to go with a 42 Delta. Actually, yeah, 42 Delta. Buy a vertical. 42. What? Microsoft. 505, 4750. Let me see what the profit loss is. Yeah, that's good. Okay, Microsoft looks good. See if I can get this before it gets going here. Okay, I bought the 505, 50750 Microsoft.
Can be duplicated without China approval. It's still kind of murky, right? We know there's a political and trade backdrop around this as well. We know this follows that law that was put into place requiring ByteDance to divest TikTok's U.S. business by originally was supposed to be for January of this year. One of the issues that we know was circulating around this was national security concerns, and there were bipartisan concerns around this tied to potential influence of China's government. Now, we know TikTok briefly went dark, and so in January, the hope for many users is that that won't be the case this time around. So there is still some clarity that, investors want to know about when it comes to how this would look in terms of a U.S.-based operation.
Okay, Microsoft looking for a follow-through. Thank you, Corey. Thanks, Corey.
The response of some of the social media stocks, Meta is still higher today. It's got some optimism around it today, and it's been trading, higher overall year to date. It's not really moving the needle in terms of other social media platforms that we watch, like Snap or like Reddit, guys. It looks like the market
Was that Oppenheimer? Oppenheimer? Okay, so Microsoft. Okay, you can see a $4 upside.
The latest with TikTok and its U.S. operations. Thank you, Dan King Paul. Now, coming up next on Next Gen Investing, we're discussing NVIDIA and that $4 trillion market cap as the first U.S. company to
Microsoft.
achieve that major milestone.
All right, here we got an ABCD pattern on Microsoft. A, B, C, D, B. Okay, we got C, 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 Senior, B, C. Okay, whoops. Kind of a shallow BC. Let me just pull this like this. Okay. Okay, we'd like to see more volume. Okay. C. Stop. Buy. Order. Buy order.
Whether you're an experienced investor or just getting started,
No
Schwab offers a
supply.
webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more.
Okay, got a nice little follow through here.
Ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, Microsoft ABCD pattern.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network. Welcome back to Next Gen Investing. The biggest, arguably the biggest story of the day, because I don't know the last time I said $4 trillion as much as I have today. Of course, NVIDIA with that major milestone. Joining us is Marley Caden, contributor here for the network. And we're talking the latest with what has been a unstoppable, frankly, really record run for NVIDIA, now surpassing Apple's previous high.
I remember runs in the past like the, not to the degree that we're seeing, but I remember runs in the past like the April 7th, April 8th reversal back up to the highs. I remember those back in the past. I can't recall the exact times. February 2020, February, March 2020 when the markets reversed, very similar, but there were other times back in like 1998, 1997 where we had these epic runs. And, they're very profitable, obviously. So I'm still here. So I've been trading since 1987. So I plan on being around to 2087. Let's see, Apple, Microsoft. Okay, Microsoft.
Advantage on that. They had such a head start. Apple first closed at $1 trillion in 2018. Microsoft hit that mark in 19. For some perspective, NVIDIA closed for theirs $1 trillion in 2023. So they've gone from $1 trillion to the intraday $4 trillion, and as I think we probably expect at some point this year, they'll close in that $4 trillion mark in just a 2-year period. So even without that head start, they're still just a behemoth on the move. And they are on pace, as you said, Jenny, that market cap for Apple was $3.9 trillion. It does look like where they stand right now, if they close just where they are now, they will surpass that amount. Right now, they're trading at $3.97 trillion at the current stock price. So they do have to hit, to give you the exact number, 163.93 to close over the $4 trillion market cap. But where they stand right now, they will still close higher than Apple's record.
So here's a question for you. Is this one of those things that we like to talk about? It's a nice chyron on the bottom of the screen, or do you think this is really anything more than, you know, just one of those big round numbers that, you know, we cross from time to time?
Apple. Okay, starting to stall. Apple.
But I also think this is history. This is history being made. This is not the first time a company in a specific sector has hit this number. This is the first time in history a company has had a $4 trillion market cap.
Key point two on
Boyd
this,
Gaming.
this is actually
Okay, out of
where I
that.
really agree, is it also
All right, so
Apple's line at the same time. Apple had just fallen short, so it's also like
COIN, Coinbase, COIN,
was Nvidia yesterday,
COIN.
Nvidia the day before. We're watching it climb this mountain. It caught Apple, passed it, and now it's potentially crossing this massive milestone as well.
Yeah, I mean, it's still, even if they close right where they are right now, and they've been trading pretty tight in this range that will secure them the record if they close in that range. They will surpass that record that was set by Apple just in December. But I think to your point, Alex, too, it's not a continuation story of the mountain climb for the same company. We're in constant competition with Apple, and you know, Apple's market cap in here somewhere. Currently, they're in third. Microsoft is actually
almost a trillion behind that.
Yeah, I know. It was a trillion, not even close. I mean, this is a staggering fact to me because I love to look at market caps, but its valuation now bigger than the combined companies of Broadcom, Taiwan Semi, ASML, AMD, Texas Instruments, Qualcomm, ARM Applied Materials, Micron, Lam, and KLA Corp. So
And those are
wow.
huge names.
Huge.
Berkshire Hathaway, Tesla, JP Morgan behind them.
Yeah.
Okay, Apple. Apple looks like it wants to go. Coinbase. 60-minute Coinbase is trending.
Big deal. These are not small companies that we are comparing it to, and it's bigger than all of them combined.
Okay.
So $4 trillion, I can't even fathom that dollar amount, but appreciate it, of course, Marley Caden, for that wonderful insight on NVIDIA with a pretty record-setting day. And now to continue our broader tech conversation, I'd like to welcome in Jeremy Barnett, CEO and co-founder of Rad Intel. So Jeremy, thanks so much for joining us today. I mean, big tech has been so fun to talk about as we've seen this nice recovery. What really are you watching? It's a difficult question to answer here, but what really trends stick out to you right now?
Well, I think I always look to what Meta is doing. I think their motto is move fast and break you know what. So they're certainly being consistent with recent acquisitions, and they're kind of rolling things out a lot of times before they're even ready to hit the market. So I personally love that stuff. You know, a lot of people have conflicted views on whether they do or they don't like what Meta is doing.
Okay, Coinbase looking good. All right, Apple still pushing. Apple. Microsoft ABCD pattern, watching that. Apple looking for more upside on Apple. Supply overhead around 210, looking for a little bit more upside on Apple. Amazon, a little selling there. Amazon, somebody just sold some there. Just dropped off Amazon. S&P 500 looking for a rally.
That can help build these platforms that ultimately help either people doing whatever it is that their job entails to not only become more effective, but create more value for the companies they're working for.
Jeremy, one of the things that stuck out to me in
Broadcom watching. Okay.
we're starting to watch this race become more and more defined in terms of the names that are committed to it and the names that are maybe
All right, cyber, the security stocks continue to be bullish. Cyber, the security stock ETF, cybersecurity ETF. I have a position, pretty big position in cybersecurity. That way I don't have to follow or worry about earnings on any of these. Palo Alto moving higher, Zscaler. Okay, CrowdStrike. All these doing the same thing. Fortinet. Even Broadcom has some security, right? Didn't they bought Symantec. Okay, security wise, Broadcom at all-time highs, no supply overhead. CyberArk also bullish. So trading the CIBR makes a lot of sense. Okay. So This will be something I'll hold on to until cybersecurity changes. Maybe AI changes cybersecurity. I don't know, but AI has got to be a good thing and a bad thing when it comes to cybersecurity, right? Breaking codes, breaking passwords with AI and super chips, supercomputers I guess it makes it easier for hackers. But on the other side, cybersecurity using AI is also going to make it harder. So we'll see. Push pull. Okay, watching the S&P for another rally higher. Apple's still pushing here. Apple looking good. Watch Coinbase. I have half a position in Coinbase. I'd like to add another couple hundred shares of Coinbase, CONL. CONL.
With the addition of AI, is it going to make really bad creative any better? So if you really kind of take it from its pure context of why AI helps people be better at their jobs, whether it's in the creator economy or creating better assets to ultimately attract the customer.
Meta. Okay, back to VWAP. Looking for a bounce. Apple.
When you start thinking about these things, there's always this underlying fear of artificial intelligence is going to replace me at my job. And
Nah, not going to replace you. Not if you learn. Not if you learn AI. Okay, don't take those stupid courses that they have on the internet. Those are a waste of time and money.
If you're not fluent on these things,
I was working on some scripts last night. Had Grok working on them for Thinkorswim. Just told it what I wanted it to do. Came out with some pretty good results. Still working on it though.
companies are looking to find more and more folks that are willing to not only adopt these tools, but utilize these tools in different aspects of their business. So the creative economy as a whole, and that means a lot of different things to a lot of people. But if you think about it, it's trillions of different pieces of media that are put in front of us on a daily basis, and understanding how to influence these pieces of content in a way that matters to the target customer you're trying to attract. That's
High tech alert plus 800.
High tech alert. Okay, I knew this was going to happen. Yeah, sure you did, Benny. Okay, Amazon Prime Day, sales fall 41%. Blah, blah, blah. Okay.
Last thought here, someone who's got a front row seat to these technologies as they're evolving. Give us the medium to long
High tech alert.
where you see this going. It sounds like you see the workforce more.
High tech alert. Okay, we got a nice little pop there on the indices. S&P 500 popping up. Let's see if we can't get back up to the high. If we do, the calls that I bought earlier is going to be okay. Right now they're underwater as time passes by. There's not but 2 hours and 9 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I hope you're having a good day. I certainly am as well. A little bit slower than usual, but you can still make some money on stocks like Apple and Microsoft and Broadcom coming off the lows. You get Meta coming back to VWAP, looking for a bounce there. Snowflake is finally starting to turn. That might do something here. Snowflake. Let me just take a look at the dailies. Dailies hit or miss.
Just as good as the real thing. So if you think about the amount of
ABCD pattern though on Snowflake, I'm not going to take it.
Yeah, I think someone has taken far too many of those very Photoshop video editing classes. I think that's astounding to me, and it's definitely something that will be exciting to continue to follow as we go into the foreseeable future. But so appreciate your time today, Jeremy Barnett, CEO and co-founder.
Yeah, Jeremy Barnett.
Last but not least today, time to complete.
Okay. She's too bubbly. She's way too bubbly for me. It's always in a good mood. Being sarcastic. Snowflake, ABCD pattern. Apple looking good. Apple's looking really good here. Apple.
Most consumers would think the answer is yes, but for our competitors score, the answer is no. For VantageScore, we include that rental data. It's obvious that actually is a big indicator of credit worthiness. And as a result, many consumers are going to have a higher VantageScore and actually have a credit score for the first time by doing things like reporting their rental data to their credit score. We're the only major national score that does that. We're the first to do it. We also use very innovative new analytics techniques, and we're the first credit score to do that. So that's really what's behind the FHFA's decision. It's a big move.
Still pushing. Apple still pushing.
Move in the right direction at a time when, quite frankly, it's very difficult to buy a home.
Indeed it is.
Oh, look at Google dropping off. Holy smokes. Holy smokes.
How many people overall, and maybe underbanked people specifically, may be in a position to become
Oh.
buyers as a result?
Well, we estimate that of the 33 million
Okay.
total that Vantage
Don't like the way that looks. Don't like the way that looks. Google.
approximately 4.9 million of that group would be mortgage
Apple's still got a ways to go to get up to supply.
620 or above.
Oh,
620 is
yeah.
basically the minimum number
Apple.
that you need to qualify for a mortgage. And if you think about 1.83 adults in the typical household between
Still
ages
grinding.
25 and 65, that adds up to $1 trillion in incremental mortgages in the United States. So this is a big deal. And while we are very pleased about the FHFA's decision that was taken pursuant to the 2018 Credit Score Competition Act, we're very pleased about this for Vantage Score and its owners.
Apple.
Even more happy for the millions of forgotten Americans that are actually credit worthy and are going to get their first chance at a mortgage. Owning a home is a really key pathway to economic prosperity in America. It's a core part of the American dream, and we are just really excited to be a small contribution to enabling more people to get access to a mortgage and own their first home.
Silvio, just quickly, this rule change, if I understand it correctly, it does still give leeway for the FICO score to be used. It's more than it gives a choice, right? So, how will that choice be made, and what gives you the confidence that Vantage Score is the score that's going to be used?
Well, that confidence comes from the fact that in every segment where we've been able to compete, we have typically become the number 1 or 2 credit score provider. It's not well known, but
Okay, Apple's still pushing. Looking good. Apple. See if it can get some more out of this.
Use the Vantage Score today. The only reason why until yesterday Vantage Score was not used in mortgage is because of an unintended monopoly that was given to our competitor. That monopoly has now been demolished, and that means we're going to be able to compete because Vantage Score's score is more inclusive. It is also much more modern.
Okay, Google, somebody took some profits there, but it looks like it's trying to bounce right now. Amazon, same thing. Okay, I don't think that's a bad idea, by the way. We've been up for 2 weeks straight. This is the 3rd week. I'm still thinking we're going to be hanging out in this area. So taking profits quickly, as Skier put it very well yesterday, you got to be quick to take profits in this current environment. I agree 100%. Okay, so nice little follow through. Apple. Apple, everybody's saying the same thing in the media out there. Apple needs to acquire somebody. Wouldn't be surprised if they're in the process of talking to someone. Okay, Palantir still going. Palantir having a good day. Palantir. Palantir still going. Nice day on Palantir. Okay. Palantir. I mean, let me go check Palantir's. Palantir's looking good. Note the buy order blocks.
None of that was extrapolated if you look at the other 3 lines. None of that was extrapolated to the rest of the year. So I think that one thing that could be interesting for the rest of the year, especially for second quarter season, reporting season, is if companies just easily sort of skip over that bar, and if there's kind of going to be this solid
10:45. 10:45.
still sort of this elusive rate that keeps moving around. If you're not going to get any of that clarity until maybe the back half of the year, that probably keeps second quarter earnings in terms of beats in a relatively good spot. We just wrote about earnings in our most recent report a couple of days ago. our thought is that there's going to be, from a market standpoint, much more focus on the guidance aspect, maybe little, if any, focus on whether earnings and revenue are beating. I just think that a lot of the focus now turns to margins, especially because a lot of companies, they haven't even adjusted into their pricing yet. They're still working off of relatively solid inventories, but as that continues to wear down, and they have to think through that what they're going to do from a pricing standpoint, I think that turns all of the focus back up.
Keep pushing it down. the road.
Okay, looking good.
Yeah, we love that one. Kevin, thank you so much for being here. I really appreciate it. This was fun.
Yeah.
And that's it for Market Catalyst. I'm Julie Mooney. Thanks for watching. More Yahoo Finance coming up.
All right. Apple,
Master the markets and dare I say become a better investor.
Palantir, Palantir. Let me look at Palantir real quick. Palantir. Let's see what their hedging flow looks like. Okay, Palantir.
Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
President Trump's one big beautiful bill is now law. And Senate Budget Chairman Senator Lindsey Graham led the charge to get it done. Senator Graham and President Trump are delivering real results for you by extending the Trump tax cut, bolstering border security and funding for our military, rebuilding American manufacturing, and protecting our seniors. There's a reason Senator Lindsey Graham is endorsed by Trump and trusted by Trump. He delivers for you.
Thank you, Lindsay.
Palantir continues to push higher. Palantir. Palantir.
It's time for Yahoo Finance's Market Minute. Copper prices retreat from a record. Markets grappling with President Trump's threat to put a 50% tariff on imports of the metal. Copper imports have soared in recent weeks as the industry anticipated tariffs on imports. Starbucks looking for a strategic partner in China. A report from CNBC suggests the company has had multiple offers for its China business. Starbucks.
Okay, nice move on Palantir. Palantir.
Stake in that business. Shares of Bloom Energy Power. JP Morgan upgrades that stock from neutral to overweight for a million believes order activity can increase and tax credits for fuel cells push hesitant customers over the finish line. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks this second.
Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio simple.
Oh, there's our buddy. Kenny Polcari. Kenny Polcari's on. All right, I like this guy. He seems like a really good guy to hang out with and just shoot the breeze, you know.
I'm going to share my big take on how politics impacts the market.
Okay.
Warrior Money co-host Dan Kuth can discuss defense stocks and reveal my favorite Sicilian style and weedy with clams. It is delicious. Now let's jump into my big take. Let's be honest. Every investor loves to say, I don't care about politics. I just follow the numbers. That's a fantasy. Politics moves markets. Regulation,
Taxes, tariffs, foreign policy, even a stray tweet can trigger rallies, crashes, or entire sector rotations. If you're not paying attention to what's happening in Russia or Beijing,
Okay, Apple's still going. Apple, Palantir, Apple's looking good. Apple. Okay, Apple. Sorry about that.
will ruin you. The market overreacts to the noise. It corrects. Laws take months or
Kenny
years.
Polcarion.
Half of what's
I like this guy.
never really gets implemented. Traders who jump at every new development get chopped up, whipsawed by sentiment instead of capturing the real opportunity. Savvy investors do it differently. They tune out the noise and they tune into the policy. They watch for changes with real lasting impact. Tax reforms, major spending bills, trade deals, and regulatory shifts. They keep a close eye on sectors likely to be winners or losers and position themselves for what markets expect, not what's trending. Bottom line, you can't afford to ignore the politics. And you can't afford to become a political junkie either. Use policy as your weather forecast, not your GP. Stay alert, be ready to adjust, but don't let the headlines make your decision. The winners are the ones who filter out the static and act on what. Joining us today is Dan Coates, who's the co-host of Warrior Money here at Yahoo Finance.
Okay, looking really good. Apple's really cruising higher now, doing a nice job. Okay, looking good, Apple. All right, thank you very much. Apple, maybe take a little profits off of that.
I understand it was 12 years, 14 years ago today.
Well, 14 years ago today, 12 years full service.
12
I
years
was in
total service.
Ford still.
Okay, Apple pushing higher.
In law school, when you joined the army.
Yeah, but I was shaped by 9/11, as I know you were.
Right.
And I wanted to serve from the.
Okay, Apple's still going. All right, I'll let this go a bit more as the S&P continues higher.
They didn't want me there. But thank you for your service. I appreciate it. Thank you, sir.
I did not. I was mostly all U.S. based. There's some interesting work that I did.
Okay, Snowflake, ABCD pattern playing out. It's about to take out midday pivot highs. It's about to take out the midday pivot highs. Snowflake pushing higher. Okay, thank you very much. Thank you very much. All right, looking good. Palantir. Considering the markets aren't moving that much, it's really good to see a lot of these stocks forming ABCD patterns intraday, giving you great entries on the B and C pivots, like Apple, like Microsoft, like Broadcom. NVIDIA's just sputtering now. Meta's another good one. Axon jumping to the top of the NASDAQ 100. Axon, top of the NASDAQ.
So 50 years, 40, however many years it's been, and they're a regional nuisance. They've been a problem the whole time. They've created unrest and problems for everybody for such a long time.
And their neighbors right there, right around them.
And the worst
Okay, Axon number one. Okay, that's on the watch list. Axon.
President Trump stood up and said, "Hey, listen,
Enough. And look, and he didn't just say it. He said it all during the campaign. He'd been saying it all along. So no one can say he stood up and said, "Money, lost his mind."
Yeah.
No, 2 years he gave the base.
Yeah, I went on record actually, right, and say that I totally agree with his approach there.
Exxon.
There's another issue, which is should the president have to ask Congress for permission to do it? That's a whole other issue. Right?
Yeah.
But the reality is, like, come on, like they've been paying the ass for so long. It was enough time.
And look, and I would say
Okay, Netflix turning up. There goes Microsoft. Okay, all of these are starting to turn now. These are starting to turn. Okay, watch it. All of these are turning.
They didn't want to deal with it anymore.
You know, the world wants what we have. Right. They want capitalism. They want an economy that works. They want modernity. They don't want to go back to all those issues.
Right.
They want what we have and what they have. So It's only a matter of time.
Right, and I think, okay, so we get off that subject. I just think that, you know, as you moved into it, we saw what happened to the defense sector this year. And I mean, defense sector, not defensive name. I'm talking about the aerospace and defense.
Lockheed.
Lockheed, Raytheon, General Dynamics, Northrop Grumman. And in my note, actually, I think the day after, on the Monday after I actually highlighted all the defense companies, Lockheed Martin, all the roles that they played in terms of either the bombs or the planes that carried them, or the ship that launched them from the sea, right? The Patriot missiles.
The defense missiles.
Right, the defense industry and how they all played a role, how those stocks have actually been performing. But in fact, I think the defense sector is the sector you like.
Yes, I actually call it the national security sector, but yeah, I get you.
Right, the national security.
I get you. I got you. Because we're evolving from a defense sector to a national security sector. Right. Have to be dual use. It isn't just a matter of like, let's do the missiles and bombs. You've got to also do the infrastructure.
Right. And I think, you know, and so yes, then you have to do the infrastructure behind it, and I think that's all very important. But I also think in terms of investors, that they have to have exposure to this. Right?
Okay, it looks good. There goes Palantir breaking out the new highs. Palantir.
The fact is, I think if you want part of the well-balanced portfolio, you have to consider national security.
Yeah, national
It's really
security.
global. Quite honestly, I think it's global security.
Yeah, national security is economic security. At the end of the day, they feed one another, right? So our Navy patrols petroleum and patrols shipping lines, it shows all those things. Like it's national security, it's economic security.
So talk about today's modern warfare versus so the growing role of AI, drones, and kind of the cyber world in the defense.
Yeah, my favorite story is to say that the Civil War was when it was won by the rifle.
Right.
Then World War II was won by mass production. This age that we're going into right now is AI cyber. Right. That is the world that we're moving into.
And that's going to be the next kind of frontier for.
I mean, you don't want to be fighting war. You don't want to be fighting the last year's war. That's what happened in Vietnam. That's what happened in the Civil War. You don't want to be like fighting the last generation war, right? This war.
Okay, everything's going.
We can talk about that in the future. Like the one that's being prepared for.
Okay, there goes Apple. Apple doing really well.
It's a space war. It's an AI.
Okay, Apple.
So it is a full nonstop issue. You have that energy to support these initiatives.
Right. So especially because when you look at the way drones have played a role in the Middle East conflict, not just Iran and Ukraine, right? How that played a role.
Kenny had this. There goes Apple. Kenny had this lemon fettuccine, lemon something fettuccine. I wasn't fast enough with my phone. You can have a little barcode, not a barcode, one of those QR codes, whatever, on the screen. I wasn't fast enough to get it. I want to get that recipe from him. Sounded really good. Lemon butter fettuccine, whatever it was. Sounded really good.
It's going from $250,000 drones to $10,000 drones. They don't care what happens. So they blow them up. They blow them up. Exactly what happens.
And then, and so I think the other thing that look at either the way the Israelis did it with the cages that blew up, I think everybody woke up to kind of what this new pace of
the amount of time that they had to prepare and seed for that to happen. Right. It's just unbelievable. It's unfathomable how much time they had to put in. Right. They had to trace networks. They had to keep that had to have been a decade long thing. And
Apple coming up to supply, almost the high of the day now. Futures, S&P continues higher. Looking really good here. Okay, looking good. Looking good. Ba-da-bum-bum-ba-da-bum. Sing it, Janice. I really like Janis Joplin when she'd do some really nice songs. Not the screaming part. I couldn't get over the screaming, but she did have a good voice. Janis Joplin.
It's unbelievable. It's also ingenious.
So talk about companies leading that space. Separate from Lockheed Martin, Raytheon, are there other companies that we should look at?
Yeah, we're in a totally different transformation. But there's the historical legacy.
Come on. All right, Broadcom trying to make a new high. Tesla turning back up, looking good. Apple, very nice move on Apple. Thank you very much, Apple. Apple. All right, we're coming up against supply. Coming up the first supply. Doo-doo. Apple. Okay, nice move on Apple. Apple, thank you very much. Nice move on Apple. Palantir making new highs. Palantir.
All right, so let's talk about Android because that is everyone wants a piece of Android, but it's hard to get it.
Yeah. So, you can get to it though.
Yeah, no,
there's access.
No, you can.
You can get to it. You can get to SpaceX as well. You can, you can also get to OpenAI.
Supply. Okay, Apple.
Are creating the new infrastructure of where this is all going, which is all in artificial intelligence.
Right.
I also like some of the smaller tickers. I like some of the.
Okay, the Apple scalp that I took, I just sold. Okay.
Some of the underlying tickers, ESP, TGen, TSI, they're creating foundational data set integrations and data center
Are
integrations.
they all on NASDAQ? They're on the New York Stock Exchange? Really?
Yeah.
I have to look them up because those are things I don't know.
Yeah, please do. So I have a background in smaller stage, small microcap companies.
Yeah.
And I really like them for where they position themselves for this next future.
And so talk about their role. What do those companies do?
They're the infrastructure of artificial intelligence. They're the components of the things that have to happen to enable AI. Right. So they're the energy providers, they're the data center integration companies, they're the server companies. They're really the companies that are creating like I call it the infrastructure of AI, the foundational elements required.
Right. Eli is also
Okay. Look good. That was a good trade there, Apple. All right, so now Tesla's starting to go. Tesla's looking better. Okay, Palantir's looking good. All these are working really nicely.
The Israelis could send it right between the eyeballs. I thought it was amazing. I think that's just going to be part of where this technology takes us, is the specificity in launching launching.
I have a lot of conversations with a lot of friends of mine. I live outside of Philadelphia. They're like, "Hey, are we worried about this?" Or they come to me like last weekend. It was Saturday night when that.
Yeah. I was at a wedding.
I had a baseball game Sunday morning. My buddy's like, "Yo, how do I think about this?" I'm like, it's gonna be okay.
Right.
And the reason it's gonna be okay is that the Iranian response, they didn't have enough resources to respond at scale, right?
Right.
They're a regional nuisance.
Right.
Well, we're with the U.S.
All right, Tesla, nice turn there. There goes Microsoft. Okay, did I buy Microsoft? I did, didn't I? I did. Okay, cool. All right. I did buy some Microsoft. Let me just check right here. I have the 505 call. Okay, yeah, I mentioned that. Okay, so the trade I took on Microsoft was 505, 507.50, and I took that at 137. 137 Microsoft. Okay, so Apple's working out okay. I took profits on the ones that we. Okay, Apple. Okay, the next trade is starting to work.
And that was a really bad day for a lot of people. A lot of great Americans served there for a really, really long time. That was bad.
In Afghanistan.
Microsoft next.
But it sends a signal. It sends a signal to the rest of the world, and that cascades.
100%. But I actually think that the response.
Apple next. Microsoft next.
Much more positive than negative.
Oh, absolutely.
I think you had, Venezuela and Honduras,
totally.
standing up. No. I think the rest of the world stood up and said, you know what? Somebody had to ultimately do enough.
Microsoft. Yeah, Corey and I were talking about Microsoft.
Okay, so you got those small companies that you're looking at, but do you continue to look at companies like Lockheed Martin?
Always. I always come back to my founders like your Lockheed.
Right.
There's
At 505.
That's where I go. I know I can get some disproportionate returns there. I'm also a VC in 2 different national security intelligence firms. You take your winnings out of there, and then you put them into your bellwethers, like your Lockheed's, your Raytheons.
Right.
I like Palantir for a very long time for a lot of reasons.
Yeah.
So you just keep yourself in there, and you take your wins, and you kind of diversify those as well. We had
137.
Order money about 2 months ago. Yeah. They have an aerospace and defense ETF that's worth
137.
Good belly.
137.
So
Okay,
talk
yeah.
about retail investors, and their approach to
Okay.
things, right? How do they balance their values?
Yeah.
Right.
137.
With kind of where we are.
137.
Values
I
are
mean,
very
people
low.
that say, I don't want to invest in.
I don't really want to invest in companies like that. I mean, I want to invest in companies that do the national security things back in.
Right. Correct.
Energy really matters. The infrastructure really matters. Semiconductors really matter. And artificial intelligence really matters. Those 4 or 5 things. Everything else is a platform or a tool, right? Those are the 4 or 5 underlying assets, underlying things that I want to invest in.
Right. That investors need to pay attention to, need to have some
For the next
exposure to.
50 years.
Yeah, because we're very much at the infancy stage.
We are ChatGPT only came out 2 years ago.
Yeah, right.
It's changed the entire world.
Well, and it changes itself almost from day to day.
Every day. And so I think we just need to consider the fact that guns and bullets won the last one.
Right.
It's very true.
Guns and bullets are not going to win.
It's going to be part of it, but it's not going to be the whole of it, right? It is going to be such a different environment. And I have some very specific examples of what I think.
Do we have to worry about war in space, blowing up satellites and bringing the world, bringing tech, you blow up satellites, you bring communication to them.
Yeah, so there's some really smart companies that are also thinking about all PNT, all position, navigation, and timing, which is essentially GPS, right? So there's a Google spin-out called Sandbox that has a tool that they're working through as well. That's a whole different conversation. Well, my point to you is, I think that the next war is going to be a space and AI war.
Yeah.
When AI, I mean autonomous drones. Right?
Yeah.
So you're
I
either going to be really far away, or you're going to be really, really close. And there's that supply chain in the middle of it is going to be going to look very different than what it does now. The war in Ukraine is talking about it, right? So that means that anything in space is defensible. You have to worry about it.
You have to worry about it. I think that became clear.
You have to know where things are.
Right.
You have to know where your assets are. You have to know how they're maneuvering. You have to know what's maneuvering around you.
Right.
That's really, really important.
Yeah, it's going to get more important as we move.
The next 5 years, the amount of stuff that's in space is going to significantly increase. Thank you, SpaceX, for reducing the cost of launch and all the other launch providers.
Yeah.
But like they're reducing the cost of space. There's gonna be more stuff out there we gotta be worried about.
So talk about, because I want to bring this to you. Talk about-
Okay, there goes Microsoft back up to the highs.
Are there ones that investors should be paying attention to?
There's so many different. There's so many different companies that we should be thinking about. And like the veteran owner, the better founded companies.
Yeah.
Okay, there goes Microsoft.
They're mostly privately owned. So
Still privately owned.
most of them privately owned.
Right.
Yeah.
Can't really get-
Can't really get
Mhm. Okay, Microsoft, do your thing. Do your thing, Microsoft. I should have bought more of these suckers. I can still do that. I can buy straight 505s. Let me do that. Let me buy straight 505s. Microsoft. I'm going to add to this because this position's starting to cook now. Okay, you know what? I'm going to do the same long strike and I'll sell a short 510. That's what I'll do. Buy a vertical. I'm going to add to my Microsoft right here. Buy 505. And I'm going to sell the 510. Okay, I'm going to buy more of those. I'm going to get 10 of these. Okay. Come on. You can do it. Lots of option volume today. Okay, this is moving fast. Microsoft is moving fast. Okay, let me do a limit order. Okay, there we go. Should get filled now. All right, that's me getting filled on Microsoft.
Create this hardware for the U.S.
and allies.
Yeah.
18 July.
I got some very
And $1
stop.
stop.
They know what they're doing, and yeah, they only work, and that's the kind of the way that this works, right? You have to decide who you're going to work with, and who you're not going to work with, right? That's very clear.
Very clear.
And over the last couple of years, the investment in China has gone down, so every cap table's being cleaned up, make sure that there's no Chinese investment in there.
Right.
If there is, it's recognized.
Right.
Other than that, yeah, it's like that's how we're navigating this.
I want you to come back, a couple of months. I want to talk about.
Okay, nice move on Microsoft. Nice follow through there.
Where we are in terms of the technical conversation about how AI is changing the whole space.
Yeah, the headlines will change. So the consistent things will be consistent.
Okay, looking good.
Headline 3 or 4 months from now, we'll talk about this.
Well, listen, I never podcast with a recipe, so I get into my recipe because I think it fits you perfectly. I think this conversation was great.
I love it.
I really want to have it again, but
I love it.
today I want to talk to you about the Sicilian style linguine clam sauce, which is the dish is rooted really in the coastal culinary traditions of Sicily. Now, Sicily is the largest island in the Mediterranean and an autonomous region of Italy. Now, while the classic linguine clam sauce really originates from Naples, the Sicilian version reflects the island's unique history and cultural influence. So let me give you a little just brief history. Sicily's cuisine is shaped by a strategic location with influences from Greeks, Arabs, Normans, and Spanish cultures due to centuries of conquest and trade. Seafood, including clams, has been a staple in coastal Sicilian cooking since antiquity. Linguine alla vongole Sicilian style emerged as a regional variation of the classic meatball dish. The addition of chorizo, a Spanish cured sausage, reflects Sicily's historical Spanish rule during the 15th and 16th century. The use of chorizo in this dish may also nod to Sicilian dishes that combine seafood and pork, such as those influenced by the Arab Norman sweet and savory flavor profile. You can scan the QR code that's on the screen for the full recipe, and you can thank me later. Look, that's a wrap for today's Trader Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcast. You got questions or topics that you want us to cover? Email me at tradertalk@yahooinc.com because I'm always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. And until then, take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
All right, so Microsoft has got a ways to go to run this back up, so that'd be good. I have next week's calls. Microsoft above VWAP on 5 minute. Thank you there, Dollar. Thanks, Dollar. Cleaning up today. Market's giving us some really nice trades. All right, looking good.
Stay tuned for a special free offer from Flash Force Tactical Flashlight. With its powerful telescopic zoom, the Flash Force Tactical Flashlight gives you a super bright light visible at a distance of over 2,000 meters with 7 useful modes plus a USB rechargeable battery. The Flash Force Tactical Flashlight is always ready to light up the night. And if you scan the code on your screen and order right now, we'll send you a second Flash Force Tactical Flashlight absolutely free. Hurry, this is a limited time offer. Scan the code on your screen to order now. When your phone, wallet, keys, loose change, and more fall between the seat and center console of your vehicle, it's impossible to retrieve. Oh no, not again. Introducing the Console Catcher, the perfect addition to any vehicle. It's flexible, easy to clean, and even easier to install. Simply place the Console Catcher around the base of the seatbelt buckle, and that's it. The Console Catcher keeps anything from falling and cracks, and it even doubles. Scan the code on your screen right now.
Okay, nice move on Microsoft. Okay, Microsoft looking for more upside. Can we get some more S&P? Looking for a pop higher. Okay.
Frustrating gap between the seat and console. You need the Console Catcher. Simply push it into place, and the Console Catcher moves with you. Scan the code on your screen now. Get your Console Catcher today.
Wish you could yell at mosquitoes to stay off your skin. And now you can with Mosquito Band. This tech marvel harnesses sound waves to create invisible shade. No nasty chemicals.
In phase.
Up to 130 hours on a single fast charge. Get a cool looking Mosquito Band for every member of your family. It's the healthy way to yell, stay away, mosquitoes.
Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, coming to you live from the Yahoo Finance headquarters in the heart of New York City, a global hub where deals are made, fortunes are built, and the next market move is always just around the corner. Coming up, I'll give you my big take on negotiating with China. We're going to chat with Invesco Chief Market Strategist Brian Levitt, and I'll share
Apple looking for more upside. Palantir squirting higher. Palantir.
Let's not sugarcoat. China is impossible to read and even harder to trust when it comes to global markets and trade. For years, every administration has tried to solve the China question with everything from summits.
What's this? You getting the belly? You getting the belly goose?
China plays a long game, protects its own interests, and
Goose is getting a beer belly. Good goose. You getting a beer belly, goose?
all of the tough talk, threats, and headline-grabbing moves.
All right, Meta. Meta, nice move. Meta back up to the highs.
Each tariff, each fleet, each 11th hour deal is just one move in a much bigger chess game.
Meta.
China's giving up leverage. Here's what most investors miss. China's negotiation style is all about patience, ambiguity, and leverage. Delays, fake breakthroughs, sudden walkbacks, and last-minute pivots are not stumbles. They're part of the strategy. The Chinese government has weathered cycles of tariffs, restrictions, and blacklists, using them to fortify domestic companies and expand their influence across Asia and Africa. Every time the U.S. thinks it has the upper hand, Beijing finds a new angle. could be currency rules, or rare earth controls, or regulatory hurdles for American companies. That's why every round of Trump's tariff drama rattles the market. Not because tariffs are new, but because no one on Wall Street trusts that the resolution will stay. Investors know the risks. There's supply chain headaches, price retaliation, and deals that unravel overnight. It's not just about steel or chips or soybeans. It's about trusting a counterpart who views negotiation as a battlefield, not a handshake. Bottom line, China is the world's most important swing factor, and Trump's tariffs are just one battle in a never-ending trade. If you're betting on a quick and clean resolution, you're ignoring decades of history and misreading the game entirely. In this environment, trust is just another word for risk. Today's Brian Levitt, global market strategist at Invesco, a guy who's been in the trenches of the market for more than 20 years. Brian's the kind of voice you want in your corner when you're trying to make sense of the economy, the Fed, inflation, all of it. He's got a
Okay,
great
Palantir, a little profit taking at the high. Palantir.
helping investors connect the dots between what's happening out there and what it means for their portfolios. Let's give a warm welcome to Brian. Brian, welcome to the show. Thank you for joining
Welcome,
us.
Brian.
It's a pleasure.
Welcome, Brian.
Show with me today.
That's
So
Uncle
listen,
Brian.
Let's talk a little bit about first. Tell the audience just a little bit about your role in investing.
I work as a global market strategist.
Are you annoyed,
Invesco.
Turtle?
My job is designed to try and help investors better understand how they should be thinking about their portfolios, but also I try to help ease concerns, calm their fears, help them to overcome emotions.
Oh, don't we all?
Don't
Especially what's going on in the last couple of
Yeah, I didn't know I needed a psychology degree also, but I figured I'd just go with economics.
I ended up getting a psychology degree just because I have to deal with it. I never.
So maybe you can help me, give me some pointers.
No, it's really been nuts, but that just speaks to the level of emotion, right? But yes, to your point, I think it's our role is to try to help these long-term investors kind of stay with that, not those decisions. But let's talk about a couple of things. There's so much going on, but I really want to start with U.S. and China trade,
right?
Where it was.
Okay, Palantir watching. Nice move from Palantir. Palantir. It's doing well. Palantir. Let me see. I have Palantir 18 July, put credit spreads as well as some longs out in August. So what I did with Palantir, okay, I've talked about this before. Palantir, what I did was sell some put credit spreads, and I turned around and bought some calls. Technically, I had the cash to do it, but I bought some calls. Let's see, Palantir. So I sold these puts down below. Okay, for $150 per contract. I'm up quite a bit on those. Palantir. I'm up $140 per contract. All right, so 10. I could close these right now for 10. I'm sorry. I'm looking at the wrong thing. The wrong position. I'm looking at the verticals are $70 per contract. So $70 per contract profit. Okay. So can I close these for 70? Let me see real quick. Actually,
and at least we can move on to it.
Right.
Move on from it. People want to talk about now the
actually, I could close these for $15.
As long as there's uncertainty around tariffs that persist. So we're getting closer to perhaps better clarity on all this. And the market just wants to see signs that things are getting better.
100%. Now, next question. Do you think that this latest conversation that took place in London between Scott Bessent and the Chinese representatives,
okay, I just closed these
sound like, okay, we have the framework, we're ready to go? Because a month ago,
for $15 per contract.
and then suddenly it was.
Yeah, I mean, we'll probably have fits and starts on these types of things, but I think we ultimately know where this is heading. And I like to alert people to 2018. We had trade conflict between the U.S. and China. We had a 20% downturn in the fourth quarter. We got a 90-day pause. We did not get a trade deal with China until the beginning of 2020, and yet 2019 was a great year for markets because, again, the market is forward-looking. and the market was believing a better outcome than had previously been expected.
And I actually think the market today is still believing a better outcome.
It is.
It feels like, okay, you could say that a month ago when, when we had traded way off down 20%, that, the end was near and oh my God, it's going to be over. But in fact, once it's clarity and the market wants to be positive, the market wants to be bullish. And I actually think that the economic data in this country remains fairly robust. The hard data, I think, continues to point to better times ahead. The soft data is soft data. Soft data is survey data. So you have to kind of take that with a grain of salt. Who are they surveying? And I do think that this falls along party lines, at least now. The Democrats are, screaming and yelling about it's horrible. The Republicans are screaming and yelling that it's great. So clearly depends on who you're asking.
Yeah, and then you have to remember the setup coming into this year was quite good. If you go back and you read 2025 outlooks, most were positive because growth was strong and inflation was stable.
Right.
And there were some animal spirits that were picking up around deregulation. So that's really what the market is still attuned to, is that we just came through a good first quarter earnings. Things may slow, but it's an economy that continues to hang in there.
That's right. And Atlanta GDP now has second quarter growth at 3.8%.
Right.
Right. The first quarter we were -3, I think. Right.
Right.
Now we've gone back to 3.8. So there's no sense to me that there's this pending recession.
No, it doesn't look like a pending recession. And if there was going to be a pending recession, one of the first things you would see is corporate bond spreads going up.
Right.
And that's actually just the opposite. Corporate bond spreads have been coming in, which is really a testament to two things. One, the resilience of the economy, but also the fundamental strength of corporate America, which is, again, why it comes back to this original thought of you might get a less optimal outcome, but let's set the tariff rates and move on.
100%. Listen, let's talk about just one other very recent event that caused all
Palantir.
But in the end, I don't think it's going to cause a lot of banks because while geopolitical chaos causes short-term chaos, I think actually in the long term, investors in the markets look pretty good.
I always tell investors to think of a couple of questions when something happens in the world. Number one, does it change the trajectory of the large economies of the world? Number two, does it change what their central bankers are going to do? So US and China are fairly insulated from what is going on between Iran and Israel. Now, could you get there with some type of meaningful impact to the oil market? You could, but we also have to remember the United States is now producing record number of barrels of oil per day. So regional events tend to not end business and market cycles. And I think that's a great way for investors to think about it.
But I think it creates opportunity, right? Because it gets emotional and stocks sell off for no other reason than people are emotional. Not because the thesis changed, not because the story in NVIDIA changed, just because people go, I want my money. And what's the first thing they do? They hit the big name stocks because those are the ones that move the most. But so for the long-term investor, it becomes an opportunity.
It does. And think about on October 7, 2023, when the conflict between Israel and Hamas started. I mean, stock market's up a lot since then, the broad market. And even if you think about where we were on April 8th, I mean, the market started to price in going from a trade conflict to maybe even concerns about a recession or some type of financial crisis. Investors were pulling money out of the markets left and right, and that was the bottom, because it tends to be when volatility peaks, that's when you get a policy response.
Correct.
We got a 90.
Correct. And look, if you were somebody who did nothing on April 2nd or April 5th, whatever that sell-off started, if you did nothing, today you are back. You're probably in a better position today than you were on April 2nd in terms of portfolio value, right? Because most portfolios have brought them back.
They brought it back. We're at the February 19th high. We're getting close to.
We're getting close to that, but I'm talking about the April. April 2nd.
Yeah, much better.
I think a lot of portfolios are better at
Palantir, nice position. Big cup and handle on Palantir.
That just speaks to the point about
Palantir still going. Looking good. Looking good. Thank you.
You read the behavioral finance stuff. Everyone has an action bias. I mean, something happens, you want to do something. I can't just sit here, right? But the reality is, when it comes to investing, just waiting it out tends to be a better way to go about it. I've actually done a study, Ken, where if you look at all the major conflicts in history, going all the way back, most of the century, if you had added money on the day the conflict started rather than pulled money, you'd be a lot better off.
Yeah, I think that's true. And I think we can go back and verify that. But I think what's interesting is that now let's talk about long-term investors, not short-term traders, because short-term traders want nothing but chaos, because that's how they make their money. But as a long-term investor, if you've got a well-designed and disciplined portfolio, then sitting tight and not necessarily panicking. You may want to take advantage and add money, but the last thing you want to do is, sell money because you're panicking. Because unless the story is fundamentally changed, and this story didn't really fundamentally change.
No.
What's happening here?
No, and I always go back to an op-ed that Warren Buffett wrote in the New York
Okay,
Times.
Microsoft watching for follow through. Microsoft, little flag right now. I'm going to take a couple minute break. I'll be right back.
Two world wars, a dozen recessions,
Auto
a Great
blocks.
Depression, on and on.
Stop.
40 to 11,000. Right. So the 20th century was a pretty challenging period.
No, it was. And yet,
Stocks did more than 20.
Which I think, that goes and speaks to, being in the game, right? It's time in the market, not trying to time.
Yeah, the volatility is the cost. Right. It's the price of admission.
That's right. And so let me ask you a question about where you view volatility and maybe how investors should think about volatility.
Well, volatility is almost always the result of policy uncertainty. It's funny, in good times, like back-to-back 25% up years, people will ask, well, when do the bad times come? When does the volatility come? When does the drawdown come? It's almost always the result of policy uncertainty.
Right.
And this time was no different. We saw a VIX, so Chicago Board Options Exchange Volatility Index, spike to 56. That is way greater than a 2 standard deviation move. People remember a normal distribution curve. Those are the things that happen less than 5% of the time.
Right.
So make no mistake, that was a big move. The challenge investors have is they want to pull out on those moves, whereas the policymakers realize we better do something.
Right.
Again, a 90-day trade pause, or sometimes the Fed comes in. And so investors tend to pull their money out of the market right when the policymakers are trying to calm things down.
Right, but then when they do calm things down, then they try to run back in the market and become buyers, and then they force the market higher.
And what happens, which is unfortunate, is you miss the best days in the market.
You missed it completely. That was the point.
Yeah, everyone sees those charts. If you miss the 10 best days in the market, you get half the return.
Right.
But what people never remember, or maybe weren't taught, is that those best days always happen in the worst moments. So we just had the third best day in the S&P 500 since 1957, I believe. That was April 9th, 9.5%. It just took over the third spot from March 24, 2020, which was up 9.4% when we were all sitting in our homes during COVID.
So hold on one second. We're going to take a quick break and we'll be right back.
Are you ready to master the markets and get right say become a better investor in the process? Delphi has you covered. Our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom. For key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on YahooFinance.com, Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
Celebrate Independence Day savings all month long at Bell & Bell GMC. Get 0% APR on the rugged Sierra 1500, or up to $11,031 in total purchase allowance on select models. Bell & Bell GMC in North Myrtle Beach.
Hey, do you dread scrubbing away stubborn dirt and stains? I used to, until I found the Spinny Scrub. Let me show you why this little powerhouse is a total game changer. You can also scan the code on the screen now and find out more. This is the Spinny Scrub, your new best friend when it comes to cleaning. It's got a powerful motor that rotates at high speed, so no more scrubbing by hand. It comes with 5 different brush heads, so no matter what you're cleaning, you've got the right tool for the job. From your bathroom tiles to kitchen countertops and more, the Spinny Scrub has you covered. So if you want to make cleaning faster, easier, and way more effective, the Spinny Scrub is your answer. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. Thank you.
All right, looking for Microsoft to maybe push a bit higher. If you're just joining us this evening, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We've got an hour and 13 minutes to go for this session, Wednesday, the 9th of July. Hope everyone had a good day. Those of you just checking in, I closed some Palantir put credit spreads Those made $135 per contract, just sitting on the position for a couple of weeks and letting Theta do its thing. Sold them for $150 per contract and just bought them back for $15 per contract. If you've ever traded options before and you bought way out of the money, you know what your probabilities are. Maybe you don't know what your probabilities are. If you look at an option, you think the stock's going to go, and you aren't paying attention to the deltas, and you wind up buying like a 20 delta or 15 or 10 delta, and it doesn't move immediately, you literally have about an 80% to 90% probability of losing your money. Playing the house, we have about an 80 to 90% probability of winning when you sell a 20 delta. So the choice is yours. It's a good way to take money. If you have a day job, it's a good way to extract money from the markets, basically, in a relatively safe, less risky way of trading options. You're selling the option instead of buying the option. And you always run the risk that you get a sign, but we would take it off way before that most of the time. So anyway, I hope everyone's having a good day. We've got about an hour and 11 minutes to go. I'm just sitting and watching the markets now because with most of the trades are done for the day. Just watching Microsoft to see if it can make another high of the day.
Well, you don't have speculation. I'm in the camp where we're not getting a rate. I think the market is in the camp where we're not getting a rate. But yet there are people screaming for a rate cut, starting with the president, right? I'm in the camp that the Fed should do nothing.
Yeah, and all presidents want rate cuts, right?
Sure.
So, I don't think that this is a Fed that's going to be jawbone by the president.
The one thing about a rate cut right now is the Fed is behind the curve. Granted, they could be waiting, using that little bit of control if they want to cut rates, but they're about 200 basis points behind. If you listen to Tom Lee talking yesterday, the way Europe figures inflation is they take out shelter, because everybody needs shelter. They take out shelter and they include everything else. And currently, they're at like 1.9%, and so is the U.S. So the Fed is looking for a lower interest rate, but it's currently inflation is currently what, about 4%. But if you exclude shelter, it's down to 1.9%. So they've done a good job of controlling inflation, and they've got about a 200 basis point leeway to be able to cut right now. So 50 basis points would be nothing. Okay, Meta's getting ready to go again. Meta, watch Meta.
So that's not, and the way you would want to look at it, I mean, even the 3-year inflation break even, which you might think would be rocketing higher, is back down to 2.5%, right in the comfort zone, in my opinion.
And so where do you think 10-year bond yield end of the year?
I think actually maybe a bit lower. And the reason for that is, I mean, for all our talk about a resilient economy, things are going to slow perhaps a bit. And so I don't think that we're in a place now where the bond market is questioning U.S. fiscal sustainability. The bond market's going to trade on what the growth prospects are.
Are you worried about the amount of money that now Scotty Bessent has to bring to the market to finance the debt?
So far, the bond auctions have been just fine.
Right.
So any reports that people are listening to saying the bond auctions are bad, it's fine.
I agree. I don't necessarily think they're oversubscribed, but they're also have not been a disaster.
The bid to cover ratios pretty much right
in line.
Balance. Right. And if you think of a 10-year, what should the 10-year rate be? Inflation expectations plus real GDP, 4.5% seems fine.
Right.
Correct. And if the economy slows a little, then you're going to be below 4.5%. So no.
Okay, Microsoft getting ready to go again.
Overly concerned about the U.S. debt or the big deficits that
Let's see. No supply overhead.
Perspective. One thing I say to myself to keep it contextualized is that household net worth in this country is over $160 trillion compared to a debt that's going to be $40 trillion. So $40 trillion is a scary number. It is larger than what we produce.
Okay, there goes the futures. Futures on the move.
Wealth of this country, not as large as I think people people suspect it is.
Right, but they don't, you know, that's a narrative that you don't hear a lot.
No, I mean, politicians want us to be worried about the debt because they have agendas.
Right.
Right. If you're in the Freedom Caucus, you want to cut spending. If you're in the Democratic Party, you want to increase taxes or you want to increase space. So they give us reasons to worry about it. But Ken, I've been doing this long enough that I remember when I was being told 5 trillion was a bad number.
Right.
And now we're close to 40 trillion. Meanwhile, for the last 20 years, the dollar's been very strong and rates have been historically low.
Right. It's funny that you said you were worried about 5 trillion. You know, I've been out long enough to that 1 trillion.
1 trillion, yeah.
Oh my God.
Yeah,
Right now we're talking 40 trillion.
yeah, people are pulling it up now to see how old we are.
I'm older than you.
I got a sense. When you said 1 trillion.
Yeah, that gave it away.
Yeah.
All right, so let's just tighten this up and finish off with, if you think the Fed, if you're now in the camp that you think the Fed is going to potentially cut rates in September, I guess, because you're not getting it in June, I don't think you're getting it in July, and then there's no August meeting. Right? Unless it's an emergency, but they can cut it for meetings.
It doesn't seem like there'll be something that's an emergency.
Yeah, I don't.
Where we are right now.
Yeah, I don't think there is. I'm still in the camp funny that I don't think we're getting a rate.
Yeah, I can see that.
Old stay.
Yeah, I can see that.
Right? And you got people screaming and yelling about the housing market. Quite honestly, I think the housing market got inflated because they kept rates so low for so long. I actually think if he keeps rates where they are and mortgages stay at 6.8%, and housing prices are going to have to, people that really want to sell the house are going to have to come down a little. I think that's going to be helpful.
Well, it certainly would be helpful for a younger
For a
generation.
home buyer.
Yeah.
People that can't buy a house right
The problem is the supply issue, right? The country needs to build more homes.
All right, well, listen, I really appreciate you coming in and having this conversation. I want to circle back with you in 5 or 6 months and see how this conversation.
Oh, I would love it.
To see, in fact, where we are in, November, December of this year, and then what it looks like going forward into 2026. But I remain really bullish on the outlook. So I think we're going to end the year. I think we're going to end the year just fine. We're not going to end up 20%.
But just fine. I agree.
Just fine. If we return to historical norms, I think it's great.
I agree.
Anyway, thank you very much.
My pleasure. Thank you.
Always a pleasure. Now, as you know, I end every podcast with a recipe. And today,
Okay, here we go.
classic Greek lemon chicken. Now, the history.
Greek lemon chicken. All right, so this is getting close to what he said last time. I like this recipe.
Of mainland Greece. It represents the very essence of Hellenic cuisine.
Cool.
Simple, honest ingredients elevated by bold,
What?
Mediterranean flavors. Lemon trees have flourished in Greece since antiquity.
Oh, that's the wrong
Brought
thing.
over from
Okay,
the
I'm
Middle East
scanning,
by ancient trade
not the recipe
By the
here.
Byzantine era, lemons were a common flavoring agent in meat dishes, prized not just for their taste, but also for their preserving and tenderizing quality. Combined with oregano, garlic, olive oil, the holy trinity of Greek cooking, lemon brought brightness and depth to an otherwise simple meal. Historically, chicken was not
There's
eaten
no
as
recipe.
frequently as lamb or goat.
That's not recipe.
More valuable for the eggs they produced. When it was prepared, it was often for very special occasions. The lemonazzo-style braised or roasted meat and a lemon-based sauce became a beloved household staple over time, especially as chicken became more widely essential. Today, Greek lemon chicken is a comfort food across generations, often served with potatoes that soak up the pan juices. You can scan the QR code on the screen for the full recipe, and you can thank me later. So that's a wrap for today's Tater Talk.
Okay, Netflix on the move, starting to go right now. Apple's at the high of the day. Meta.
Spotify, Amazon Music, or wherever you get your podcasts. If you've got questions or topics you want covered, email us at tradertalk@yahooinc.com.
Yahoo.
We're always listening. Until next time, stay sharp, stay disciplined, stay in touch, and take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
Are you ready to master the markets? Endeavoring Savings Company, if you ever venture in the process, Delphi has you covered. Our new full suite of original podcast content, whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom for key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
Vegas. Its history is littered with tales to begin with. I don't know what I was thinking. Welcome to the danger zone. But here at the Gold and Silver, we're legendary with great decisions. How much do you want for it? $600K. You know our history. This is probably 1910ish. Right, people. An hourly bid. But this is super cool. Lucky for you, what happens here doesn't stay in Vegas. I might just be nuts for buying these things. On solid finance, only on Samsung TV Plus.
Okay, dealer hedging flows on Palantir is starting to flatten out now at the high. Profit taking. Okay, Microsoft.
Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. Just an hour ago, until the closing bell stocks, edging higher here, President Trump unveiled more tariff letters directed at U.S. trading partners, and while AI chipmaker NVIDIA became the first company to ever touch the $4 trillion market cap. That's looking at now RBC Capital Markets head of derivative strategy. That would be Amy Silverman, along with Yahoo Finance's Washington correspondent Ben Worskell, the rest got tech editor Dan Howley, who are all joining us throughout the show to break down the headlines. Ben, let's start with you. What is the latest out of DC?
Yeah, so it's letters day. So we have 7 new letters today from President Trump to a variety of trading partners. He's promising more either later this afternoon or coming tomorrow morning. The big one that he said this afternoon was going to drop soon is Brazil. So that could be so far.
Okay, Tesla making a new high.
On a range of countries from Algeria to Moldova that would take effect on August 1st. And this is on top of 14 letters on Monday, so we're up to 21 letters total. The biggest nation so far today is the Philippines. That Trump 20% rate there. And that's about the 30th biggest trading partner for the US. So these are kind of lower level trading partners at this point. The bottom line for markets is that the investors seem to be looking through a lot of these, and largely because of the fact that nothing's changing this week. This is again an August 1st deadline. And there's growing skepticism here in Washington, and I would imagine on Wall Street as well, that what we're going to see on August 1st is actually going to be the rates dictated. There's going to be a lot of talk to come between now.
Here's a question, man. As Trump fires off these letters, do we know how our trading partners are receiving these letters?
Okay, looking good. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. We're in the Power Hour. We're in Power Hour now.
That is sort of the public response.
Okay, I don't care what the public response is. Okay.
The firm's going to navigate. It's going to be,
Jeremy Siegel, he really grew on me over the years. Didn't like him at one point, but started listening to him. He actually has a lot of good thoughts. So, as my late father used to say, you can learn something from everyone. Just don't be arrogant and think you know everything, like Wapner. Jerry Siegel, Wharton School, right?
We will hear from it from the firms. We will, hear from it from the consumer. And I think that's really going to probably be a big part of our focus in July. If we don't hear much bad, boy, this bull market certainly, I think, has further to run. If we begin to hear, while there's some hurdles that are harder to overcome, then we're going to see choppiness, I think, this quarter.
You feel like, for the most part, the market has become a bit desensitized to the tariffs, Professor, because it just doesn't believe that the president's bark is ultimately going to be as severe, in the end. The bite's not going to be as severe as the bark.
Yeah, well, there was the famous taco trade. It still does, though. Interestingly enough, move when he does speak of, higher tariffs. I mean, certainly we all have to discount it because he often backs down. It's my belief that all countries that come to the table in some way, even if they haven't got a finalized deal, will probably be given a delay. And I think that is exactly what the market assumes. And if that happens, that certainly is a positive. But even at the current levels, remember, 10% across the board, selectively more. I mean, he threatened copper. I don't know if that's going to come through, but certainly, aluminum and steel, we already see those higher prices. So we're dealing with 10% base, 30% from China, maybe 40% from China. There's even at the best case scenario, there are hurdles. They are overcomable, but it requires work.
Overcomable? Is that a word?
I'm trying to think also, as you were talking about the boom in AI and productivity and the like, I can foresee a scenario in which that doesn't sound so great for the American worker.
Okay, Felicia, take it easy over there.
It's really good for the American investor because companies are going to have the ability to get leaner. They're going to be able to preserve their margins. They're going to be more efficient. People are going to be more productive, but the boom in AI itself is going to have a negative impact on the American workforce, like has been already discussed since this whole thing burst on the scene a couple of years ago.
Right. And the question is it more evolutionary or revolutionary? I mean, there were a lot of people, as we all know, when the internet, came on the scene in 2000, said there wouldn't be a single retail store by 2025. Well, here we are. About 1/3 of sales or close to it, but we still have a lot of others. And we still have a lot of other demands. And, you take a look at the JOLTS report, there's still a lot of job openings for those people. I think a lot of those people are going to be told, you increase your productivity by AI, and you got a job. If you can, well, then we'll replace you with someone that can. And I think that, you know,
All right. Looks like Palantir is going to go a little bit more.
Professor, stay with me. Let's broaden the conversation and welcome in a couple more guests. JP Morgan's Gabriella.
Okay, S&P 500.
Phillips. It's great to have
Okay.
everybody with us. Gabby, I'll ask you first. What do you think of this market here at record highs? It seemed to be in agreement with a lot of what the professor had to say as we were having the
Okay,
conversation.
note the hedge flows. Note the hedging flows.
Interrelated forces going on here that got us back to all-time highs. The first is better.
Okay, we got less than an hour to go now.
I feel like we understood the equilibrium here around trade policy, immigration, fiscal, and importantly that the worst case has been avoided and recession risk has come down. The second interrelated aspect is, I think, you know, the tech sector, proxied by the Mag 7, had quite the indigestion that started really back in January with DeepSeek Monday. And so reemergence of these long-term themes like AI and automation as the main market driver. That said, I think the theme has come back, but it isn't unchanged in terms of the way that it's manifesting itself in markets. It is not as concentrated as it used to be.
It still is somewhat, though, Ali, concentrated at the top. It may not be solely concentrated.
Okay, Netflix about to make a new high now. Okay, let me sell my Netflix if I can get out of here. Let's see. I got to order at 225 limit. Currently marked status $2. Okay, so I need $50. No, I need $25 more per contract. Okay, Netflix starting to go.
Concerns. And so just the fact that investors have had this sort of gut-wrenching past 90 days has been pretty incredible. And the fact that while it's uncomfortable, staying invested truly has been really proven. So now we're in this bullish sentiment, but there's some things that we're looking at that we're a little bit concerned about. As the professor mentioned, sort of this looming global tariff deadline could introduce a lot of volatility, particularly with the unresolved U.S. and EU tensions. Further Middle East conflict, that's always risk of escalation, which could disrupt oil supply.
Netflix, where are you, Netflix? Netflix and FLX.
What we're really looking at, the positive, and we can go into a little bit more, is in terms of this AI build out, really is still in its early stages, with companies like Broadcom projecting 60% revenue growth through 2026. But outside technology, the other things we should talk about a little bit is investors during those 90 days really overly punish certain companies, whether it's in healthcare due to regulatory issues, whether it was in retail due to in terms of tariff policies. Small caps have always still struggled. And the key thing, what we're also seeing is really attractive opportunities on the international front, knowing that on a relative basis, you're having much better valuations there.
Gabriella, you have had a nice international trade, though. I feel like the commentary's changed now that you've gotten the tax bill done and you're going to focus more on growth and deregulation and then coming rate cuts, that now the bulk of the gains are likely to come here, not there.
I would somewhat disagree. I think now that we're back to all-time highs, 22 times in the PE, I think from here, the further gains in U.S. equities are much more incremental and beneath the surface. I think where you can still have room for plenty of outsized gains is where you have underappreciated positive stories, a lot of which does end up leading us back to international. So the first half of the year, international performed by 1,200 basis points. Half of that was the dollar weakening 10%. The best start since 2007, but that was after 15 years of an over appreciation of the U.S. premium and discount of everything overseas. I think a good parallel to keep in mind is the period of 2002 to 2007, where you had a long lower dollar cycle by 40%. And you had a long period of international outperformance that went on for about those 6 years and 70%. So a lot more to go. And we like some international laggards this year, places like Japan and India, where there's still good stories, but where the multiples haven't expanded as much as Europe.
Professor, why don't you grade that trade? You are the professor after all. I mean, U.S. versus international, and the perspective that you just heard from the ladies on the show. that maybe international is going to give you a better value at this particular time, even with the gains that it's already had?
Well, as I've always said, Scott, in the short run, investors should chase earnings, and if they get them right, they're going to do really well. In the long run, if you go with valuation, that's proved to be the winner. And you might have to be extremely patient, just as Gabrielle mentioned. It has been the longest time that we've had in 100 years where growth has outperformed value, or even the U.S. Outside of international wars and etc. has really outperformed for so long Europe. And Europe is still selling 15 times earnings outside the U.S. Basically, you're at a 15, 16 times earnings world, in many cases 12, 13. You don't need much growth with those valuations to generate returns that is good enough as the S&P 500 once you reach 20 PE. So, I'd say in the long run, I absolutely agree. And we should also realize, even though we had a sigh of relief that that Friday employment report wasn't as bad as we feared. Once you strip out that local government group, it was below
Okay, Netflix. Nice pop on Netflix.
The second quarter, they said it's 2.5%. Well,
See
I remember
Netflix.
first quarter was minus
18 July Netflix. All right, so we could get some more out of this.
first half of this year, which is really not. So, we were facing the tariffs. We're facing slower growth. I've been proposing for the Fed to let up. And of course, that's an ongoing war, which I think is going to heat up between Trump and Powell.
Heat up more than it's already had. It's so
Okay,
funny,
Bitcoin going.
because
Watch
that's what I was
Bitcoin here.
going to turn to Gabriella, who says that we as investors in the stock market shouldn't want and doesn't even need rate cuts. That's your principal argument, right? Professor, you're going to debate this on the other side, but let's hear Gabby's view.
Yeah, I think so. I mean, we were so worried about what the stock market would do as rates did the opposite. They went up, and we had a very resilient stock market because over time, the economy and large cap corporate earnings have become less sensitive to moves in rates. And why would we expect anything different on the way down when interest rates are
Let's go, LETSGO.
What we don't believe is really
Okay, we got 45 minutes to go. 45 minutes to go in regular session. There goes Netflix. Netflix on the move. Okay, Netflix. Netflix. Netflix going. Looking for a breakout here in the day. Buy order blocks. Buy order blocks. You see what Netflix. You see the hero flow on Netflix, right? Look at that flow. That's dealer hedging flow into the close. You see that purple line? That thing is rapidly rising. Rapido. Okay, Netflix. And it's going. There goes Netflix.
It's definitely slow. I mean, what was the average GDP growth last year? I mean, it was 2.5 to 3%. I said 1% this half. When this big slowdown in immigration that we've had, we had tariffs. Payroll is down to about a third of the average growth of last year. Again, we're not in recession mode by any means, but again, ex tariffs, prices going down, slower economic growth, inverted term structure, where the Fed funds rate is above the 10-year. That's not historically the best place to be. I think there's a lot of persuasive arguments for having lower short-term rates.
Allie, are you counting on rate cuts for your small caps pick? Because it doesn't seem as one can work without the other.
No, to us, we're very much, we've been for a while in this higher for longer environment. But we actually think rates are right now in somewhat of the overall sweet spot. For investors, you're no longer being punished for being a saver. For lenders, you're able to get attractive rates on a historical basis. And it actually is a label to enable businesses to continue to expand. Small cap is not necessarily just dependent on terms of interest rates decreasing, but it is very much more of that valuation disconnect between those mega cap companies and the small companies. And knowing as the overall economy feels better, the overall families feel wealthier, as we see economic progress, that's really what benefits those smaller companies as opposed to just an interest rate call.
All right, we'll leave it there. Allie, thank you. Professor, it's good to see you as always, and Gabriella, you as well. It's good to have everybody here with us on Closing Bell. NASDAQ hitting another record high today, as we said. S&P 500 not that far behind either. The Renaissance Macros, Jeff DeGraff says, well, I'm not going to tell you what he says. We're going to ask him what he says on where expectations are.
Okay, Netflix still pushing here. Netflix still going. Are Netflix blasting higher now?
I definitely don't think we're too complacent. You know, most of the indications that we look actually show that there's still room. There's a gap between kind of people missing out in that second quarter rally and where they are today and what they want to do. There's a lot of people waiting for a pullback, and usually when there's a lot of people waiting for a pullback, you're just not going to really satisfy that. So, you know, one of our favorite things to do is look at what expectations are from the consumer standpoint. And as counterintuitive as it may be, low consumer expectations actually result in
Okay.
essentially a 2 to 3 standard deviation downside move, and it just hasn't caught up yet. So I don't think there's too much complacency. I certainly don't think there's too much speculation or over exuberance. And I think we're actually still in a pretty good spot for the remainder of the summer.
What are the charts? I mean, you look at the charts, obviously, as the head of technical research. Let's take NVIDIA, for example.
Whoops. Sorry about that.
In the market?
Yeah, look, I mean, that's just happens to be coincidental today, but, you know, let's look back over the last year for NVIDIA, right? And really this time last year, we were warning clients about the excess enthusiasm that we had seen. We took a lot of heat for it, and just said, look, that just has to take a
Okay, Netflix is blasting higher. There goes Netflix. Okay, cool.
It'll probably get oversold, and the oversold conditions probably viable, but, you know, we want to be very
Netflix on the move.
Now here we are 12 months later.
I'm trying to sell some 18 July expiration 13/12/50s. Got a ways to go here, so I probably should just take this off and let it run. Cancel that order. Let me just delete. Let me cancel this order. I'm not going to sell myself short. Got plenty of upside left. All right.
But certainly it's helpful. And we're seeing it across the board. I mean, a lot of people complain about breadth. We just don't have those same problems with breadth here. I think it's, you know, people making excuses, frankly. And from what we see, it certainly seems fine. It's in gear, and it looks like this market wants to trade higher.
Well, you don't care about the concentration. I mean, you've admitted it has been a large stock.
Tesla getting a rally into the close. All right, a lot of New York FANGs are rising. I would be taking some profits off in the strength.
But they're all going in the same direction, right? You're always going to have relative outperformance and underperformance. What I'm most interested in, if I get the mega cap or the cap weight index making a new high, while the equal weight is trending downward, that's a problem. We're not seeing that at all. So you're going to have that concentration effect just from the mega cap names. I don't worry about that. There's probably the last 3 or 5 years we've had, you know, plenty of clarion calls around that just didn't come true. So I'm always skeptical on that and more careful. I would say at the same time, you know, NVIDIA's making a new high. The Apple chart's not that great. The Google chart's kind of flat.
Okay, there goes Netflix. All right, Netflix.
There's a trade-off that takes place here, and we're certainly seeing that.
Nice move there.
That's been really the forefront in terms of AI.
Okay, good day today.
Too, based on the chart looking like it might be breaking out again. It's Vistra. A couple of years ago, was the best performing name in the S&P, if I recall. Why again?
Well, we were looking for charts that look similar to NVIDIA. I know you want to talk about that. And so, you know, they're not all semiconductors. Obviously, CLAC looks great and Novago looks great. But, you know, here you've got a different name or a different industry group, and Vistra looks good. It's, again, a long consolidation, starting to come back around. A lot of that speculative enthusiasm was burned off. You could see it in the options market. You know, people just kind of fell, let's call it dormancy, if you will, around the name. And now it's making a new high. And I think that's really important here, Scott, that then we've talked about it before, but
right now is the point where you want to be chasing relative strength leaders. You don't want to be chasing laggards because it's going to be a much more challenging environment. What you want today are the leadership names because they represent the narratives of tomorrow. And I think that's exactly what you have with both these names that you're talking about.
Yeah, why make it more difficult on yourself? In other words, Jeff, we'll see you soon. It's Jeff DeGraff.
Thank you. Good to see you.
Brett Mack. We'll see you soon. We're just getting started here. Up next, wow, a couple big stories from the world of sports business, including one that our very own Alex Sherman broke about a local hero. That's nice.
All right, nice move there, Frano. Nice move. Okay, got a nice move here in the S&P. S&P, S&P. Okay, S&P. Nice little pop there. All right, took a little profits on S&P. Added to the position when it was down. Otherwise, it would have been a loss. SPY, looking for more upside. I got Friday. No, I got SPY. Friday calls, right? Friday. Yeah, Friday, July 11th calls. Hopefully, we can get a follow through tomorrow. Okay, the flow is up. Okay, GRRR Gorilla. Okay, GRRR. What's Robinhood doing? Robinhood. Update Robinhood. Robinhood moving a bit higher. Okay, need to get back above a 100. Robinhood, GRRR. Okay, Gorilla Technology looks good. Yeah, looks like a nice breakout on the squeeze. Looks like we could get a nice breakout. And now you know the rest of the story. Good day. I'm Paul Harvey. Yeah, really like to listen to that guy. Yeah, BKNG just keeps going. BKNG booking. Okay, for the last couple of weeks, it's been running. Mm-hmm. Okay. All right. What are we doing here? What's SMCI doing? Super Micro, SMCI. SMCI finally moving here. Could get the breakout that we've been looking for. Looking for SMCI, Super Micro to continue. Okay, looks good. Looks good. Netflix, thank you very much. Netflix, nice push off of this level. Okay, so all we need tomorrow is a break back above 1300, and these calls will do very well.
All right, welcome back. Big news from the world of sports business today on a couple of fronts. Eamon Javers joining us first with the latest on a bombshell. A leading name in the industry. Eamon, what did we learn today?
Hey there, Scott. The Department of Justice unsealed a criminal indictment of sports and commercial real estate executive Tim Wiewiecki today.
The charge involves Leiwecke's alleged participation in a bid rigging scheme related to the construction of the $375 million event arena at the University of Texas at Austin. The arena is known as the Moody Center. Now, according to the indictment, Leiwecke, as CEO of developer Oakview Group, allegedly entered into an agreement with another potential bidder for the arena to drop a competing effort in exchange for lucrative subcontracts at the arena. Now, the documents say Leiwecke allegedly reneged on
that happens a lot. That happens a lot in construction industry.
agreement. Now, a spokesman for Leiwecke released a
We
statement.
had a CEO, not a CEO, a head of our department, director of our department,
for fairness and integrity. Leiwecke's
who
group released a separate statement saying that they cooperated with the Department of Justice.
who did something like that and got some kickbacks and stuff. He got arrested right before I moved into Jersey for that whole Secaucus Meadowlands area. Yeah, that sucks. You can't spend money behind bars.
Which is expected to pay a $1.5 million penalty, and then Leiwecke's own company, Oakview Group, which is expected to pay a $15 million penalty. Scott, back over to you.
Really interesting, Eamon. Thank you very much for the latest there from our bureau in Washington, Eamon Jarvis. Now to another big story. Giants legend, New York Giants legend, Eli Manning and his aspirations for NFL ownership. Alex Sherman breaking news today. He's here with more. What have you learned?
Yeah, I spoke with Eli Manning this morning. The New York Giants are out in the market looking to sell a minority stake in the team among a small handful of teams. Eli Manning has been interested in buying a minority stake. So I asked him about it, and I said, hey, Eli, are you still interested in this? Take a listen to what he told me.
Basically, it's too expensive for me. I mean, these numbers are getting very big. And 1% stake.
Looking for a follow through.
1% stake is something valued at $10 billion. So, you know.
Is a member of the Manning
Nice little pop on Netflix popped up there. Looking for a follow through tomorrow, Netflix.
Peyton Manning, he has also been the coach of the Pro Bowl in the past. He said, look, if I had done this, I may not have even been able to speak to the other players that were on the Pro Bowl team because I'd be an owner of the Giants. So that sale continues, but Eli Manning will not be one of the buyers of a minority stake of the Giants.
I mean, we have heard of others like Mark Lazary, very well known to our audience, who is said to be in the mix, maybe with Michael Strahan, another Giants Hall of Famer. Do we know how large the field of prospective share buyers would be?
Not yet, but the interesting part of this, I think, is that Eli Manning's point here was that this has just gotten too expensive, even for him. I mean, Eli Manning made about $250 million in playing salary alone. Then you add on the endorsements over the years, you know, that's got to be tens of millions, if not $100 million more. So there's only a pool of a certain amount of individuals that can foot the bill for this as they sell up to 10%, unless, of course, you're going the consortium route, like you mentioned there with Mark Lazary and Michael Strahan potentially doing a joint bid. But even that bid is going to be quite expensive. So the higher and higher that these teams' valuations go, the fewer and fewer individuals are out there that can afford to buy in.
You know, you can't help but think as well that the result of all of this is the inclusion of private equity as a new bidding pool in the game, which has only upped the valuations and upped the number of people who have deep, deep pockets who can do what Eli Manning apparently feels he can.
And to your point, Scott, right now, so the NFL legalizes this private equity buy-in, but they capped it at 10%. This was last year. It would not be a surprise at all if that cap went up in the fairly near future to say 20% or so, as we keep seeing the valuations of these teams skyrocket. The Philadelphia Eagles sold at an $8.3 billion valuation.
We got 29 minutes to go for this regular session. Today is Wednesday, the 9th. Hope everyone's having a good day. It's a little bit slow during the lunch period between 12 and say 1. But then we started to see some BC pivots showing up. And there goes Bitcoin. Bitcoin's going. Okay, there goes Bitcoin.
Thanks for coming on and talking about it, Alex Sherman from CNBC Sport. Up next,
Bitcoin going.
Elizabeth Burton maps out the big opportunities that she still sees
in this market.
Bitcoin, go time. There goes Bitcoin. Okay. Okay, I plan on doubling up on the Bitcoin, BTC, USD. It's ripping right here, Bitcoin. Okay, breaking out of this channel. Okay, Coinbase. Let's see what Coinbase looks like. Coinbase, I already have a position. Doubling up on that one is a good idea. Let's see, CONL. Okay, yeah, that's gone. That's gone. Looking good, looking good. Ba-da-ba, ba-da-ba. Sing it, Janice. Hey, hey, hey. Dee-dee-dee-dee-dee-dee-dee-dee-dee. Bum, 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 bum. Here we go. Coinbase. Big move on Coinbase. Okay, Coinbase. Looks good, Coinbase. Okay, let me double up on Coinbase. Holy shizzle. That position's really doing well. Holy smokes. I'm going to add to Coinbase. Okay. Wow. Okay. Let's see. Let me add half of that. Yeah, that's good. That's Axon. I don't want Axon. I want Axon's on the watch list, but I'm not interested in Axon. I'm looking at Coinbase. Come on. Got to open window. CONL. Can I double up? I'll just add a couple hundred shares. Why does it keep defaulting to that? I don't want that. I want this. CONL. Okay. There we go. Buy the market. Okay, that's me adding to Coinbase. Okay, looking good. Okay, that looks good. Coinbase looking good. Bitcoin. Boom. Nice, nice.
Welcome back. NASDAQ hitting a record high today. NVIDIA becoming the first company ever to reach $4 trillion in market cap. Question now, should you continue to lean into that trade or diversify elsewhere? Joined now by Elizabeth Burton, Chief Investment Strategist for Goldman Sachs Asset Management. Welcome back. It's good to see you.
Good to see you.
You're on the diversification train, right?
Yes.
Don't just lean into tech or large cap.
We're always on the diversification train.
Yeah, but I mean, you know where I'm going with this. It's like we've gotten to these record levels,
right?
And we're talking about NVIDIA today for a reason.
Right.
Those are the stocks that got you here. But what's going to get you to the next level?
Okay, I think there's a couple interesting things happening right now. One, that the breadth in this recovery has been pretty narrow, which for one means that there's opportunities for more downside ahead, but it also means there's opportunities for things to sort of catch up. And the other thing that we've been saying is this UX exceptionalism narrative is sort of overblown. We don't buy into that. One reason for that is when you think about the U.S. and the reinvestment into their business.
So go live somewhere else if you don't believe in U.S. exceptionalism.
Exceptionalism. Think about the remaining 493. They're 36. Outside of the U.S., they're closer to 26. So we still think there's diversification. We're not saying get out of the US. In terms of the diversification story, I remember a year or two ago when I was saying we're suggesting going down and out, going down in cap and outside of the US. And I think that's still a large part of the story, and it's only getting more interesting.
Can down in the cap work in the US? I think that's the biggest question, right? Because it hasn't worked well.
So we can
Whoa. Jeez. Frano, you're in Coinbase, right? CONL. I know a bunch of you. I think Frank is in it too. I don't have a, I would love to have a larger position. Always in hindsight.
If we do see a decline in
Oh
rates,
boy.
the small caps should take advantage of that opportunity sooner than the larger caps because they have, more floating rate debt. I think another thing that we're saying is, big companies, you want to implement
Yeah, that's what I
AI,
thought.
that
Yeah, I
might
thought
take
so.
years and a bunch of people getting together in rooms. At a smaller companies, that probably goes a lot faster. And then finally, on an
Holy
sales
smokes.
ratio, small caps
Yeah,
are
thanks.
half the value of large caps.
Congrats to the Coinbase crowd.
Better economy plus rate cuts helps that trade.
Wow, look at that move. Holy smokes. That's blasting higher. Okay.
Some exposure in small caps certainly makes sense as long as it's within the broader things that we continue to be.
Okay, Coinbase.
So I think security.
Okay, let's go look at Hero Flow on Coinbase. Coin.
California wildfires, like there's food security, water security, defense, cyber.
Coinbase. Note where it turned. Okay, it turned right here.
Security and data security is really involved in that.
Okay, it really started to turn at 2:30.
That it's made up its mind that it's not going to be as bad as once feared, and it's just going to go until it can. It's going to go on the assumption that it's not going to be as
2:30.
bad. If it is, it'll just deal with it. When
Okay, really started to go at 2:30.
July 15th and thereafter will be sort of telling when we start getting earnings reports. There wasn't really a whole lot for the market to really react to on the tariff front yet. And even though we've had a couple of deals, there's still quite a few more to go. So I think the earnings season will really tell us what we need to think about when we hear from the management. And look, on the earnings, I believe a colleague of mine was saying this the other day. It seems to be like investors are seeing the
Let's
tariff
see,
trade as more
2:30.
an idiosyncratic company-specific story, not a beta story for the broad market. So we'll see if that's true.
Yeah, I mean.
Oh wow, look at the move. Look at the move in Coinbase at 2:30. Started to go.
I think it's a pretty low bar to beat. So I think we're pretty optimistic that the market will be able to beat those expectations, but we'll have to see.
What do you think about a group like the financials, for example? Can you go down in? It's been look, J.P. Morgan, Goldman Sachs, your firm trading at record highs. Can you go down the cap space in the banks? Do you think as part of your small mid cap area to expect better things from?
Well, look, I'm not a small cap bank expert here, but I would say.
But you can't get the small caps to work without the banks. It's the largest part of the small cap.
Right,
world.
I agree with you. I think there's look. The bank trade is interesting, by the way, not just in the U.S. It's interesting in other places too, and I think there's certainly tailwinds behind that. I think there's a lot of other places to look. By the way, that might have been overlooked by the market where people need to start taking a broader look. One thing I'd like to start investors thinking about pivoting to, by the way, is taking a quantitative approach to looking at these markets. It's really hard to synthesize all these data, particularly in small caps, which are undercovered. On a global and a local basis, thinking about a quantitative lens for those investments can help you get some scale.
Alternatives, private credit is on your list. And frankly, we haven't talked that much about private credit lately. I feel like it's all we talked about, and then we didn't, and here we are still getting suggestions. What about it?
Private credit is an all-weather strategy, and I think that's something I've really been trying to communicate to my clients. And a lot of folks thought in a rising rate environment,
This is something else. Holy smokes. Oh man.
That's better for the borrowers and repayment rate. What I think is
Nice.
happening on the client side for us,
Nice,
they're
nice,
migrating
nice.
from the 1.0, the direct lending, to more sort of niche sectors in private credit. Would anticipate we'd start to see a broadening out of
Apple's still going.
some real estate debt potentially. For example, we were seeing a lot of interest in asset backed. So I think that should continue.
Beautiful, beautiful. Okay, Apple.
Goldman Sachs up next. We're tracking the biggest movers into this close today. Christina Martinello is standing by. What's at the top of your list?
Well, we have a pharmaceutical giant dropping billions of dollars on a respiratory drug maker to beat a looming patent cliff. And clean energy stocks surged on federal tax incentive payments. We'll have those details.
Apple into the close. Beautiful. What a gorgeous way to finish the day. Okay, 15 minutes, 18 minutes to go, 18 minutes to go. Gorgeous. Do. Apple's going there. Nice move on Apple. Okay, looking good. Apple. Bitcoin is just gone ballistic. Look at Bitcoin. Bitcoin, gee willikers. My dad used to say that, gee willikers. I wonder what a gee williker is anyway. Look at shit. Look at Bitcoin. Oh, Lord have mercy. Oh, that's so funny. Okay. Holy Toledo. That's pretty funny. Bitcoin. I think the shorts are covering. Wow. Just wow. Okay. Looking good. Bitcoin.
Up in the bell. Back to Christina now for the stocks that she is watching. Please tell us.
Verona Pharma shares are soaring right now after Merck agreed to buy the UK drug maker in a $10 billion deal. The move really aims to strengthen Merck's respiratory treatments as part of a push to reduce dependence on its cancer drug, Keytruda. U.S. listed shares of Verona, you can see, are up 20%. Merck is up just 3%, still higher. Bloom Energy shares also in the green on an upgrade to overweight from neutral at JP Morgan. They raised their price target on the stock to $33 from 18, so quite a dramatic increase. Analysts say that companies should benefit from tax credits for fuel cells and President Trump's sweeping tax and spending plan, and that is why you are seeing shares up almost 18%. So a lot of green. Scott.
Christina, thank you very much. Christina Partsinevelos is still ahead. We get set up for Costco numbers. They're out in OT. The bell is coming right back.
Oh boy. Okay. Looking good. Bitcoin. Wow. What's going on with Bitcoin? Wow. Wow, 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 wow. Bitcoin. Man, what the hell is going on here? Let me just look at the news real quick. Bitcoin. Okay, 9 minutes ago. Institutional adoption for Bitcoin as treasury asset is off the roof, and here's exactly why. Whatever that means, off the roof. Wow. Up 3,000 points, Bitcoin. Jeez. Let me send this to my son. It's going to make him mad. Antoine. Let's see, Antoine, where are you? Where are you, buddy? Oh. Okay. All right, nice close, not coming into the close. Looking good. Okay, we've got 11 minutes to go. 11 minutes to go. All right, there goes Apple. Still going. Bitcoin's still going. Lord have mercy. Wow. Wow, wow, wow. That's crazy. Okay. Bitcoin. Whoa. IBIT. What's IBIT doing? I've been sitting on IBIT too for a while. IBIT. That was a big move on IBIT. Okay. Have September calls for IBIT. Meta just off the highs of the session. Okay, looking for a follow-through day tomorrow. Bitcoin clocking the bears with a trout to the side of the face. Wow, I can't get over that move. That's beautiful. That is beautiful. Lord, Lord, Lord. Okay, Apple's still going. Apple's still going. Bitcoin has just gone stratospheric with 8 minutes to go. 8 minutes to go. Let's see. 8 minutes to go.
Or when we did see about a 20% pullback into Liberation Day before we V-shaped from there. So we just think valuation is why small caps look so attractive.
So Amy, I want to get you in here. So Sandy said, listen, small caps are going to have their day in the sun. Amy, what do you see?
Yeah, I would say this is a key question for investors we talk to because small caps, for traders, it's not necessarily just about fundamentals. It's about how they bake into factors. So when you think about small caps, we use IWM as a proxy. But this idea of when we're going to get the rotation from growth into value or from value, from momentum, which had been outperforming. You're starting to see signs of that, but two major indicators I'd look at. One is how much call volume demand you see in IWM, which again is that proxy for small caps. And two, if you see a sustained reversion in that rotation between small cap with IWM as the proxy and Qs as the growth factor.
Okay, Apple's still going. Jeez. Bitcoin, literally off the screen there, Bitcoin. Wow. Wow, 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 wow.
Yeah, that's going to be a tougher environment. That's what we're in now.
Okay, Google looking for that to push back. Apple's still going here. Apple, thank you so much.
Stubbornly high. So we need to see, probably the job market fall apart a little bit. And we need to see rates come down for small caps to finally get the wind in their back. But again, we just need a rotation in sentiment from large cap growth to value or small cap, and I think that could also play out even if rates kind of stay flat.
So let's get some names here.
Apple just selling some into strength. Oh, Bitcoin. Oh man. Ho ho ho. Jeez.
Pretty good day today. We're finishing stronger than we started.
Yeah, just a little bit of a low midday and then sort of reloaded. Yesterday was that day when the big stuff took a break. You had pullbacks in all the high momentum mega cap names. The majority of stocks were up today. The cleanup hitters are back, and they're actually putting you on the board. It's bull market activity. It's sort of comfortable rotation, hanging around the highs. Most of the atmospheric conditions, I would say, are favorable. The thing I would look toward is, has a name like NVIDIA given you more, as much as you can expect in the near term? I was looking back to last year. It was a 75% gain until it broke out, went to the move to 135 over 2 or 3 months. Then it went sideways for a while. This time, same type of percentage move in a couple of months. I'm not saying it has to flatten out from here, but you have to ask the question. So Mag 7 has been doing its part, but I think dispersion remains the story. Of the Mag 7, they range from up 25% year to date to down 25%. 3 are up, 3 are down, 1 is flat. So basically,
I like Mike Santoli. This guy is really good. No BS. He's not cocky. Very humble. Just tells you what the data says. No opinion. He doesn't criticize other people like Wapner does. I'm beginning to think Wapner is just his attitude. That's the way he is. Okay. We're starting to see some profit taking in Bitcoin. Bitcoin's up above 110, 111, 111,000. Got a couple of points to go. 112, he hit 112, so we've been to 112 before.
Mortgage rates coming down after rising for the last 4 business days. The average on the 30-year fix dropped a bit this morning to 6.77%.
What's that saying that, the markets have 5 or 10 days that do something really unusual as it applies to Bitcoin in this case? If you missed today's move in Bitcoin, that's a huge move. We've had a couple of these in the last few weeks. That big one right there, the reversal off that lower trend line back in the 3rd week of June, 2nd week of June. Man, that was a nice move too. Coinbase still going. Okay, good way to finish up the day. With 3 minutes to go, 3 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Coming into Market on Close. Market on Close for this Wednesday, the 9th of July. 3 minutes to go, 3 minutes to go.
Shares don't typically shift much on the news, but at least it gives investors a little snapshot of the cadence as the quarter is progressing. Now, Costco is up about 6% year to date versus flat for the retail ETF, the XRT, over at that same time. And right now, Costco is having its members savings day to compete with Amazon's Prime Day. Costco's electronics discounts among the deals most likely to attract shoppers. At least that's what I've seen in some of my research. Now, the Wholesale Club has been a very steady retailer, turning in positive quarterly comps for at least 12 years running. That's as far back as my data goes. Last quarter comps grew 6%. So again, looking at another positive month going forward. And while it attracts a higher income shopper, it does also drive more shopper interest during what we might consider tougher
Apple ripping there. Apple still going.
position that a warehouse club brings. Even if you do
Beautiful, beautiful.
to enter the store.
I'm starting to feel a little giddy. I will say, I'm very honest with you. I'm feeling a little giddy right now.
Yeah, up near 14% year to date, trouncing everybody else.
Yeah, it's true. And there's some pretty decent themes inside of that. It's not just, oh, global economy looks okay. We talk about the power theme, GE Vernova at top of the list every time you look. Uber, we talk about that too. That's broken out to big
Whoa.
at this point. And even
Apple, beautiful.
started to firm up. I think that is something interesting to look. You look across the global indexes, and cyclicals have been bid pretty well. I mean, you know,
Amgen.
try to say it's because we're anticipating rate pressure. You're going to get a real
All right. So I promise I'm not going to hyperventilate. Just I'm feeling very giddy right now. I know whenever I start feeling this way, it's time to start taking some profits off, because it never fails. The next day or the day thereafter, you know, what you could have done and what you did are two different things. Okay, so what do I want to take off here? Super Micro looking good. Okay, that's a long-term play, Super Micro. I have a nice position in Super Micro, SMCI, and SMCL. Looking for this to go. Okay.
Pretty much to a point where the perceived certainty about all the fundamentals and all the policy questions, you know, gets to an extreme, and that just means you're vulnerable to some downside.
And that's a wrap.
Looks like part of classic late cycle activity where you start,
And as Paul Harvey would say, and now you know the rest of the story. Have a good evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. Straight up, 4 o'clock p.m., Wednesday the 9th. Been a good evening, especially the last hour or so. Bitcoin turned at 230 and just ripped higher, ripped the shorts to shreds. Hope you had a good evening as well. Take care. We'll see you tomorrow. Ciao.